coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Woo! Taco Tuesday.
What's that?
Taco Tuesday.
Taco Tuesday, yes.
As they all are.
He won't be here. He leaves
That's
at
true.
10:05. Oh, no, you have your
No, I got
podcast
option
today.
trades today, 11:05.
He leaves at 10:35.
11:05. Yes.
You're not going to eat lunch, though.
No. I'm sans lunch these days. I'm a protein shake in the morning.
Intermittent fasting now.
Wait. So you only have a protein shake in the morning and then you don't eat lunch and then you just eat a sensible dinner?
That's correct. Yeah. Yeah, pretty much.
But you're not getting enough protein, though, then.
Well, I do. I'll like in between. I'll snack on like like a Slim Jim type thing, a no sugar one kind of thing.
There's not sugar in Slim. Okay.
No. They have no sugar ones. Like,
There's not normally a lot of sugar in beef jerky.
And the jerky and the...
Unless it's like a teriyaki, like a normal dried
No,
meat.
I do a no sugar. I do a no sugar one.
Yeah.
And then I'll do like I call them power bars. My wife makes fun of me because they're not called power
they're not
bars.
called power bars, not since the 90s.
Is that still around? The
Power bars?
Yeah.
I don't know if the company Power Bar is, but we do that kind of thing.
Yeah.
That's what
Those are pretty gross.
Yeah.
Those were pretty
Back in the
gross.
day, they were.
But that was like a staple of soccer practice was orange slices and power bars. Now I can taste that combination too, which was
Were they
just
giving them to
awful.
kids?
Yeah, like for like football and like the moms would come with orange slices with
I
like
remember the
sugar on
orange
the
slices.
Whoa. We never had orange slices at any of my football games or practice.
I think we did.
No.
Not at practices, at the games.
No. Soccer, that's what the
Soccer
moms
maybe,
did.
yeah.
That's what
You're
the moms
right.
did.
You're right.
Football,
No.
no. Don't put
Maybe it was
a gray
just
cloud
soccer.
over my football career.
Yeah. But then it was with the power bars, and the power bars were like it was almost the consistency of like a fruit roll up, but it was this big. So
It was thick.
Yeah, like afterwards your like jaw hurt
Sure.
and like the taste was just gross. They had like cookies and cream one that was just like it was just like gnawing on like just like gooey, chewy. It was just
bad.
It was not good.
Yeah.
So
It was bad.
but I remember
I thought you were going to be talking about the baseball game first out. Like you must have stayed up late to watch that game.
I didn't. I couldn't get a word in, so I didn't say anything. But a historic game went 18 innings, 6.5 hours. Dodgers winning it with a walk-off home run. That's fun. I didn't watch any of it. I heard about it on NPR, like the good nerd that I am.
I got a buddy of mine from Canada who's now become a big Toronto fan. So
Sure.
So every time they score, he texts me, calls me, writes me. I was like, I shut off my phone after a little while because I
What
didn't
is
want
this series right now? Because I'm not following.
2-1 Dodgers.
Oh, okay.
That was the third game last night.
Right.
And the Dodgers won, like you said, in 18 innings.
Wow.
And I don't know what time it ended here in Chicago. It had to be like 1:30 in the morning.
something like that.
I don't know.
I was not up for it.
Real salute to all the people who went to the game and had to go to work this morning.
The East Coast dads.
Yeah, the East Coast dads. Shout out to you, East Coast dads.
Shout out to the East Coast dads taking today off from work, no doubt.
Today you're right. New York will have
Or even Toronto
higher than
fans.
normal late start or something like that.
Or even Toronto fans, because that's what time zone is Toronto in? Is that Central or Eastern?
Probably Central.
I don't know.
imagine.
I don't know,
It's right
again.
above us. I mean.
But it's still late, like if you live in
Oh yeah.
that
Sure.
part of Canada.
Yeah. Do they work in Canada? Doesn't matter.
Do not start. Canada's had enough of our nonsense. Don't start.
It's an hour later, 8:04. You're right.
Yeah.
You're on Eastern already.
Yeah. Because I wasn't sure, because it's like, right, kind of, anyway. You know where Toronto is.
Oof. Ugh.
But you were watching football last night, Nikki.
Yeah, a little bit.
Who did the Chiefs win?
Yeah, of course.
They did?
Yeah.
When I saw it was tied when I saw.
Yeah, the
'Cause
Chiefs
I was
are-
just looking for photos of Tay, and then I didn't see
Tay
any.
Tay.
Then I didn't see any, and then I went to bed.
Against the Commanders, it should have been a good game.
No, Jaden Daniels was out.
Oh.
Yeah, but Sam Hartman with his fine ass, he was there. I saw him.
I don't think he played. Maybe he played in the fourth quarter, but
I don't know, but I saw him walk in with a suit jacket with no shirt on underneath, and then I ovulated.
wow.
Sweet.
Who was their QB?
Mariota.
Oh, Mariota.
Marcus
Yeah, I know him.
Mariota.
Yeah.
Yeah, he's in solid backup, but I mean, the Chiefs have looked like the Chiefs.
Sure.
You know, they the first couple games of the year didn't look like the Chiefs.
No.
Now they look
Then
like the
Taylor
right.
Swift dropped Wood, and
Yeah,
Kelsey's having his.
and everybody
best
was
game
like,
ever.
Not
damn.
Wood, or she dropped Wood? What did she do with this?
Both.
No, it's a song. It's
Yeah.
an
I know.
homage to Travis.
I
Yes.
heard.
Yeah.
And he's been playing Lights Out.
I haven't actually heard the song. We should play it, John. See if we can play
It's
Wood.
good. You can
Yeah.
play it. It's
No. Tay would have us instantly banned from YouTube. I am sure.
That's right. We don't have the
emoji.
license.
Yeah, we would get a strike.
We would get a strike. They have
Emoji.
that. We would play one chord of that song, and we would be instantly dark.
I can sing it for you.
Yes, they know.
No, I'm not. I'm just kidding.
Yeah, that would be fun.
Oh, that's funny. Tracy, who works here, not the marketing Tracy, but email Tracy, she just sent me a Teams message. She said, Sam Hartman, heart emoji, heart emoji, heart emoji. I got you, girl.
Hey, backup QBs. I mean, he's third string, so he's in the perfect spot.
So Book Talk discovered Sam Hartman, and they made all these like thirst videos because they want him, like when women visualize characters of books, like a lot of times they'll visualize Sam Hartman because he has that male main character energy. So that's
I gotta
why.
look up what this guy looks like.
He played for Notre Dame. That's how I know him.
Oh,
but
gotcha.
he is just
Yeah.
perfection.
He ain't no NPC,
Right.
as the kids would say.
Right. He ain't no.
He's main character energy.
right. Yeah. He's a Giga Chad.
Giga.
Oh, he's
Yeah.
got a girlfriend, a wife, or whatever.
Of course he
Has
does.
that ever stopped you from lusting over someone that's
Not
60
many of the
young?
years.
Right,
Not
yeah,
many of the
okay.
years. No.
Like
no.
I'm not. I don't actually.
Yeah, you're right. You're right.
Yeah.
I stand corrected.
I just appreciate. He's a beautiful man. I don't know how we got on this subject, but Nikki, what'd
handsome
you
young
do
man.
last?
Nice couple.
What'd you do last night?
I wish
That was it. Watch some
That was
football. Yeah, just
About-
scalped out of your
fantasy?
gold at a nice.
yeah.
You got
I was
lucky.
sitting
there?
on the couch watching the football game, and I opened up my Tasty platform, and I saw gold was up like 10 or 11 handles
And it had-
after taking like 35 handles of heat on it, and then I just closed.
Do you talk about trading to your girlfriend? Are you like, hey, I'm really mad because I couldn't scalp out of this, and that's why I'm crazy.
It was 8:23 at night, Central Standard Time.
Yes,
Just
it's
listen.
posted. I posted it.
Oh no, I know. I
Yeah,
just
yeah.
put up there on the follow page. So
Yeah.
people could see.
Hardest working man in showbiz. 8 o'clock,
Day and night,
scalping
night and
gold
day.
futures.
Hey, when you trade futures, it is 24 hours.
I know.
It
I usually don't like to hold them overnight.
didn't work,
But
right? I mean, that's why you held it. It
Well, yeah.
hadn't worked. I mean,
it hadn't worked.
Right.
Yeah,
right.
and-
Small
yeah.
enough
and it was
trade.
small enough to where I could, but it'd be painful today. No, my girlfriend has asked me multiple times. She's like, "Will you do like we host like a finance talk with my friends? That would be great."
Oh, that's awesome.
I absolutely refuse.
Why?
He has Gina already. He doesn't.
I have tried to do this. I don't think like friends is kind of okay-ish
Okay.
as long as they're a peripheral.
Okay.
Like you don't like
Not inner circle.
yeah,
You
inner
can't lose
circle
them.
because like they're too they have access to you. So like I have to manage or I helped my sister with some of her things.
Oh.
And now it's
That's too close to home.
too close to home because they can like
So
text
the
you and
trauma
call
of
you
that incident.
and like they have instant access
Disown
to
you.
you. Yeah, like every day it's like
Call yourself my brother.
it's down today. What do I do? And I'm like, just sit, just relax.
Aw.
And yeah, so
It's made your relationship
So
stronger.
you just want to be all about the technical aspects of it. You don't want any of the emotional handholding.
yeah.
You don't want any of the responsibility. is
Right.
what you
Yeah.
want. You
Right.
want the
Yes.
responsibility on the person who's making the
Yeah, because I do my stuff. I got my own.
I think his friends, they were the same age. Like, I think they would understand. They're like, this
Yes.
is just guidance. This isn't,
Yeah, I mean,
Gospel.
I share my thoughts.
Right.
Yes. But
Right.
when you
And
get
ramblings.
when you get past that, where you're like,
All right, what exactly
directly-
should I do now?
yeah, when you're like in their, like I was in my sister's account, putting
That's
her
your
in
sister.
things.
That's your sister.
I know, but then you're like,
Anybody can do that as long as they have the permissioning on the.
yeah.
Anybody can do
Yeah.
that.
So now, but it's not fun when you're having a bad day that's a multiple of what your sister's having, and she's texting you, I'm down $100. What'd you do? And I'm like over here, like,
Sucking wind,
yeah. And I'm like, I don't.
questioning life.
Your lunch money is of no consequence to what I am
attitude.
doing.
That's no attitude to have. Everybody's
No.
money's the same.
No. Well,
But I get that. I mean, there's a middle
Show some
ground.
compassion, son.
No.
Maybe there's a middle ground where you just give like a high level
that's what we have
talk.
done.
Right,
No.
to your friends. No,
Yeah.
to your girlfriend's
Oh.
friend. Like, it's more just high level, just general theory,
Yes.
not actual.
Maybe. Maybe.
Okay.
Yeah. It's a zero upside thing because,
Why don't you guys have a better relationship? Let him manage your money for you now, Vanetta. Why don't you do that?
yeah, right?
I wouldn't put that stress on it because I would stress him out. Like,
I'm
that's
just
not.
teasing.
Yeah, no one wins in that.
No, nobody does
instance
win.
there. Yeah. All right.
What about you? What'd you do last night since you didn't watch the game? You're obviously not trading Nick's money. What
No.
did you do?
I went for a walk.
Went for nice.
Went for a walk. Yeah.
Nice night.
Yeah. It wasn't bad.
Yeah.
I
Good night.
was like, yeah, I'm gonna get my rest of my steps in because when I left the office, my steps were kind of low, and I was like, I gotta get more steps, and so went
Very
for a nice walk around my neighborhood, which is very cutely decorated for
Oh, this
Halloween.
is the season. Yeah, you only
Yeah.
got a couple more days, but then you got like
Yeah.
a week or two afterwards. Everybody still keeps their stuff up,
Yeah.
And you gotta go right.
I'm
in.
surprised you guys didn't do anything in here. We didn't get any. Where's
Oh,
our
we don't
decor?
have holidays.
Well, they were planning for the party for me lord, and so that it took up all their time. No, because I delicately I was like, what? Because the other day I got on the elevator and we stopped at the floor below us. It's like Dyson, and it looks really nice. It looks like really cool. Because we don't have access to the other
Yeah,
floors in
no.
this building. The building knows where you need to go. And,
Right,
and
the
it
elevator
takes you
goes
there, right.
automatic. There's no.
But-
Have you gotten used to that yet? Now, do you still go into the elevator looking to push the button?
No,
Yeah.
There are no
because
buttons. I do.
The
too.
old Tasty Works building was like that.
Yeah,
too, so.
I know, but I can't get used to it.
Yeah.
I still go in trying to look at.
You could just get off at the Dyson floor.
Yeah,
No,
you could,
because
yeah.
I have the opposite problem. Because when I get into the parking garage elevator,
you don't press anything?
Right, the lady's like, "Please select a button, dummy," and I'm like, "Oh my bad." I was like, "You didn't know where I parked." But yes, the Dyson below us is really cool because
Great
it's
vacuum,
easy,
by the way,
It's
if you
easy
need
for
one.
them to just vacuum up all the decorations when they're done. No,
Yeah.
okay, that was a joke.
Yeah.
Hey, we got a great show for you today. It's a tough room. It's a terrific Tuesday here at Tasty Live, and the top of the 8 o'clock hour, we have an options jive: gamma, theta, and DTE. No, you're not pledging. These are the Greeks, and we're going to talk about gamma and theta and days to expiration. See what I did there?
You are
That was
correct.
good.
Did you rush? Were you in a fraternity, Nikki?
No.
Yeah.
No. GDI.
Yeah.
I had a group
GDI.
of buddies.
Yeah.
I lived
same.
with.
I have a problem with authority.
Yeah.
But that's going to be your options jive at 8 o'clock. Then another options jive, 2 for the price of 1 at 8:40. The hidden benefits of Jade lizards.
That's right. Liz is-
Shout out Liz and Jenny.
Wow. Okay. I
You know, Tony from Mexico says he owns that. He's got the email to prove it too.
Jade Lizard. Did he squat on it? Like, or did he like put like steal a website or something?
No.
Is that why? Is he like? He's like, no. Actually,
I mean, but if you're going to have a face of a franchise, no offense to
Yeah.
Tony from Mexico, but I'm going to take a lovely set of ladies.
You're okay. Can't hear you. He's celebrating his anniversary right now. You're
Aw.
okay. Yes.
Feliz cumpleaños. That's all I know how to say in
Me
Spanish.
too.
So
I couldn't even say it that well.
All right. Well, hidden benefits at Jade Lizards at 8 o'clock, and then market measures 9 o'clock. Holiday euphoria. What really happens? What holiday? Because we're the month.
The holidays.
I was gonna
Yeah,
say it was like
yeah.
there's a holiday
All
every
inclusive.
month. Okay.
The back half of the year.
Yeah. The Burr months.
Yeah. Mm-hmm. Yes.
Gotcha.
It'll be good.
And then live from the trade desk today, we got Quentin and Glenn G
Tasty
Money.
FX.
Yes, from Tasty FX.
Yes.
Quentin and Glenn will be in. Quentin recapping all the top trending tickers over at Tasty Trade, and Glenn giving us some insights onto the Tasty FX side of business, which is great. And Liz and Jenny are live from the floor of the SIBO. It's always electric when the ladies are live from the floor. And soon to be joining them, filmed a fun bit. Jamal and Mikey, starting every Thursday, starting next Thursday, November 6th, they will also start to broadcast live from the SIBO. So
Amazing.
that is very exciting.
Looking
It's just a
looking
different
forward to it.
atmosphere.
Yeah.
Jenny just texted me. She said, check the tape. We did one on Facebook on air before. Tony from Mexico sent the email to Tom about the idea.
Boom. Boom. Jenny's got the receipts.
I love it.
Screenshots.
Sorry, ladies.
Yeah.
I apologize.
Online.
I apologize.
Jeez.
Look, I would not want to make Jenny upset.
No,
I'm
no.
just saying, it's a thing. Hey,
Good. I love the
tomorrow.
competitive nature.
Yeah.
Tomorrow is Wednesday, and we need your trade ideas for what's your assumption. So if you have an underlying with a directional bias that you would like to present your trade idea, we'd love to hear from you.
Yes.
And we're on Reddit, so check us out at r/tastylive if you are part of the Reddit community. You can also submit your ideas on Reddit. But that is our run of show for today. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news,
Today's
coming across the wire. Our leading story,
just in.
top story, jump in.
In today's headlines,
This just in.
Breaking
Oh,
news. Story.
All right, everybody. Today is a terrific Tuesday. It is October the 28th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
I don't think you guys are fully appreciating this sartorial moment. I just want to show you the back of this dress.
Oh, I thought you got a tattoo, like a tramp stamp or something. Oh, very
I'm
pretty.
not a tattoo person. No, I'm a skeleton.
Yeah.
Yeah, it's very nice. Yeah,
Back.
yeah.
Oh, I got it now.
Wow.
It's a skeleton.
Oh,
this
you're
is
doing
vintage
this.
Hot Topic. So,
Wow.
I like it.
yes. Anyway, earnings, Mr. Bat, for
I
today.
mean, it's not the ones you're going to want to look at.
Okay.
That'll be coming tomorrow after the close and before the market opening the following day. But you got Visa, Boeing, Caterpillar, EA, ENPH.
Yeah, these are crap.
Yeah, they're not the best. You had UNH last night. I know you'll talk about some of these.
A freaking
PayPal.
Bloom Energy.
Oh, I didn't have that one. No, go
Yeah.
ahead.
BE is in there.
Yeah.
Yep.
Yeah.
Oh, for tonight or for
Yeah, for today.
today?
Yeah, after the market closes.
Oh, okay.
Yeah, this morning it was SoFi, UNH, PayPal, UPS, Royal Caribbean.
They're all up except Royal Caribbean, which I think is down about 25 or something like that. Last time
Yeah.
I saw it.
Interesting. 43% of the S&P reports their earnings this week. So
Wow,
it's
that's a lot.
It's a big one.
Hey, first headline: CarMax is leaving the S&P 500. Oh no, KMX. They just couldn't cut it in the big leagues. So they are getting taken over by Solstice Advanced Materials. I guess it's a spinoff from Honeywell, HON.
Oh, yeah.
And so Solstice, SOLSV. I was like, those are a lot of letters, but working out. But it's going into the S&P. KMX is coming out.
I'm surprised because CarMax. I mean, I know CarMax is down on its butt, $45 or.
I think I was thinking of Carvana.
Carvana, I don't think.
I think that's what I did too. I conflated the two. I was like, that seems odd, but maybe.
No, I mean, I think CarMax was brought out, and I'm sure BlackRock still owns a good piece of it and stuff like that. I figured they would have the influence that they would never let them get out of it. Anyway.
Oh yeah, I was just mixing up CarMax and Carvana, like in.
No, Carvana's doing real good.
Right,
CarMax not doing quite as good.
Yeah. I'm not sure what Honeywell's doing. I don't have to trade.
Oh, Honeywell.
I think
HON.
they actually.
Hun. What can I get you, hun?
I think they had earnings the other day, like middle of last week.
Looks unchanged at 215, and
Okay.
not something we normally trade.
I know.
November options
Yeah.
are about 30, 40 cents wide. Not a lot of volume there.
Interesting. Hey, the annual 2026 gold price forecast tops $4,000 an ounce for the first time ever. Analysts think gold's winning streak is going to extend into next year, and they forecasted the annual average price for gold for 2026 to be
Yeah, this is the headlines.
If this would have
42.75 is the
Yeah.
average there.
if it
they're
would have
trying to
came
get
last
out.
week, it would have been 6,000.
Yeah.
because they would have
Yeah.
they would have just added. Let's just put like 25%
Pick a number.
above whatever the current number is.
Now it's had a little bit of
Yeah,
fall from greatness under 4,000 now, 39.41. It flirted being under 3,900, down just about 2% today.
Okay. And then you sold your micro gold. Are you going to get back in?
yeah. I was thinking about it.
Redeploy that capital, those winnings?
Yeah, think
Okay.
we get a little bit more from here. You think we get a little bit more?
Probably going to get a little. I think it's going to get a little bit weaker. I mean, I don't know.
No.
I don't know.
All right.
We'll see. I mean, it's had a 10-day slide here from 4,400 to under 4,000. So we'll see.
In other news,
Faded.
Good for you. Good for you.
We'll do one here. We'll see what
Yeah,
what
yeah,
happens.
yeah.
If we go a little lower on the open, we'll add another one.
I mean, it looks good. You sold it at 4,027. You know,
Yeah.
you're buying it back at 39.40.
What was the overnight low? Was like 3,900 on the dot.
Yes.
So
yes.
maybe we get down there.
Scoopy.
Yeah.
In other metal forecasts, analysts have hiked their price forecast for copper for next year after a series of mine disruptions fueled worries about shortages and market deficits. Copper used in power and construction has gained 25% so far this year. The copper contract should average 10,500 per metric ton in 2026. There's not a great way to trade copper, but FCX
Yeah.
maybe.
HG is a big contract, and that move when the
Back in the summer in July or whatever.
I think that was yeah.
Yeah.
Where you had the tariff on, and copper was limit down
It's like
3 times in a row.
Oh,
I'm like,
no.
yeah.
it went from like around 6. Well, it went limit up early part of July,
Yeah.
which was like the first part of the tariffs, where it went from like 5 to 6. And then it went
It's
limit
a $10,000 move, by the way, I believe, from 5 to 6. Just
for the 1 point.
Point.
Yeah,
Yeah.
for the full point. And then we went from, 6 down to 4.
yeah.
We went 5 to 6, 6 to 4.
It's not for the faint of
Not a
No.
There's not a small micro or mini to trade in here.
Yeah. And margin requirements exploded too because vol
you
was
got to
like
have
through
conviction
yeah.
to trade this. I don't have that kind of.
Yeah.
But sometimes like a Freeport,
Yes, FCX
That's
should
right,
do something like
FCX,
that.
yeah.
Yeah, good proxy for that. Then the world is
Yeah.
your oyster. Agreed. Good call.
okay. Hey, in other news, it looks like despite the government shutdown, Canary Capital plans to launch the first U.S. ETF tied to Litecoin and Hedera cryptocurrencies. Who asked for this? Separately, Bitwise Asset Management said they will launch their own crypto ETF tied to Solana today.
The Tasty Crypto team had
That's why you got Tasty FX. Now you're representing Tasty Crypto. Go ahead.
yeah, but they had a interview with one of the guys from what's the ticker?
I know, I was going to
think
look
it-
it up. I tweeted it out.
I think it's Ford.
Yes.
Forward Industries, which is they're doing like basically a Solana treasury,
Yes.
as you've seen with like ETH and MicroStrategy.
Yes,
Bitcoin.
Kyle Samani
Yes.
was on the show. Yes, you can check it out.
so-
We reposted it if you follow us on Twitter. So,
So-
reposted the whole interview.
Of course, the Tasty team was first.
Yes, but what are your thoughts on altcoins, or what are you doing in Bitcoin? We'll start with that first, I guess.
Bitcoin 114, just under 115, 114.8 or so. It's taken back about 50% of its move, just under 50% from around 127 down to around 106 or so. Now we're 114, 115, sitting there steady. It's lost a little bit of its oomph even in October. I think the market was October instead of Bitcoin.
Instead of crypto, it didn't get
Yeah.
the memo?
I think it's one. IBIT and ETH are 2 of the best trading vehicles
To
out
trade.
there with volatility, with moves.
Interesting.
I bet options get a little wide and trade by appointment, but the stock itself at $18 or well, I bet 65. But I mean, like if you're looking, I was looking at BITO. I'm sorry, I meant BITO.
Yeah, BITO is not. You can't trade that.
Yeah, BITO is tough. Yeah, I bet much better. Yes,
yeah.
you're right. I apologize.
And if you're in a cash or an IRA account or even like a Reg T margin, just buy the wings and you can do, the 10-point wide or 15-point wide iron condors and IBIT are, about as, from a volatility standpoint, like.
I misspoke. I was thinking BITO. That's
BITO, you can't do
stock.
anything.
IBIT,
Yeah,
much better.
yeah.
Hey, well, here's something interesting. There's a financial instrument that does 160 billion in daily trading volume. That's 3 times Bitcoin. It's called perpetual futures. I had to look this up. It's a financial derivative contract that allows people to speculate on the price of an asset like Bitcoin, but they don't have expiration dates. I didn't know if you guys were aware of these. What were your thoughts? What were your takeaways?
Yeah.
Why would someone do a perpetual future?
Well, you can also do it. So you could do it leveraged.
Yes.
But you can also do it with any amount of capital. So that's kind of the it basically tracks the price. You're not actually trading, like when you buy a share of Apple, you own a share of Apple. When you're trading a perp, it's just pegged to whatever the price of that asset is. And you could bet, let's say, $1,000 or whatever your number is, $100, $10, $5, whatever. When you hit that loss, you're stopped out. So you lose. And you have, you participate in whichever direction you want. You could be long or short.
Right.
At whatever dollar amount. So,
There's not a way to like hedge it or to
No.
Like,
It's almost like
it's up, down. It's binary.
Sure.
But
Yeah.
but it continuously goes. So like
there's no rolling of the future. There's no cost to carry of the future. But it's
yes.
It's only as good as the counterparty. It's kind of
Yeah. So if you had like, let's say like if you're doing Bitcoin, so Bitcoin's at we'll just call it 100,000 just to make it a round number, and you have $1,000. You could do a 1x, basically 1-to-1 with $1,000 and participate in the upside. But if Bitcoin goes down $1,000, you lose it all. You're out.
Right.
If you do it, then this is where the problem comes in for most people, is because if you have $1,000, you usually do it at 10x leverage.
Yes.
Right.
So if Bitcoin goes down $100, you lose your $1,000, but you can participate in the upside. So a lot of people, as with all things leveraged, get a little overzealous.
Sure. You can get a little too big for your britches. Yes. Well, Coinbase got a CFTC approval last July because it was previously unavailable for American retail investors. So I guess now that's the new financial frontier. It's just new ways to lose your money.
Yes.
Coin
and you can also
361
collateralize
or
it.
so.
What is Coin doing? I'm sorry.
361 basically unchanged.
Okay.
Maybe down $1.50.
And you can collateralize it yourself.
So like instead of it being cash, if you own a Bitcoin, you can like stake a Bitcoin as collateral in the perp, because like it's like almost like
and then you lose it like at a pawn shop? What?
yeah, I mean it's almost like owning stock and
Lending it out kind of thing,
yeah,
but not
exactly.
lending it out.
Okay.
Like you can
Interesting. Hey, OpenAI's spending bonanza has Wall Street focused on CapEx as big tech earnings come into focus this week. Microsoft, Meta, and Alphabet will report their quarterly results on tomorrow, followed by Amazon and Apple on Thursday. And investors are going to be particularly focused on CapEx as they look closely to see how companies are planning and managing their AI investments. Like, eventually, someone's going to want to see some ROI.
Yeah,
because
eventually.
Eventually, I don't know if that's this quarter, but OpenAI, which is privately held, has announced around $1 trillion worth of AI infrastructure build out. Someone said basically our economy is 7 companies just fake giving money to each other. How concerned should we be about these CapEx numbers and the AI bubble?
I mean, it doesn't seem like the market's worried about it, which means you should probably worry about it a little bit, right?
Okay.
Not a ton here. I mean,
Not yet.
Microsoft is laying off X amount of people because of AI. It seems like it's here to kind of stay.
Sure.
So.
They give me an Amazon, but I got
Amazon.
that. Yes,
Sorry.
I got that.
I'm sorry. Yep.
But yeah, it'll be interesting. And like I said, Microsoft, Meta, and Google on deck for earnings tomorrow. Hey, in other news, remember how we were like, hey, IBM.
Tomorrow
After the close. Yeah.
Yeah.
How yesterday we were like, IBM, that stock is so strong and it's so old. But here's another blast from the past. That's Qualcomm. Yes, Qualcomm stock making waves yesterday after they announced AI chips that they are producing can compete with AMD and NVIDIA. The stock soared 11%.
Traded over 200 to 205 before closing at 187. Seems like that's not a good close for it. The previous day it was in the 70s, so 170.
So what is happening?
It was a big day for Qualcomm. Qualcomm looks like it's maybe down $1 or $2 this morning.
Gotta buy those dips in Qualcomm.
Shout out to the young guns. Gus had that on his.
Oh, did he? Good for him.
Yeah.
Is this Young Guns? What is this? Got it.
Qualcomm. What's the IV in Qualcomm? When are
Good,
their earnings?
good at 48 earnings November 5th.
Okay.
Yeah.
All right,
Qualcomm's
so-
in play, definitely. Gonna have a bunch of upside skew.
Qualcomm says the chips will go on sale in the AI 200, catchy name, was going to go on sale in 2026, and the AI 250 is planned for 2027. So there you go. Hey, in other news, the Department of Energy has formed a $1 billion supercomputer and AI partnership with AMD. So the two are merging together to construct two supercomputers that will tackle large scientific problems ranging from nuclear power to cancer treatments to national security.
AMD hanging out at 258. Looks like it's down around $1, but again, everything's off of all-time highs.
Sure. But this is now super, super into the government portfolio.
Yes.
Yeah.
It's a blue chip government portfolio.
Yeah. 410 billion market cap. So a 1 billion, this is a rounding error
Okay.
in terms of like,
To sneeze at, though.
it's not, but I mean,
They do drop billions here and there.
yeah, billions are like,
New
are,
thousands.
yeah, thousands or 1,000,000s. I mean, it's nothing.
As we mentioned earlier, Amazon is announcing the largest layoffs in company history. The layoffs will amount to the largest cuts to Amazon's corporate workforce. It's going to be around 30,000 people across the corporate workforce, around 9 to 10% based on the latest headcount. Amazon's the second largest private employer with 1.54 million staffers globally. Again, this doesn't even consider their plans.
How many globally did you say?
1.54 million.
Okay, so I think I looked it up last night when I saw this article. I think the most they've ever had is 1.6 million.
Yeah.
So they're just off of all-time highs.
Sure.
This is not off of lows or even,
Sure.
In between. I mean, I don't know how to read.
But again, I'm trying to stress that this is the corporate. This isn't going to be like the annihilation of layoffs once
Right.
they use more robots, like for their warehouse worker. So those are the different sides of their business.
Yep. Amazon hanging out at 228 or so. It's actually up $1. Layoffs are usually good for companies. Amazon's sideways at its high end, I guess around 250 or so. 245, 250 is its old all-time high, which it made in February.
As of Monday, according to layoffs.fyi, it's a fun site, there have more than 200 tech companies have laid off 98,000 employees since the start of the year. Another layoff, Chegg, CHGG.
This one's in trouble.
They are slashing 45% of their workforce as the education software company blames the new reality of AI. The 45% comes out to around 388 employees. They're also ending its strategic review process and bringing back Dan Rosenzweig as CEO.
I mean, Chegg was $115, $20 company like 5 years ago when all of the educational websites, and it was $1 or $1.50.
Yeah, it's
last.
Yeah, but why pay for a site when you could just chat GPT it?
I agree.
Yeah.
This is just a business that just never pivoted, and just the model just kind of blowed up.
Went public in 2013 and saw their stock hit a high of 113.51, like you said, in February of 2021, boosted by the pandemic.
Yeah.
Yeah, I mean, it's a $150 million company right now. I mean, you just talked
You
about
should buy it.
I shouldn't buy it. Amazon should buy it. They should say, and we bought Chegg just to throw it in there.
Yeah, just to spend some money.
Just to spend some money. I mean, spent 150. So instead of $1 billion, it was 1.2.
Yeah.
What's the big deal?
Yeah, whatever.
Rounding error.
Who cares?
Pretty big win for Apple. A federal judge decertified a class action suit by tens of millions of Apple customers who accused the company of monopolizing the market for iPhone apps by banning purchases outside the App Store. A U.S. district judge says the class did not prove their case. So instead of being able to band together to fight Amazon, the judge decertified it. Obviously, huge win for Apple, which has earnings, I believe, Thursday after the close.
You are correct. Apple 268 and change looks unchanged again at all-time high highs.
Tim Apple's been doing a great job with this rehabbing the image of this company.
Love you, Tim Apple.
Love you, Tim Apple.
Love you, Tim Apple.
Love you, Tim Apple. Hate your new power cord for the new Apple phone, which Vinny has. We don't have.
It's just a USB-C.
The USB-C?
Yeah, it's like, it's a different phone charger, isn't it?
Yeah,
I mean,
but it's universal to everything now.
Yeah.
Yeah, but I don't have it in my car. Like, I got to go and buy new.
Yeah, but it works with everything.
Oh, you need to buy a new
God.
USB-A to USB-C.
Yes.
Yeah.
Why don't you just use Bluetooth?
Want to what?
Use Bluetooth.
Yeah, but that
Excuse
cord.
me, yell at me.
Yeah.
Bluetooth.
Yeah, that cord's probably the same one you charge your hearing aids with. So you can take that and
It
just.
is, actually.
I'm sure it is
It
because
is.
it's universal. It's great.
Savage.
The lightning cord was a special cord just for Apple. That was the.
I'm pretty sure that's micro USB though, probably for.
You think so? Oh yeah, because they're
Probably
small.
micro,
Yeah.
No. The case it comes in. Is
Oh, the
that
case,
one.
yeah.
Yeah, the case,
USB-C.
yeah.
There you
See?
go. You're right.
So you're fine.
Hey,
Don't lie.
Hey,
Yeah.
Hey, I don't know what I'm doing.
See if I hear you today.
Hey, Meta.
What?
What? Meta launched yesterday. I'm going to start over. Social media giant Meta launched on Monday posts that are automatically archived 24 hours after being uploaded. Dubbed ghost posts, they now appear on the Threads app. Who asked for this? What are you doing in Meta?
I don't know, but it's up $1.50 or so. 752, not near its highs of like almost 800. Not near its lows of 700. So here's a stock that's kind of mid-range with earnings coming out tomorrow after the close.
Yeah.
So in play here, IV rank of 30. Meta markets are good. I mean, it's a $750 stock.
Yeah.
So
I got long.
it's going to be
yes.
defined risk.
I missed the 20 points higher. We had a put spread. We took that off.
Well, which is nice. I mean,
Yeah.
you can't hit a home run all the time.
But I got long, and I think there's. It's easier to get long this one that's not at, $50 above its previous high.
Yes.
It's kind of range bound
Yes.
relative to where it's been.
Yes, and in the middle of its range.
Yeah.
OpenAI and its leader, Sam Altman, urged the White House to substantially increase U.S. investment in new energy capacity to stay ahead of China in AI. The startup has been planning ambitious, that's a way to put that, infrastructure build-outs that will require massive amounts of power, and it's unclear where all the electricity will come from. And more importantly, who's going to pay for that? OpenAI encouraged the U.S. to commit to building 100 gigawatts of new energy capacity each year. My question to you is, how do you flex this into a trade? Is it just XLU? Is it a specific other energy source? Or because that's what I go to you for, Nikki, is like, what's the way to play this? Like, if he's leaning on the government, he's got it in. He's like, hey, we need 100 gigawatts of power a year. We got to compete with China. We got to do all this stuff. How do I make money off of that?
I mean,
It's a great question, isn't it?
We've been talking about this for 6 months.
I
So,
know.
so it's the move has happened. A lot of these stocks.
Sure.
I know.
But I'm saying if we get like a government commitment to officially level up the power.
XLU is probably the easiest way to not pick a winner.
Okay.
To try and pick one of the bunch. You just
Okay.
gotta get that one,
Sure.
and it's all encompassing. But
XLU does not have good markets.
No.
Not good options.
Well, that sucks.
Yeah.
You can trade the stock 90 some odd dollars, but it does not have good.
I need to get rich off of this information.
You're going to have to wait a little.
Yeah.
You're going to have to wait a little.
Biscuit. All right. Well, I just thought it was interesting, and we will see what happens.
Yeah.
Hey, Tesla board chair Robin Denholm asked shareholders to vote on CEO Elon Musk's nearly $1 trillion pay package, and she said that Musk is the key to the future of the EV maker, and that if his package isn't approved, he may take his ball and go home.
Was this 2020 again? Didn't we go through this once before? Or something
Not
like
$1
that?
trillion.
Not
I think that was
$1
a
trillion.
billion. I think that was $1 billion. I know we're joking, but I
Yes.
think it was $1 billion, which was unheard
Yeah.
of, and now it's $1 trillion. I don't know.
Well, I think it's weighted towards what the company is worth at that point in time.
Sure.
I think it's like, what is it, 5 years out? Like 20,
I don't know
30?
what the parameters are.
I think
for
everything's
figuring
like
it out.
Deal that he had previously. That,
Yeah, but I
know
mean,
there's tranches and
yeah, but if you make the company a $5 trillion company,
What are you worth?
yeah, what
Right.
are you worth?
I mean, I don't know.
And
Yeah.
so it's like,
But is
yeah.
that even still feasible now in this sort of post EV era? I know they're going to get into like robots and maybe like other stuff, but is Tesla's future as bright as it was obviously in like 2020? Like I think that's hard to say.
Did you even know what $1 trillion was in the 90s?
No, I think we called it a gazillion.
Yeah.
Or something like that. We didn't have to.
That's what I'm saying. Is the numbers are just, they get bigger and bigger and bigger and more extreme. So like 5 trillion in 10
No, but
years?
I'm still saying though,
Why not?
but Tesla as a company in 2025 looks very different as Tesla as a company was in 2020.
Yeah,
Yeah,
it's
yeah,
still
yeah.
the most dominant player
Yeah.
in the EV.
But I'm
Still,
saying
that-
we're in
they
a
have power.
post EV era.
Yeah.
Hey, you want power?
Yeah.
Tesla.
Yeah.
That might be your
There you
play.
go. What are you doing in Tesla, the stock?
455 or so, up around $3 with even the S&P's up 8 and change. I think it made its, I don't know, old high back in December of last
Okay.
year or something like that. Pretty close to this, around 480 or something like that. So it's flirting. All-time highs for this year, close to that 475. So it's up there. Definitely up there.
iRobot, IRBT, the stock tumbled 33% yesterday, whoopsie, after the Roomba maker warned the search for a buyer had stalled out. iRobot warned in a securities filing that its search for a suitor has hit a substantial roadblock. Me too, girl. After negotiations fell apart with the last remaining holder.
Do these actually work?
Your dad has like 2 of them.
I love them. Absolutely love them.
How'd you not know that? Why do I know that?
This would be great in your place.
Yeah.
I'm telling you, it's
I sat there and debated it.
You set it and forget it, I guess. I don't
it
have
goes
one.
back into its now. I don't have the one that does this, but now they have one that goes back into its charger. Mine goes
Cleans
back
itself,
into its charger,
yeah.
and then it cleans itself out, gets ready, and goes back to whatever you set it up to do. You know, you can have it run twice a day if you wanted to. I mean, it's
Yeah.
great.
What does your wife need you for? You don't clean up after yourself.
Vinny drops
okay.
a lot of stuff around. Vinny, and we got 2 dogs that clean that up too.
Can you trade IRBT? Not really.
Not that I know of.
$3 stock.
Yeah, no.
Wolf.
Sorry.
Woof. 200% implied volatility. You could just buy some
Yeah.
shares and pray.
And YOLO.
Yeah.
right,
YOLO,
there
I
you go.
guess. Yeah.
Hey, Airbnb wants to prevent Halloween parties in North America. They said they plan to use anti-party technology. What is this, a 1980s movie? We're using anti-party technology. No, this
silly
Halloween
kids.
to stop large gatherings at bookings in the U.S. and Canada. The tech factors in the length of the stay, distance from a guest location, property type, timing of the booking, and other factors to block reservations that are deemed high risk. Last year, the company said they prevented around 38,000 people from having their right to fight, to party.
Here's a stock that used to have a high correlation to the market. Been going sideways lower end of its market, 129. Ivy rank of 43 is pretty good. Earnings are coming November 6th. Looking at November markets, they're a little wide-ish, so be careful in there. But Airbnb used to be a follower of the market, not too much anymore.
I know, but it kind of fell off because they just got too uppity with all their fees and all their
Yeah.
chores and all their. It's just like, you know what? I'm going to just stay in a hotel.
It became
Yeah.
cheaper to have somebody else, clean your room for you,
Yeah.
included in the price. I'm
Yeah.
talking about a hotel and everything else
Yeah.
like that. Yeah, make your bed. Yeah.
Hey, I put this in just for you, Bat.
Oh, good.
I thought you'd be interested in this news, breaking news. Maybe you might be upset. I don't know.
Okay.
Hollywood's busiest writer, Taylor Sheridan, is leaving Paramount for a big deal at NBC Universal. The famous writer behind your favorite shows like Yellowstone, 1883, Lawman, Tulsa King, whatever. He got into a dispute with the son of Larry Ellison, who runs Paramount. No, this is true. And they were like, your shows are too expensive. We don't like that you film on location. There were a bunch of other issues. And he's like, you know what? Put on my hat. This town ain't big enough for the both of us. And so he's going to NBC Peacock, which is owned by Comcast. So
Yeah, this guy hits home runs. I don't know.
Wow.
This could hurt a little bit.
yeah, so you can trade Paramount, P-A-R-A.
Yeah. What happens with all the shows?
I mean, he still gets paid.
No, I know, but they don't. Do they?
He's
not
going to make
be,
new shows for
Yeah.
NBC.
But the current shows, he's not going to be
I
writing.
think they own the shows.
Well, they own the IP, but they're going
Yeah.
to have to hire a new writer.
Yes.
He's not going to give them
right,
scripts.
Yes.
showrunner too.
Wow.
Right, yeah.
Yeah.
Wow.
Paramount, is it in some sort of deal, maybe?
With
Yeah,
Warner
Warner
Brothers.
Brothers.
WBD. Yeah, they're buying Warner Brothers.
It's out of play.
Yeah.
Yeah, you were right.
know.
That is true.
Yeah.
Hey, in other news, Lululemon announced they're partnering with the NFL to release apparel for all 32 teams. It's the latest push into sports for Lululemon, which also offers NHL branded merchandise. Well, they are a Canadian company. And they also have deals with athletes like F1 champion Lewis Hamilton. The partnership furthers the NFL's massive merchandise reach. These look like the most generic sweatshirts I've ever seen in my life, but
Yeah.
I don't own a single piece of anything from Lulu because I just
Oh, now I know what to get you for Christmas.
can't afford it. All right. It's expensive. Like, I buy my workout pants on Amazon because
Well, you can buy the stock then. 181, relatively low at the low end of its range. I mean, 160 is what's its low end, but here it's got an IB rank of 51. Earnings not until December. December 4th. December markets are pretty good here, about 25 cents wide. Lulu might be in play. You might have did something for
hey,
option trades
option trades
today.
today.
That's right.
Hey,
We're going to look for a dog.
hey.
Lulu might be there.
The collection is set to launch today and will include both men and women's apparels. So there you go.
Beautiful.
Finally today, this is funny, for my viral video, drones are taking over. If you live in certain states, drones could deliver your packages from Amazon or Walmart. If you live in other places, drones may be fighting wildfires. If you live here,
True.
drones are surveilling you. But drones do lots of things. But this apartment owner sees a drone, and her cat Pretzel go to investigate. Oh, Pretzel, watch this.
Hello? Oh my god. Pretzel. What is that?
Oh, wow.
What is that, Pretzel? Am I about to get shot?
Washing the windows.
Hello?
That thing's got some.
Hello?
So she says in
hour
the
to it,
comment,
right?
Oh my
she says in
God.
the comment that the
Pretzel.
building sent an email,
What
but
is
she
that?
hadn't seen it.
Ah,
So they did warn
What is that,
residents.
it's like an attack drone.
It looks like there's
Am I about
a. It
to
looks like
get
there's a
shot?
very thin
Yeah, it's-
water supply. Otherwise, how could it hold all that water? Yeah.
I think there's the hose is connected to the water supply on the
Yeah.
ground, but then the foam
Yeah.
is on board.
Yeah,
But
pretty cool.
I was like, what?
Yeah.
What are we
Wow.
doing? Right. Poor
That's a good-
Pretzel.
That's a good one.
Pretzel got spooked.
Yeah.
He did. He's a scaredy cat. What's coming up next?
We're gonna take a quick 90-second break and come back. We got more Tasty Live after this. Confirm and send. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Look who's back testing. tastytrade now has options back testing. for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
We are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with Confirm and Send. But before we get to those questions, let's take a look at the market. Even the S&P's up $6. Seems like basically nothing after the last couple of days that we've had. And it is basically nothing. Expected move for the day around $18, $17.50 on the even the S&P's. Tight range last night of about 17 handles, that expected move for the day. NASDAQ up 39, Russell being a bucker to the downside, down 8, and the Dow up 220, all-time highs again if they close up here. Volatility up 5 cents to 1805. You can see here kind of, falling out of bed ever since mid-October or so, last couple of days. Catching like a little sideways action, like almost like how low can volatility go with even the S&P's. I mean, 7,000 in sight for the week. I mean, who knows, right? I mean,
all but a given.
Say all but a given. Expected move for the week is about 77 handles, so you're right there on the even the S&P's big round number. Who knows? Bitcoin over 115 now, 115 even. Ethereum down around $70. I'm looking at the futures here, and then oil down $1 to 60.22. Ivy Rankin oil is 33. Gold down $96. He who doesn't listen to his father is destined to repeat his mistakes of the future. 39.23. Just about 20 handles off of today's low, which is a 2.5% move on gold off of all-time highs of $4,400. Silver down 44 or so, 45, also making a lower move only by 1%. Corn, wheat, and soybeans continue their rallies over the last couple of days. Guess got to mention them. Ivy Rank percolating a little bit in there. Soybeans are the biggest mover of the group, even though on a percentage basis they're around the same. Some of the stocks that had earnings last night, UNH was one of them, up looks like about $15 now, $15 on UNH. Wayfair, I believe, was up $10 too. Almost $11, $12 now. SoFi was up $1 earlier.
It's right there, yeah.
Has held on to those gains too. PayPal, PYPL was up also, up around $7 or so. And the only bucker of the group, RCL, Royal Caribbean, after trading over $360 earlier in September, is down around, what is that, about $32, $33? It's a big move for Royal Caribbean.
NEE is another one to to go with what Vanilla was asking about for energy stocks.
Oh, good call.
One of the bigger energy names that had earnings as well, but it's basically unchanged, but has had a nice rally.
Yeah, you're right. Maybe it's even up a little bit.
Yeah,
here.
dollar maybe. I mean,
Earnings with this morning. Too,
yes, yes.
So, yep.
What do you think for today? I mean, it seems like you got volatility.
What'd you call yesterday? Because after we opened, we kind of sat.
The gap and nap.
The gap and nap.
So you just gap up, and then you're in a 10-point range for the remainder of the day. We rallied into the close, but for the first 4 hours of the day, I think it was like basically until like noonish, 1-ish. It was a 10-point intraday range from the open. So it's just open 60, up like 55 or something like that, and we were between up 65 and up 50 the whole time.
Gap and nap.
The gap and nap.
Yeah, well, we don't have that yet today.
I don't think we get that today. I
don't think so either. Russell a little weak.
Yeah, volatility kind of unchanged.
But you had to keep your deltas in line yesterday. If you weren't aggressive with rolling your delta, you really had no opportunity to roll up puts or anything at any type of move.
We got too much stuff happening Wednesday, Thursday that I think, we got our move. They're probably going to take out some premium today, and it's just kind of chop today.
Yep.
That's at least what I'm thinking. So we'll see.
Beautiful. All right, let's do it.
Yeah.
All right, confirm and send. Let's get to it. Tuesday, October 28th. Almost here. I'm talking about the end of the month and Halloween.
Are you going to dress up for the show?
I'm a bear. For the show?
Yeah, for the show. You should wear your bear costume for the show. Come on.
It's a little embarrassing.
You're comfortable in your skin. Okay.
My own skin. Not make-believe skin.
You're a confident guy.
You know what? If you stuck around for the show on Friday, I would have. But since you have a travel day for a Sunday show, hardest working man in showbiz, I might do it anyway. Jamal and I are going to do it. So maybe I'll give Jamal.
Yeah, you guys can both be cute little fuzzy bears. You should set that up. I could Amazon one for you today. Get it here.
I have one. I don't need one.
No, I know, for Jamal.
Get
another one so you guys could be little fuzzy wuzzy bears.
Tuesday, October 28th, confirm and send. I know you avoid technical analysis, but aren't support and resistance levels just the market's collective expectations? Support and
that's the big
first one I would give you.
There's just so many variables that go with technical analysis. The chart duration. Do you look at a 1 minute, 5 minute, 10 minute, 12 minute, 1 hour, 1 day, 1 day, 1 hour?
Right.
I mean, there's a million different ways you can kind of slice it. Volume, all those things. Open interest, if you're looking at the options, there's just a million different ways to slice it. So if things work for you and help you make a decision on, where a good spot to get in or out is, I say go for it. But oftentimes I find just sitting and saying, oh, I'm going to do this at X point.
When the stock gets to this point.
Yeah, it gets to this point, I'm going to do this. And then when the stock gets to this point, I'm going to do that. And,
when it gets there, the market's moved, things have changed.
Or maybe you don't get exactly to that point. You're 10 cents off or 50 cents off and you miss the whole trade.
Not if you're paper trading. I'm kidding.
We don't paper trade here.
I know.
So,
if you're a guru online.
Yes. So I just ultimately think it's just a little bit too much. I mean,
I think really what you're saying here, it's a little too subjective.
Yes.
But we look at things like this, like I'll say,
I like the moving averages.
Yeah. Moving averages is the same as looking at support and resistance. It's the same as looking at Bollinger Bands. It's the same as looking at expected move. I mean, we're all 6 of one, half dozen of another. We're all looking for some sort of reason to justify what we're thinking in our head, coupled with the strategy that benefits from what the market is providing, meaning call skew, put skew, no skew. I mean, that's the way you look at it. So, I mean, we don't do it, but I mean, it's good to know. If it helps you click on the button, continue going for it. Next question, please.
We've seen small cap stocks really underperform this year. They've kind of caught up a little bit at this point, but they have underperformed. Do you think that signals more economic weakness ahead, or is it just a liquidity issue?
I mean, if something like last week, I mean, I think the Dow and everybody were up 2%, and this one and the Russell's up 1.9. Did it really underperform? I mean, if the Nasdaq's up 20 some odd percent, and
it took a while to catch up, though.
Yeah, it does. It does. I mean, I don't look at it like this. I actually think if you have the Nasdaq and even the S&Ps leading the market on big days, that it's a very healthy. Like, I'm not looking for the Russell to overperform so it can catch up. I like the pairs trade, like, an intraday trade or something like that, or maybe a little bit longer time frame. I think you'll get a move to benefit from it, but I don't think it's a position that you have to marry or keep into perpetuity or forever, or as it gets, the relationship between the two widens that you need to ramp up. I don't think it's that kind of trade at all.
Agreed.
Next question, please. When volatility spikes intraday, do you add to trades immediately or wait for confirmation later in the session?
Volatility spikes have been so short-lived recently that it feels like if you don't jump on it, you miss it in like 24 to 48 hours.
48 hours seems to be long these
days.
Yeah,
like 24 hours and you miss the boat. I mean, I think any sort of pop in volatility is a good time to look for new entries. Of course, position sizing is always the key. And so, we're still trading even though volatility is low. Like, it's not like we're sitting here doing nothing. So you got to have capital available and powder dry to take advantage of that. But yeah, I mean, any sort of pop in volatility or, a move on a news event or something like that, like that's stuff that interests me.
Yeah, but it's hard to, I don't understand what the confirmation later in the session. Volatility goes even higher.
Yeah.
So if it goes lower, what do you say? Wow, I wish I should have done it. If it goes higher, you say, oh, I'm glad I didn't do it. I mean, you see volatility expanding. It's more mean reverting than price. And as, Nick just explained, I mean, we haven't had more than a day or two of volatility expanding for quite some time. I think you have to kind of sprinkle the infield, as soon as it happens, and hope that it goes higher because you've kept a little bit of powder dry and you can have a couple more positions with high implied volatility. I think it's, especially at market highs right now, I think you'd welcome a little volatility expansion in the market, which we have not seen. Mm-hmm. So, if you wait for something to happen, you might wait into perpetuity. And what's high? I mean, /VX is 18 now. We got to 20 and change, and that became high. We never got to the 30s or the high 20s. It's a very low 20. So high is a relative term. So better looking at IV rank and looking at each individual stock or ETF's implied volatility as measured by itself over the last year or so than really kind of saying I'm going to wait for confirmation on volatility. Tough rabbit hole to go down. Next question, please.
If I'm trading an iron condor in a very wide expected range, does it make sense to trade smaller with, but more frequently? So like up the contracts versus wider spreads, really the question.
Yeah, on movement that you're having, tough one, because we have had some good movement in stocks, and if you put on a wide iron condor on a stock that ends up moving, 2-3%, 1% intraday, you're probably going to roll up the untested side. If you had powder dry on a smaller iron condor, you can kind of sprinkle the infield with it and have more contracts. I don't know. For me, you can really control entry. When I like to do something, I pretty much do my normal size that I'm going to have on the position, not do something like this. And remember, a lot of smaller trades with tight width strikes between them, meaning $5 wide iron condor instead of a $20 wide iron condor because you're saving some buying power, the probability of success is still going to be, that under 60%, closer to 50-50 shot. I like putting it on all at one time. But if this has been working for you, I mean, and you're active, not like a horrible thing to do.
Yeah.
I'm okay with that. I mean, if it's what you want to do.
Yeah.
All right, beautiful. E-mini S&Ps, sneaky here, creeping up 15 handles. trading or looking to make new highs. NASDAQ up 81, doing the same, just a skosh off of its highs. Russell hasn't really rallied about $1 or so, and the Dow rallied about 80 handles or so, 311 or so. Volatility still up 5 cents, 18 and change. Bonds, which I kind of shied you away from yesterday. I know you kind of want to nibble on them. They did rally on the close and rally a little bit today, up 2. Bitcoin over 15, 115.2. The rest of the market, gold back to where you bought it, down 77 and change. Silver turned green. It was red for most of the morning, turned green. Maybe gold can get that going too with it. Nat gas down 10 cents. Big move of 2 in the order percent to the downside. Corn, wheat, and soybeans still up. We'll take a
quick little news update. CCJ up $14. So uranium play.
CCJ.
Investment from the government portfolio.
Wow, big move here too, from 86
I'm seeing
to
Brookfield and U.S. government, $80 billion deal to build new nuclear reactors, CCJ.
So that's probably going to help the other.
I was looking at BE, which isn't really moving.
Yeah.
Okay,
this morning it's still down.
Yeah.
A couple of dollars. Maybe there's something to do there. And OKLO is up around $2.
Yeah.
All right, only BE lagging. We'll take a quick 90-second break and come back. We got more Tasty Live with an option jive. We're talking about gamma, theta, days. You're not going to want to miss this. Back in 90 seconds, Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event. At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
It's option jive. We are back, son. You know what that means? Time for a little bit of a option jive. Gamma, theta, days.
Yes.
Oh my.
It's an interesting one. I think Jacob's going to do a deeper dive into this for one of the 0-day pieces as well.
Awesome.
But it's an important thing to understand when you're looking at like your overall Greeks, especially if you're trading these shorter duration trades, like your 0-day SPX trades, where
weekly ones, sure.
It really inflates a lot of your numbers. So you got to kind of keep that in mind. So this is kind of just like a FYI type option jive here.
Yes.
Cool. Let's do it.
I'm ready.
And we didn't mention Microsoft having a huge move up $20. I don't know what that's about. Maybe the OpenAI thing.
Yeah, but that's
PayPal,
a little bit about it. $18 now.
Yeah, huge move there.
Huge move. Keeping the NASDAQ up, keeping the Dow up.
Yes.
Keeping the S&Ps up.
Gamma
Not
Theta.
going down with Microsoft up $18. I mean,
No. I mean, I think that was the move that you saw from basically unchanged to up 20.
Yes.
Was Microsoft, basically.
Yep.
Yeah. Gamma, theta, and days till expiration. Let's do it.
I'm ready.
So gamma is the most fundamental second-order Greek, measuring the rate of change of delta with respect to the underlying spot price. So as an option gets closer at the money, the gamma increases, and that option becomes bigger from a delta perspective. And time obviously plays into that because those options have a binary window between 0 and 100 deltas. So if an option is expiring in an hour and it's right at the money, it's going to be either 100 deltas or 0 deltas at expiration, meaning it's going to be out of the money or in the money. And so you have big gamma swings.
Which also means the strategy is going to go from 0 to what you put it on to full winner, full loser.
Yes.
In 0 days.
Generally, gamma is higher closer at the money. A large gamma value indicates significant sensitivity to price changes, even for positions that may currently be delta neutral. So this applies to kind of like tighter iron condors, iron flies. As you get closer to expiration, one of those options has to be in the money, so your delta is going to change very quickly.
And all defined risk trades that you just talked about too here, because usually when you're trading 0 day, you're looking at SPX, it just costs an exuberant amount of money to be a naked in SPX.
Yep. Short options always have negative gamma, so you're always short gamma, meaning premium sellers can end up with negative delta on an up move or positive delta from a down move. It depends on how much time you have left until expiration.
Sure.
The effect known as gamma risk highlights the need for active traders to supplement delta awareness with additional Greek. So we're always looking at gamma, especially if you're trading really short-term trades. You want to, understand that.
Of course.
So managing theta, gamma measures the sensitivity to changes in the underlying's price. So gamma from different underlyings are not directly comparable. So you can't. It's not one of those like theta, you can kind of bucket all of your positions into one theta number because they're all decaying. All options are decaying in some way. Gamma in Microsoft is way different than gamma in SPY or, something smaller stock. I mean, the gamma is all relative to the stock price. And so gamma and really Vega as well, you can't really bucket them cleanly because you have different dynamics between those two products. They're not the same product, whereas theta is across the board the same. It's just the rate of decay of an option's value. So thankfully, theta is closely related to gamma, so you can use gamma as a proxy as your overall, or you can use theta as your overall gamma sensitivity in the short term. Consider the gamma and theta values in a hypothetical Black-Scholes model. At-the-money options are responsible for the dots on the left of the plot. So you can see here from the plot, we have out-of-the-money puts and out-of-the-money calls. Theta values between underlyings are comparable, allowing traders to limit total portfolio theta. For an example, if you're using 0.5% of the net lick, to avoid excessive gamma risk. So basically the story here is looking at your theta can tell you how much gamma risk you have in your portfolio as a whole. And that's going to be reflective of the duration of your trades. If you have very short duration trades, you're going to have a very high theta amount, which means you're going to have a really high gamma amount.
That's correct. That's correct.
Relative to your portfolio where you can't measure gamma of two underlyings against each other, or there's no denominator there.
Correct. And you can't look at another thing. This is behind the kind of lines here is saying you can't look at any one thing to see what your risk really is. You have to be a combination of all of them.
Yeah, and understanding why things are what they are.
Right.
Like why your theta is high.
Right. Your contracts haven't changed, and my theta went high. What's going on? Kind of thing.
You're getting closer to expiration.
You're getting close to expiration.
Yes. And you have higher gamma risk.
The stock has moved closer to your short option.
Volatility's increased.
Volatility's increased, right.
Those are all things that you can kind of...
No one good answer, but a great answer if you look at all of them.
Yes.
And very accurate.
So next slide here. So we're talking about low days till expiration. So like we're talking about near-term options here. Near expiration, both option gamma and theta values become much larger. So a single 0-day position can exceed the theta guidelines for your portfolio. We've mentioned this multiple times. You have to understand that if you're trading these SPX 0-day or weekly stuff like that, your numbers are going to be very inflated because everything that you're selling goes to zero at expiration. And so your $3 in premium that you sell in a 0-day is going to weight as a theta number 10x what your $3 in premium is 45 days out in time. I mean, that stuff goes to zero. And so, your numbers are going to get a lot bigger. However, due to buying power reduction and in practicality, short 0-day options positions are almost always defined risk. And we talk about this in relation to like SPX. If you're selling an SPX put, you're margined at basically a mega black swan.
It's going to be 10 times, 20 times most people's normal buying power reduction. So you're not looking to do...
There's very few. I don't know if there's ever been an occurrence where on a 0-day, the margin requirement on like SPX, which is like 40 grand,
right,
where you've ever realized
that loss?
Probably never. Like on a 1-day time frame. Like what that line is...
Intraday, if you didn't have a position overnight, I would say it was zero.
Yeah. That's what I would think.
I would say it was zero.
Because that's kind of what
Because we close before you get to that number. I think
we would.
The circuit breaker would kick in.
Yeah.
Before you got to that number.
Yeah. Totally. Yeah.
So don't worry about it. You can't lose anything more than that huge number.
And there's no reason to ever really be naked because you can just buy any sort of tail option for so much.
For pennies on the dollar.
Pennies on the dollar of what the capital, reduction will be.
Right.
Yeah. So the gamma exposure is less of an issue with naked positions in SPX in 0-day trades, making it practical to ignore these plays when considering total portfolio theta. So like when you're looking at your 0-day positions, you should take all their Greeks out of your portfolio look because they're so binary. Like you should understand that those trades are all or nothing type positions. If you have $1,000 in theta and half of it is 0 days, there's no time decay to your portfolio. It's all 0 day.
Right.
So focus on buying power for managing 0-day positions instead of looking at the theta number. You shouldn't be looking at the theta number hour to hour and trying to figure out how much is coming out of those positions. It's all going to be based on volatility and the time value there.
Very good.
So a couple takeaways here. Ensuring that delta aligns with your directional assumption is just the first step in position evaluation. The second order Greeks like delta or like gamma help anticipate delta changes if the underlying moves. Even delta neutral short positions can suffer from underlying moves known as gamma risk, especially the case with short-term trades. The close relationship between gamma and theta means limiting total portfolio theta can help control your gamma risk and really just kind of segmenting in your head where your theta is coming from, short-term versus long-term stuff. The strategy is effective across various positions and underlyings, but trading near expirations can disrupt the balance and really skew your numbers is probably a better way to phrase it. For 0-day markets, consider ignoring these positions in total portfolio theta calculations and rely on their buying power instead. So, looking at how much capital you're using in that position is more important than how much theta is coming from it.
Yeah, people get really pigeonholed in looking at the theta and wanting like a large theta decay. That large theta decay comes with risk. Either it be not from what we talked about right here, either comes from too much size or too much concentration in 0-day, or your 0-day position is a lot bigger than any other position that you have. Remember, one lot SPX is like 10 SPY, which is like, 5 or 10 Microsoft. I mean, these are, if you're used to trading one contract, all one contracts are not created equal here. And that's really what you're looking at when you're looking at this too.
And this has only become a thing in the last couple of years.
Phenomenon in the last couple of years.
Well, because like when we did studies on, your theta ratio 10 years ago, 7 years ago,
it's not going to move that much when you have no 0-day portfolio.
Well, you never had the skew. You couldn't get $1,000 in theta on a $10,000 account. That's impossible when you're trading 45 days. Like you just don't have enough capital, but you can now because, you can trade stuff that expires in the next hour.
That's right.
So, that's just kind of the way the game has changed a little bit.
Absolutely. And to be quite frank with you, I mean, I don't even have my gamma number up there. Like, it's not even something that I really look at through positions.
On the portfolio. I have it on the portfolio page, but I don't think we have like a net gamma.
No. You can look
at
at each individual one if you want to, but I never look at it. I mean, that's by size.
It's by size, and you understand your positions from a delta perspective, where you're going to have problems.
Delta is king.
Yeah, it's always about delta. If you have 30 long deltas and the stock's down $10, you got some gamma risk on the position. Like it's not, it's not a surprise.
The position move too. The P&L move shows you have gamma risk.
Yes.
Or lack thereof. If you're at the other side of the coin and the position doesn't move, doesn't make money on that downside move, you had gamma risk that didn't come to fruition because volatility didn't expand. So it's a double-edged sword. Even the S&P is trading just a skosh off of their highs, up 17. NASDAQ up 83. Russell has not gotten out of its own way, still down 6 or 7. Dow up 300. Volatility up 2. Microsoft is today's big mover to the upside of the big cap stocks, up $20, $5.51. We'll take a quick 90-second break and come back. We got more Tasty Live after this. The moment you've been waiting for, the opening bell, is next. We're back in 90 seconds. It's Tasty Live.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
I'm feeling fly tonight, like a rocket ship. I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope grooves. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing, this body totally bussin'.
son, you know what that means? The opening bell is imminent in about 30 seconds or so. Even the S&P's hanging out up 17.5. NASDAQ up 90, both at or around their highs, just a skosh off. Russell's the weakest of the group, down 8, and the Dow is up 320 on the heels of Microsoft's big move to the upside, on top of all the earnings moves too, right? Wayfair, SoFi was higher, PayPal was higher. Royal Caribbean was the only one that's lower. There's your opening bell as they come spinning out of the turn. The softs, corn, wheat, and soybeans are still higher. Oil down by 77 cents. Gold, I haven't mentioned too much, down $74, right at the range where you bought it after going down to around 3,900. It was over 4,000 last night where you were able to scalp some of your futures from the day before. Let's see what's moving in this market so far. Changing this net change to the downside, you're looking at the rut, obviously. Gold down $5.60. That's GLD. Qualcomm down 2 and change. Your Chinese stocks, Baba, Baidu, all a little bit weaker. TSM weaker by about 2. AMD down $1 and change. And I see Netflix down $1 and change too.
Netflix is such a dog.
Which one?
Netflix.
You see on that, it just went up 34 cents. See that? But it is a lagger of the group, as you can see here, well off of its highs of 1,300, down under 1,100. Let's see what's moving to the upside here. Well, basically the rest of the market, Microsoft up 20 and change, trading right near its highs. Wayfair for earnings up 12. UNH for earnings up 10. UPS for earnings up around 8. PayPal for earnings up around 4. Man, just play these to the upside. If you want to, then you got Meta coming out tomorrow after the close. It's up 2 or 3 and change. Roblox and Nvidia also up. OKLO up $2 and change. We were talking about that a moment ago. From go ahead.
No, go on.
Yeah, no. From the other nuclear stock catching a little bit of a bid here, so moving the rest of the market higher too.
I was looking at the Royal Caribbean. I did a put diagonal in Royal Caribbean, but those markets are just so awful right now that I'm just going to let it sit for a little bit.
So you had short Delta in Royal Caribbean. You did Nov Dece, right?
Yes. And I did the monthlies too. So you got a lot of time left until expiration on that trade.
Yeah, but these
should be a good win.
$5, $8. Now they're going to tighten up.
I think so.
As the market, listen, we're open for 2 minutes, 2-3 minutes.
Yeah.
Frankie always goes crazy in the chat room.
Watch your pricing. Yeah,
watch your pricing. Give the market a little time to normalize. Royal Caribbean, if it doesn't move $10 in the next couple of minutes, those markets will get better. I don't know how good they're going to be, but they'll get better. They'll certainly be better than looks like almost $3 wide that they are right now.
Yeah, and I'm trying to work my UNH close too. I did a call diagonal there, so I just have that one.
So you had short Delta in Royal Caribbean, long Delta in UNH. Royal Caribbean's lower, UNH is higher. What can't you do?
No high fives, buddy. Okay.
Act like you've been there.
Act like you've been there.
UNH has rallied since August when it was down in the 230 range, up to 271 where it is right now. So good move in UNH.
Damn, just sold off like $5 though.
It did. Damn. UNH is always one of the market movers on my high option volume list, meaning it's always in like that top 5 or 10%. The daily expected move in UNH is $12. It's got good, general monthly implied volatility around 40% or so. So you got almost a $12 move in there. Bitcoin catching a small bid here too. The futures are up $2.60 after being down for most of the morning. So you got Bitcoin catching a little bit of a bid here. Let's see what Coinbase is doing. COIN up $3.50. Remember I quoted that earlier. It was down around $3 or $4, so it's catching a little bit of a bid there too.
Yeah, I have my Tasty FX.
Yes.
Oh, Royal Caribbean, $15. I closed that one. So I did that at. I did the diagonal at 885. So I took like 600 and something out of it.
That's a great trade. Yeah, you paid 884.
884. And closed it at 15.
You are correct.
So I got short some British pound against the US dollar. So I long the dollar. Dollar's kind of having a little bit of a bounce day, which is nice to see. Ilya's probably ecstatic about this. The euro down a little bit as well.
The Japanese yen is up small.
They need to incorporate the ding on the Tasty FX products.
Yes, we do. Yes, we do.
That's a big problem because they don't listen to me. I got no yank.
You got no yank.
I got no yank.
The euro is a little bit lower, and the British pound is a little bit lower too. Actually, the British pound a lot lower, almost a half a percentage point. It's a decent sized move, 75 ticks.
God, I miss my UNH.
Yeah, UNH markets are a little bit wide.
I'm gonna try and close out of this call that I have expiring in the weekly here. I'm not gonna chase this, but I'm gonna leave this. I'm gonna leave this at 85 cents.
Okie dokie, you're allowed.
It's at 395. So we're still leaning long there. PayPal, I closed out of that put the other day. I wish I held it. Missed that one. You see, you miss some, you hit some. It's okay.
Sure.
All right, there's my UNH call. So now I'm just long the call for like $12. So if we get a little bit of an up move here, $1 or $2, I'll take that one off.
Got it. EMS-P's up 11, selling off of their highs by about $8 or so.
I also have a UPS call diagonal spread. So I did this. I think this was What's Your Assumption or Fast Market from last week.
Okay, yeah, you're probably right.
I can't take credit on this one, but this one's a home run as well. So we're going to close that too.
I like that you at least give props to those who.
Oh, my peeps are awesome. Your peeps?
Not so good.
They need some work.
They need some work. My peeps need some work. Your peeps are good?
Yeah. All right, 880, so that's like $400.
Beautiful. I like it. You've made some nice winners on these earnings trades. Usually we make about 40, 50 cents. You're making dollars on things. Good job out of you. Not used to all these accolades.
Should I not say the big numbers? I mean, yeah.
Well, what do you think for today as even the S&Ps sit here up 11 or so? Russell continues to be the weakest one, down 11. I really can't paint too much of a story here. Volatility hanging out at 18, hasn't gone up, hasn't gone down, just really kind of sitting sideways. Market
Paul Wall, baby.
What's that?
Paul Wall, sitting sideways?
Sitting sideways.
You don't know Paul Wall.
Yeah, there's the movie. Is that what you're talking about?
Oh, rapper.
What is it?
He's a rapper.
Oh, no.
We saw him in Texas. He performed at the Texas State Fair. Paul Wall.
I'm surprised you remember it.
King of the South.
I saw some pictures
Come
of
on.
you. I saw some pictures of you there. I'm going to the South. I'm going to Austin.
Oh, yeah, there you go.
Yeah, I don't think I'll be able to see Paul Wall.
I'm sure he's performing somewhere.
Uh-huh. Okie dokie. All right, are you
Sorry.
Ready? Are you ready to take? Oh yeah, put that up. Will you
Yeah,
please? Let's
yeah.
go this. And
Somebody go see them. I mean,
somebody go
it's
see me.
like-
Come see my sidekick Tom Sodnoff for the last time. Anton's Nightclub, Austin, Texas. That's this. Not this Friday. Next Friday, November 7th. Doors open at 8 a.m. Still got room for you. Go to tastylive.com/events. Doors open at 8. Come and press the flesh with us for about an hour, and then 9 a.m. we started. All about trading all day long. Going to build a nice portfolio. Got limited seating, but reserve your tickets today. You still can. tastylive.com/events. Liz and Jenny are going to be there. TP is going to be there. A special guest is going to be there.
Who's the special guest?
It wouldn't be special if I told you who it was.
Well, please go up to Tom and ask him if he's ever made $5 on a earnings trade. Please ask him.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? Option
Jive. Yes, Option Jive. The peeps are with me on the Paul Wall.
Are they?
Yeah.
Oh, good.
Yeah, that's my.
New and improved. Tasty Live. Getting younger. I like it. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with...
Not younger, too. Paul Wall's like 45. Okay.
Oh, ancient.
This is Unk. We're talking Unk rap here.
Unk rap.
This is Unk rap.
From the South.
Yeah. King of the South. Paul.
King of the South. We're back in 90 seconds. This is Tasty Live.
The grill, baby.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive. That's right, my son. It is time for an option jive. Even the S&Ps are up 8, holding kind of steady, just a lot like yesterday, just not the magnitude of the move. NASDAQ is up 113 or 14. We're off of our highs in the NASDAQ by about 80 handles. Even the S&Ps are off of their highs by about 9 or 10, maybe now 12. Russell is the weakest of the group, trying to lead us lower, down 18, trading on its lows for the Russell. And the Dow up 190 off of its highs by about 200 on the Dow. So maybe a little bit more of a sell-off. Volatility up 15 right now. Bonds are up 4. Bitcoin over 115, flirting with 116, 115.8 right now. Oil down 71 cents. Gold down 83 or 82. Silvers continue to be in the bucker, trying to bring it to the upside. Up 6. Some of the movers on the market today, you still have Microsoft up 15, but it is about 7 handles off of its highs. Wayfair for earnings up 15 and change. Tesla up 8. Netflix and Meta both up 8 or 7 apiece. PayPal for earnings up. AVGO, one of the market leaders, up on the downside. Looks like the Rut and Gold, UNH, which you had short delta in, good cover in there.
Now I got long delta.
Long delta in UNH now. I'm sorry.
Yeah.
All right. Yeah. UNH traded.
Don't like that one.
380 at one point. Now back to 358, and Qualcomm down 5. Sorry.
Yeah.
Lulu down 2.
Can't win them all.
And all the well, you know what? It was bad markets in there. Was really the
I put an order in and just didn't get filled, and then we had that $5 down move. If we would have stayed right there, maybe tighten up. But I mean, it was the same thing with Royal Caribbean. Like I was $1 off the mid on Royal Caribbean, and I let it sit, and the
stock accommodated.
Yeah.
And you were able to get filled, right? Now that one's moved $1. It would have moved $1 against you too. I mean, you sold it at $15 credit. It's like a $14 credit right now. So I mean, markets are dynamic, son.
That's
why you have to trade liquid products. And I got it. You went with a directional bias here, but you got to trade liquid products.
And it was like you itching for stuff. You had no volatility, and they were relatively small, positions.
Yep.
But anyway,
still, you ready?
Let's do it.
We're looking at an option jive, the hidden benefits of Jade lizards.
The Liz and Jenny trade, not the Tony from Mexico trade. We have proof. They can both have it.
Yeah,
Tony,
why not? We're all here.
Yeah.
All
right, let's do it.
I'm ready.
So a Jade Lizard is a bullish strategy that combines a short out of the money put and an out of the money call spread. It is created to have no upside risk with the total credit greater than the width of the short call spread. This way your risk profile will look like. You don't have to be perfect with these. Sometimes if it's a $5 wide call spread and you have a net credit of $4.50, you're essentially a Jade Lizard.
Yes.
There's a lot of flexibility here. You don't have to be married to the idea that it has to be. You want it to be close.
Yeah, you want it to be close. I mean,
very little risk, if not no risk to the upside.
Right. You can put these on. Let's say you have a $5 wide iron condor and a naked put, and you put it on for $4.98. You have $2 worth of risk to the upside, which is it's never until expiration or very close to expiration going to go to $5 where you would lose the $2, and you'll have a 30, 35, 40% probability of success. But if you sold that same trade at 501, you'd have a 75, 80, 85 probability of success. So the difference between that is $2 or $3. You have to realize that the credit you receive on that is paramount, of course, but realize what your risk is. It's almost like looking at the last option jive we did, like looking at your gamma, your theta, and realizing that your delta is really what you're going to look at here. And on this trade, it's really the same thing here. It's the delta of the trade. Even the S&P is only up 3.
Oof.
Could we have a reversal day to day with Microsoft up 15? It'd be very interesting.
Yeah. Well, not on the NASDAQ. Maybe.
NASDAQ up 96. I mean, it's off of its highs too. But we'll see.
Vol getting bid a little bit. 1820.
Vol getting bid 1820, although it is extremely low at 1820.
Yeah. Next slide here, please. Other than a naked put or call, most option strategies have either 2 or 4 legs. So why did we create this 3-leg strategy? Because why not have a 3-leg strategy? Because one benefit of using the Jade Lizard over other strategies, such as an Iron Condor, is it takes advantage of the volatility skew. Because usually you have put skew, not in this wild market where you have call skew basically on everything.
Call screw at this
point,
yes. Mm-hmm.
Yeah. But put skew typically on something like SPY or Qs or whatever. Next slide here.
And the S&P is down 75 cents.
Ah!
You gonna buy the dip?
Is this day one?
I'm just kidding you.
Is this day one? You want to give me a day one?
I can't give you a day anything right here. I mean, but you do have a mixed bag of tricks, which I wouldn't mind seeing going into all the earnings that we have coming up. Maybe even get volatility to expand a little bit on an unchanged market. Might be a nice little opportunity for new trades.
Due to the skew, IV increases towards lower strikes and decreases towards higher strikes. So you typically see put skew on most ETFs, if not a lot of equities. You typically do see put skew with those options. Pretty self-explanatory there. Some stocks like a Tesla or high-flying stock might have call skew.
Yes.
And then skew might be non-existent when you have something like a binary event, like earnings. Typically in earnings, if you look at the equal delta options, they're pretty similar, and that's because you have this binary event. And then further out in time, you typically have call skew in everything because there's a cost to carry and the leverage aspect and positive drift. Like skew is dynamic, but typically you see put skew on a 45-day time frame, especially in the ETFs.
It is dynamic. It's a good way of putting it.
Next slide here. So this means the further out of the money puts with higher IV are relatively more overpriced than the puts closer to the stock price with the lower implied volatility. So you typically have higher IV, which is just the relative change of an option's price. When you look at per strike volatility, a 5-cent option is going to have very high implied volatility because if it goes from 5 cents to 6 cents, that's a 20% increase in the value of the option. So the volatility is a smile. Or a smirk sometimes.
Or smirk, depending on if the volatility goes higher or lower.
Yes. But generally speaking, when you're selling out of the money puts, you have more exposure to volatility. Next slide here. So the Jade Lizard sells the more expensive call and buys the cheaper one and doesn't pay for the more expensive put as an Iron Condor does. So you're not buying that downside volatility. You're short that downside volatility and you're selling upside volatility as well, but it's capped risk upside volatility, so you don't have the same sort of max risk to the upside.
Very good.
Next slide here. Unlike a strangle, it also eliminates the possibility of unlimited risk to the upside, but with some positive delta. So you still lean long on a Jade Lizard, but you don't have that upside risk.
You don't have that upside risk. You're collecting more premium to begin with on the entry of the trade on this environment that we've had where we only go up all year long.
Yes.
It's been a home run strategy compared to even just a naked put, which would have been a home run strategy here because you're going way further to the upside and you're collecting that little bit of credit in there. So, I mean, it works.
Yeah.
It's been working, especially if you're managing them.
Yes. So looking at the study from SPY from 2013 to present, we're looking at the Jade Lizard performance. So getting over to the next slide here, exceeds the performance of strangles and Iron Condors. This is not a shock. The market has gone mostly up. So the more long delta you have, the better the trade has performed. Its performance has been even better over the bullish market time period. So you can see here, you have a higher win rate, average P&L is higher. Your largest loss is also higher because you are undefined risk on the downside versus like an Iron Condor. But you can see here, it's pretty intuitive. If you have long delta and the market goes up, you're going to win more and you have bigger wins.
Absolutely.
If you have short delta and the market goes down, you're going to win more and have bigger wins.
That's correct. Dynamic that way again.
Dynamic, yes. Next slide here. So Jade Lizards have a higher pop, but its performance is very close to the naked put. So why even trade it? So again, this is one where, in a bullish move, in a bullish market, they're basically the same thing. Why even sell this call spread? And it comes into play on this next slide. Because the Jade Lizard performs much better by entering the trade in higher implied volatility environments. So let's jump over to slide 9 here. You're capping your risk. You cap how much you can give up on the upside, but when volatility is higher, that value that you're capturing on the call side is going to add to your profit potential. So you can see here when volatility gets higher, and we're looking at IVR of greater than 50 versus all markets, you get an extra bang for your buck here because you're selling that call spread that has some sort of value, and a lot of times those are expiring out of the money, and so that's added value to your position. You get much higher return on capital. It also reduces your risk to the downside by a small amount, but really the risk here, the largest loss, is because when volatility is high, the put you're selling is way further out of the money. So your tail events have to be way bigger tail events than when volatility is lower.
Good job.
Last slide here for a couple takeaways.
They know their stuff, and you're knowing it too. This is good stuff.
Yeah.
Good job.
Skew is a key consideration in constructing a Jade Lizard. Jade Lizards have performed even better than strangles and Iron Condors due to the market going up, even after the dips over the past decade. A neutral to bullish strategy, ideally a Jade Lizard, is deployed such that the total credit received from the short call and the short put is greater than the width of the upside call spread, and ideally in high implied volatility. You'd even make a case here if you're kind of a little squeamish with leaning long that just selling the call spread now reduces a little bit of that exposure.
Good job. Good job. My friend Armand just reminded me that the Dow and the NASDAQ have already exceeded their 1 week expected move. And it's only Tuesday.
Damn.
So do you start looking at peeling off some long delta and maybe some positions that you have that might reflect the market itself? Just curious.
Yeah, I mean, we've been doing that, you know?
Yeah, managing winners.
I mean, we've been managing a lot of our positions here. I mean, we have, you know, I have some short delta in Google here going into earnings just because of the run up that we've had. I have some long delta in NVIDIA. You know, I mean, across the board, my beta weighted delta right now is basically zero. So I'm pretty much there. I have positions all over the place. Like I have a short call in AMD, so I have some short delta in AMD into this move. I have some long delta or kind of neutral delta in Amazon. I have some short delta in Baidu. ETH and IBIT, I have long delta. Gold, I have like some neutral to longish delta. Google, I have short delta. Intel, I have short delta. IWM, I have short delta. Meta, I'm long. So I'm all over. I'm basically flat right now.
Right, with market risk on, right? I mean,
yeah, but I got positions on both sides, so I'm not full bore long here. I mean, I have some positive gamma to the upside via like UNH and Meta and Amazon, so I will get long if we have a move up.
And those stocks also participate, which you
would expect.
You would expect.
Yeah,
you have to make some sort of assumption. Sure.
I'm certainly not like over. Like I have some room to get long.
Don't worry, cancel crash. Even the S&Ps are up 6 or 7. Hope you.
We're gonna chop today. I told you to chop. You got too much going on tomorrow. It's gonna be a nothing day today.
We do.
And volume yesterday was really low too.
It was low.
Like that was like for
all-time high.
A gap and nap.
Right. Gap and nap.
You gap up and then you go take a nap. You have a nice lunch.
Now we just might nap.
Yeah, we didn't get the gap today.
No.
I guess. NASDAQ.
0.5% in the Dow is not a gap anymore.
Yeah. I guess
0.5% in the NASDAQ's not a gap anymore. Probably not.
What's moving the Dow?
What's moving in the Dow? I can think of it.
What's giving us?
I mean, Microsoft would probably.
Oh yeah, Microsoft,
one, right?
Yeah, Microsoft, the big one.
Let's see.
Sherwin-Williams, the paint. Do they have earnings?
I don't know. I mean, do you ever look at it?
I don't know.
I'm gonna go down here to the Dow Jones. I'm gonna do it from.
Tell you that stuff ain't cheap.
No, it's not. Up $23. Microsoft up 16. Goldman Sachs and JP Morgan. Really more Dow stocks lower, but lower smaller cap being the worst, which has earnings tomorrow before the market opens, down almost $4.
Yeah.
Even the S&Ps it crashed back on, as you said, chop up 75 cents. We're going to take a quick 90-second break and come back. We got more Tasty Live. What comes up next?
Market Measure, another one.
That's right.
Free research today. My God, my brain.
Beautiful. We'll be back in 90 seconds. It's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
They wanna buy me, baby, I'm too pricey. Yeah, I'm cherry, I'm nice things. I'm ice cream, I'm melting. Well, I'm high speed, wanna bet. Look at me, I'm on it. Yeah, my talent is reflex. Got a mean whip, let her rip. Everybody count to 3. Okay, you wanna see?
are back, son, and you know what that means. Time for a little bit more Tasty Live. A market measure sponsored by the SIBO, and we're talking about holiday euphoria.
Question we get all the time.
What really happens?
Yeah. I'm going to try and get out of this UNH call that I have here. Now that it's basically flat.
UNH, did it catch a little bit of a bid
Yeah.
here?
Yeah.
Yeah, up 50 some odd cents.
So I close out that diagonal spread for,
let's see, UNH looks like you did it at.
So I did it at 11.20. I bought the call back for 80 some odd cents, and then I sold the long call out for 13.20. So I got like $100 out of that, but the stock didn't move.
That's correct.
All that premium came out of the short-term option. So
should have just sold the short-term option. I'm just kidding you.
Yeah.
I know.
I mean, yes, but then you don't have the positive gamma. So like,
yes.
you know, your
your
Royal
a lot
Caribbean
more buying
trade.
power, and it's all directional.
Yeah.
Yes.
So the 395 call that I bought back at 85 cents, I traded that. So yesterday when we did it, I don't know the exact price, but it was as high as like $3 yesterday, which is basically telling you where that value, you know, you captured $1 and change from that option. And that was your profit. And then the long option, you know, you had a free shot into the day. Not a free shot because you had downside risk. You have the positive gamma on the upside.
Yep.
So, and I also scalped out of that gold, always fade your father.
Beautiful.
I'm just kidding. You missed that one.
I saw.
Because you gave me some grief. You were like, you listen to
probably
your
should have
father.
stayed long it because I rolled down my calls, and I'm the world's worst commodity trader. So
it's okay. It's a
I'm paying the price there. You're making up for it for me.
These
so.
come through as the bats, okay?
I know. All one for all for one. Like two musketeers.
That means when I'm not on fire, you better pick up the slack. Market measure, you ready? You want to do
I
it?
am ready.
All right.
I am ready. Let's do it.
Holiday euphoria. What really happens? What do you think happens?
I mean, everything points to a positive drift in the market, probably positive drift for holidays too. I don't know which holidays, if they're going through all of them or just the Santa Claus rally. I'm not so sure about a Santa Claus rally, but we usually are strong into December.
Do you hear the sleigh bells right now? Do you hear them coming? Or are they faint in the distance right now?
I remember one time it was Christmas. I was with my dad, which was rare, and my mom at the same time.
Oh, that was deep. That was deep.
And I was in the backseat of the car, and I was falling asleep, and it was like Christmas Eve or something like that.
Andy, you hear the bells. You hear the bells. He's coming.
Yeah,
that's what you would say.
No, we were under an L track.
Okay.
And the train went by, and half sleeping, a young kid. I thought those were sleigh bells. I mean, I went nuts inside that car. You would have thought I was bouncing off the walls. We're going to miss them. I mean, you know what I mean? So, yeah, no, I hear the sleigh bells all the time, for sure.
Amazing.
Nothing better. Yeah.
Oh, that is cute. That was a cute
Thank
story.
you. All right.
Yeah. I like
Market measure sponsored by the SIBO. Go get them. And then we've got Q and Glenn.
Yes.
Coming in from the Tasty Trade side.
Yes. All right, next slide here. So holiday euphoria can be described as a time of the year where people lose their minds, get all giddy and crazy with festive spirit. It's beautiful. Many expect it to start after Halloween and extend into early January. So this is where our peeps were kind of looking to start this study, start of November into the end of the year, basically, is what we're looking at. So we got have gotten a lot of questions on this. So we're going to take a look at the historical annualized SPY returns from November 1st to January 15th. And then we're going to compare those results for the rest of the year. So this includes like New Year's, all that kind of stuff. So you're getting it's not specific to one specific holiday. It's all the holidays kind of at the end of the year.
I like it.
And
bucketing them all in one
yeah.
place.
So we got a couple data points here to show you. I think you'll like what we got. So the study is 5 years of data in the SPY. So we're looking at just like, the COVID era SPY.
To date.
Yeah,
right?
to date. The market. The last
Which has
5 years.
been up
Yes.
market. I mean,
which is a big part of what you're going to see here. Although the results are still, are still good for these neutral strategies, you have to take into the context of the market itself. And we've been doing kind of shorter duration studies for another reason other than just looking at the more recent time. But you have to keep in mind markets are way different than what they were 10 or 15 years ago. From a size perspective, your 16 Delta Strangle right now in SPY, what do you think it trades at?
16 Delta Strangle.
We'll go to December. You know what? We'll use the weeklies, 38 days to go. What do you think it trades for?
16 Delta Strangle?
Yeah. Implied volatility, basically near the low. So this would be kind of the low print of what you have typically seen.
But wings are
throughout
probably
this year.
popping up a little bit as of late because those cheap options just stay cheap. I haven't looked.
The 16 Delta, what do you think?
$3-ish? Or is it?
576 right now, 38 days to go till expiration. So when we were talking about volatility at 18, 19, 20, right, $8, $9.
Yeah, sure.
I don't think I ever
really low.
I don't think I ever remembered selling a Strangle for $9 back in when I started.
No.
I mean, there's nothing there, and that's just a reflection of stock prices. We were trading Facebook when it was at 80.
Right.
It's at 700.
Yep.
That's just kind of how the market goes. So you got to kind of look at studies and look at the data, and make it a similar denominator if you're going to look at like P&L. Because if you lose one Strangle this year, it's going to be the same loss as 5 Strangles or 10 Strangles 10 years ago.
Yep.
In terms of value.
Good point.
So we grouped the data. So again, our data set 1 is from November 1st to January 15th. We're looking at January 16th to October 31st. So there's a bigger window there. Obviously, we're looking at holiday versus not holiday. We're bucketing these into 2. The group of data sets, we're going to look at implied volatility, so IV rank. So we're going to look at IVR in different ranges here. And then we're going to look at like participation rate. So we're going to look at like volume. We're going to look at win rate, average P&L, annualized return on capital, which is an interesting one, largest losses, all that stuff, and then compare the results. So this should be a good one.
Do it. So a little bit here also, by the way, 1825 up near its highs for the day.
Yes, a little choppy.
A little chop. Go ahead, I'm sorry.
Average SPY volume. So this is a question we get all the time of like, is there more trading that happens or does less trading happen really during holiday season? And you do typically see less trading as you get into the end of the year during this holiday time. So it's clear that many traders participate in the markets more from January to October. That includes the summer, which is typically like kind of the lower volume time of the year. So you do generally, outside of holidays, like holidays are usually a slow, low volume grind. And that's not a shock because people go on vacations or spend time with family. Those are things that you do and watch the market. So it usually is kind of a lower volume period of time.
Good point to make.
But the question becomes like, what do your trades look like? And that's what we're going to get here on this next slide. So if we jump to the win rate comparison by window. So again, we're looking at this at the way you look at this is like you have date and then the implied volatility, the IV rank. So you have less than 30 or above 30, and you bucket it into those 2 sets there of your win rate, and the color coding gives you your win rate here as well. So you can see, your win rates across the board are good. They're what you would expect from a 16 Delta Strangle. I mean, they're right there. You kind of have a lower than expected, and this is a lot because of how big the move to the upside has been. When in high IV and outside of this holiday window, when you're looking at high IV in the holiday window, it's been a higher win rate. And you take all these together, and they basically average out to exactly what you would expect with a 1 standard deviation Strangle of about a 70% win rate. There are some times where, and this is just this 5 years. So we're looking at the market now.
Right. And this is because you have risk on both sides. You look at a 16% or 16 Delta Strangle, and you say I should have, an 84% return, which you do, a win rate on the high one. No. It's both sides. So on entry, it's closer to 75% or so, and that's really what it's coming out to play right here.
Yes.
We've had that positive drift to the upside.
Yeah. So during high IVR, win rates improved across the board.
Because you get that volatility contraction, and that's the edge, the 10 vol point edge that you get there on this, and that's what we play for, and that's why we say, maybe you ramp up or you look for more of these trades when volatility's higher. When volatility's not high, they're still viable trades. You just got to keep it a lot tighter, meaning your size, watch your overall delta in your overall portfolio, because you don't have that little kicker of being wrong and being right.
Mm-hmm.
Sorry.
No, that was perfect. That was exactly, you said it succulently.
I try.
But really, your best spot was the holiday season high IVR, which isn't the most common occurrence. But if that does happen, think about it.
Yep.
Because we are coming into the holiday season.
I like it.
So the next slide here, we get into the average P&L over the buying power percentage in this window and the IVR regime. So we're looking at all of them together. We're looking at high IVR. We're looking at low IVR. And when you bucket these together, obviously your high IVR in relation to the buying power, because the buying power doesn't really change all that much, but you're getting higher implied volatility and you're getting better win rate. You're getting more premium, so your wins are bigger. You expect that to be much bigger. And this is really why we focus on high IVR. And I know that the number of 1% or 0.5% doesn't sound like a lot, but this is, if you're doing this on a 30 to 45 day window, you have 10 to 12 of these a year. And this is just on one position in a significantly bullish market.
Yes.
This is still 10 to 15%, if you have a mix of high IV, low IV, all of them together, and you just take one and 1.2% month over month as just one position, 12%, not sexy. It doesn't jump off the page considering the market, what has happened in the market, but it's still not bad.
No, it's not bad at all.
Not bad. Right. Risk-free rates 3 times risk-free rates.
I mean,
and this is just on a 16 delta strangle.
Right, for not 3 times the risk. See, that's the
3 times the capital.
Not 3 times the capital. Yes,
because you're using a couple $1,000s on this.
Yeah, relatively speaking, you're using a small amount of money.
Yeah, you need to, if you're doing it from a notional perspective, you need 60 grand.
That's correct.
To get 1/3 the returns.
That's right.
So it's it's a lot different.
Yep, it is. You're right.
Assuming you're in a margin account.
Yep, that's correct.
Next slide here. So how does the risk profile compare when evaluating the risks associated with each scenario here? The historical annualized SPY returns from November 1st to January 15th, and then we're going to compare these results to the rest of the year from January 16th to October 31st. And so you can see here on the next slide is our CVAR. So this is your risk, right? So this is kind of your tail type risk on these trades in the last 5 years. And a lot of these have been to the upside, which is why these numbers are kind of lower than I would have expected. Because typically when you have these big downside moves, you pop in volatility. The tail losses are usually bigger on the downside, which we really haven't seen a ton of, at least not for long periods of time.
No, not for long
periods. Trades kind of recover. So you can see here, even with your drawdowns and your 5% tail drawdowns, they're pretty manageable here. I mean, you don't want to see a $2,000 drawdown, but when you're looking at this, it's not spooky.
No, it's not spooky for the holiday season that we're not looking at, which would be Halloween.
Yeah, the drawdowns, the losses are much lesser in this holiday season. Is kind of the one of the points here. So you kind of had that slow grind vol contraction is typically what you see during this period of time.
Very good.
Couple takeaways. That's all I got for you. The November to January window tends to deliver better returns and higher win rates. Performance and premium trades both improved during this stretch. And again, this is just looking at the last 5 years. So, things change, markets change, and Next 5 years will probably be different.
Yeah, next 5 years will be different depending on what the next 5 years does in the market, right? I mean, if we have a lot more choppiness, they're not going to have these kind of results.
The mechanics aren't different. Like, you can't say this time is different.
No, you can't.
But this market is different. It moves, things move, different problems, different successes.
Different agendas.
Different agendas.
Yes, 100%.
Risk was also lower, so the CVAR decreased by around 62% during that November to January period compared to the January to October window, which is the outside holiday period. This likely reflects fewer sell-offs, calmer markets, and stronger sentiment during the holidays. If you look back at the last 5 years, most of our problem times have been early in the year. You had the April sell-off this year. COVID was in March. Those are outside of this kind of holiday window.
You always have something, right? I mean, like that's like saying, well, this came, that came. Well, that's the outlier moves that you price into the market by the market having volatility, by those tail risk of those puts in ETFs like SPY, IWM, and Qs, by a tail risk to the upside of those stocks like the high flyers and the NASDAQ. So
for sure. It just happened to be the case. You could have a black swan event in December. I mean, you could have them anytime. So, it just so happens that this data set, we had them early in the year. So that's why your values skew in that period of time.
Very good, sir. Very good. Good job. You got one more.
Yeah, last one. Historically, the November to January window has outperformed the rest of the year, both in returns and consistency. Both traders should treat it as a probability tilt, not a guarantee. Combine it with volatility awareness and sound trade management for the best results. Of course, always comes down to managing trades, managing size, all that good stuff that we talk about.
Keep it tight, keep it simple. Don't overanalyze anything, and find high implied volatility to do something with, and treat everything as its own separate event. Let's take a quick 90-second break and come back. We got more Tasty Live. What comes up next? Ooh, fan favorites, Q and my friend Glenn coming in next. We'll be back in 90 seconds. It's Tasty Live. Q and G.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
son, and you know what that means. Time for a little bit more Tasty Live with this man from the trade desk. My man Q, Quentin, what's up? My travel buddy.
Travel buddy, road warrior.
You outed me.
I outed you.
Yeah, about the scallops.
I outed you about the scallops for sure. Yeah, I did.
Remember, revenge is a dish served chilled and slow. Okay, just remember that.
Okay, I'm a little scared now.
I don't think the scallops is bad. I think that's. I think that's just Tom being salty.
Yeah, I don't get it either. Not like this. This is definitely not my rule. These are rules I learned, from my travel buddy, Road Warrior. Over here.
A Wall Street Warrior.
A Wall Street Warrior, yes. It was a TV show that was supposed to be played, but only played in like Europe or something like that.
I made an appearance.
Yeah, you did. A young Nick in like.
I think I was like 18, maybe.
Yeah, on the floor
17.
of the exchange before they changed the floor of the exchange.
Baby faced, very skinny. Needed to hit the weight room.
Still gray. No, I'm just kidding.
Definitely not gray, but the beard was not as capped.
No. Well, it took me 18 years to grow a mustache. You had already had a full beard by 18, so I was proud of you.
It's true.
Yeah, but I think
he says I get that from my mother.
Was like Todd.
That's his famous line. Yeah, the hair, you get that from your mother.
I wasn't going to say that again.
That's what he used to say to me.
Yeah, well, I think Wall Street Warrior. I think was it like Todd or like Adam Mesh was on that show or something.
Yeah, there were a bunch of people. Yeah,
I'm not sure, but I know what you're talking about.
Yeah.
The floor was still kind of there. Like it was still.
You were on the floor that I traded on. Yeah. Which is not the floor of the CBOE now.
But they had like people down there. There was paper. There was like it was still kind of. It was on that.
All the pits were there. It's not just basically the SPX and the VIX.
Yeah.
Like it is.
It was on the end of its run.
It was on the tail end. It was on the downslope.
It wasn't as busy, but I remember the.
It wasn't as open outcry. It was just as busy. The volume was actually busier, but the open outcry business was a lot less. Yes.
All right, so Tony, but before we got on air during break, you were filling up your coffee. Can you show me that thing that you've got?
What do they call this?
A craft? Is that
a craft?
A craft.
A craft. Yes. Okay. This is a byproduct of Beth. So we used to back in the day on the old studios. I would have a bell that I would click every time.
You had
no. It was electronic. It was electronic.
Yeah.
The
Tom's was like that. It was like more pistachios.
No. It was like a bell for a front door that I would click every time I needed to put my slides up. And on the brakes, I would click and ask, and it would ring like an obnoxious ring in the production. Like
out there,
ring. So that means on the brakes, I would say I needed coffee, and I drink a lot of coffee.
Okay.
So Beth, bless her heart, for about 2 years, did bring me coffee on every break and stuff like that, and then she just got bored of me, and
It was an
Oh, is it? I think they hear about it in their dreams in the nighttime. Right
that
now.
was repression. That was something deep down. Yeah,
that was Garrett who came in.
That's Garrett in therapy for that
one. So they got tired of that, so she brought me this, and I've had it for the last 10 years. So now every morning I make my own coffee. It stays hot, and then she went so far.
Yeah,
because I know you're going to
putting it on.
A Mr. Coffee, which this is not the, I can't do it, but Mr. Coffee. This is not the original Mr. Coffee. Here you go. I can't move it for you. Not the original Mr. Coffee hot pot, but this is the second generation.
I mean,
because the first one died.
Like so decked out. Like I remember when you guys were out and I got to sit in them one day, and I was like, I could just imagine trading on this. It's like freaking 2 TVs, right? I mean, that's beautiful.
Just right, which is one more than what I have at home, by the way. I trade on a little.
Be careful of the hot plate though, because he's a little forgetful in his old age. So sometimes
I have left it on.
Oh, you leave it on all the time? Because I used to
shut it off.
Well, no. Sometimes I'll be moving and I'll like touch it. And it's not
hot.
It's not like burn your finger hot. Like it's like warm hot.
Yeah.
I mean, it's hot.
But it's not good to leave on, you know?
Yeah. So it's a fire hazard. I probably shouldn't put that out there just in case this place burns down.
No, it's
now
fine.
You're on the hook.
It's fine.
I don't mean to keep.
Yeah.
I mean,
it's just
I mean,
okay.
If I had an adult or somebody would come over here and turn it off. And I did get reminded by Frankie in the chat room that the new CBOE floor is the old 7th floor of the Chicago Board of Trade, the old Chicago Board of Trade, which is now the CME group, all in one together. So the wheel is round, so to speak. So everybody.
Yeah, I've actually been there once. It was pretty cool. Like still seeing like the old floor trades. I mean, your orders don't really go there unless it's like 1,000, 5,000 contracts.
Yeah, it's mostly electronic. Sits on a book, flashes.
Yeah,
on
it's mostly like the electronic. Yeah. Fills, but yeah, it's pretty cool to like see all of that. Like, I still don't understand it. How could trades possibly get filled in a environment like that? I'm like, how does that work?
It's amazing in its simplicity and it's amazing in its efficiency. It really, really is.
I mean, because all like I know, and all Nikki knows really, like growing up is like the electronic trading through the screen, and so to think that it was like people screaming at each other, getting the orders filled, with all the hand signs, and everything.
It was quite cool.
And I'm just like, it's great, like whole different world now.
Yeah.
And it's just
it was
so
quite cool to about 5,000 people in the whole world.
Yeah.
That really only knew about it. It wasn't that cool to anybody else. You know what I mean? Like, just talk about niche.
Yeah.
I mean, it was really niche. Most people that you would talk to didn't even realize that they were market makers. They had a broker who executed their orders. They thought maybe like their broker actually did it for them. Their person in their office kind of thing. And
and we have a few people on the trade desk that were brokers, market makers.
Yeah, sure.
Futures traders as well. Like Marty, who comes on. He was a trader back in the day doing the futures.
A local. He was called a local. Yeah.
Local, okay.
Yeah. Merck and...
I bet we have more ex-traders than any other broker.
Oh, easily, I'm sure.
Easily.
I'm sure.
Even the bigger ones.
Right.
No way.
But Board of Trade and Merck were called locals, and market makers were really options. That's the way I understood it, at least.
Yeah, I think probably like any broker that was on the floor that doesn't work here is probably just out somewhere on a beach just trading. He's not doing it for a living.
Or driving Uber.
Yeah.
Okay.
One of the two.
Yeah.
It's feast or famine.
Or
a lot
of them didn't make it this far. There were a lot of things that they did in those past times.
Like at Tasty Trade, a lot of survivor bias.
Yes.
The traders who work here and made it out of the floor.
Yes.
A lot of survivor bias. I'm sure.
Yep.
Yeah. All right, so some things I'd like to go over today.
Sure.
It's a Tuesday, so we've got a Tasty Trade live demo.
Awesome.
We've got small accounts and smart moves. So going over a lot of defined risk positions. We'll talk about, of course, like your vertical spreads, your iron condors, but also one of your favorites. We'll go over some broken wing butterflies, more conceptual stuff. We'll, of course, place the trades, show you how to use them, but we're going to be going over like some more conceptual things with like the broken wing butterflies. We've also got calendars on the list. And so you can sign up for that at tastytrade.com/webinars, or also is, Nikki, who doesn't know how to spell, tastytrade.com/demos.
Good.
As well. And
the webinars is too much for me. So
webinars,
demo.
I guess.
tastytrade.com/demo. Also.
Beautiful.
Like if you want a demo.
If you want to find it, you can find it.
Yeah, demos,
we're not
webinar.
gatekeeping the demos.
We covered all of it.
And you have all the past demos in there too that you can take a look at.
Yeah, so we've got scheduled for today, we've got small accounts, smart moves. I think next week I see we've got new features. And then after that, we've got active trade management from the mobile device, which has improved a lot. And then, so you can sign up for any demos there. And then, so for today, it's how to trade with control and confidence.
Yeah.
So G-Money could maybe take some lessons on that.
That's
trading
for sure.
confidence. He's a little scared to let one fly.
And I will say they are calling it small accounts because I own the Johnny account.
Yeah, so they would have called it
IP, and we couldn't negotiate an amicable deal. So for now, you guys can call it small account. Talk to your people, have them, sweeten the deal a little bit. I'll give you the Johnny.
Small accounts, smart moves, confidence and control. To quote young Bill, don't be afraid, let one fly.
Yeah.
You don't need to size up every single trade that you do.
Yeah.
It can be a smaller trade, just getting your feet wet, and just showing you how to do that, define risk positions, and just different ways to, we'll be going over like the poor man's covered call. If you want to do something like, a covered call trade, simulate that for a certain period of time, we'll be going over how you could do that in a smaller account. Not everyone's got the big Johnny accounts. We're small Johnnies sometimes too. And if you just want to get started trading, this is a great way to learn.
And I will say, the last event when we were in Dallas, I had somebody come up to me with their son who was like, he was, like in high school, and he was paper trading. And I was like, I was talking to the dad, and I was like, give him a couple bucks and put on a $5 wide iron condor, $5 wide put spread, because it's not the same. It's not the same
at all.
when when you don't have skin in the game and you're getting auto fills and you don't have to cancel and replace or change strikes or move expirations. Like that's real. And you need to, like, small accounts, and small is relative, $1,000, $5,000, $10,000, like, it's all relative, but you got to put something on to really watch things and figure things out. You can't, and if you are paper trade with the amount of capital you would actually be trading with.
Right. Don't give yourself the $1 million account.
A $1 million account is, if you have $1,000, the $1 million account isn't
Not very useful. Not useful.
It's not going to teach you anything about trading. You got to have some skin in the game.
Yeah, and it's very different, when you feel it, and you see those trades move. And it's, it's different.
Oh,
when you
pain is
actually
real.
have to- pain is real.
Euphoria is real. You know what I mean?
Yeah.
Sure.
And then another thing as well, at Tasty Trade, we don't have any account minimums. So as long as you have the buying power for the trade, you can put it on. We don't have you need to have this amount to be able to place spread trades or something like that. Just open the account, select your option approval, and then you could trade with however much you have. As long as you've got the buying power for the trade, we'll let you place it.
Like it.
Awesome.
Yeah, so feel free to join that demo. And you don't need to have an account either if you want to just see us go over the platform and things like that. tastytrade.com/webinars/demo with an S at the end. We got a lot of different links now.
Listen, I'm a simple guy. I'm a simple guy.
I respect it.
Demos is good.
All right.
Oh, it's good. We got
top 20 symbols going through the system and their IVRs. We've got at number 1, PayPal. Did they have earnings or something?
They did.
They did. Yeah.
PayPal, 25. Tesla, 18. SoFi, 20. NVIDIA, 23. UNH, 24. GLD, 53. Microsoft, 31. UPS, 24. AMD, 54. Amazon, 40. CCJ, 66. Apple, 19, Meta, 31, Netflix, 15, iBit, 45, Intel, 44, Avgo, 24, Google, 47, Palantir, 29, and Wolf, 32. Not WOLF, because every broker had some issues with that, but WULF, 32. There we go. I've noticed SoFi shows up on this list a lot. That sort of surprises me a bit. Do you guys
for a small little stock like that?
Right? Yeah.
Mm-hmm.
Yeah,
I agree.
I mean, it's a higher volatility underlying, low priced, and has been much lower priced. And I know it got caught in the Reddit love.
Yeah.
It's kind of a challenger bank. So I think people like to, trade it and stick it to the JP Morgans.
That's right. That's right. Stick it to them.
Screw those guys.
That's right.
I love it. I love it. Out with the old, in with the new. Need some innovation. Need some innovation here.
Yeah, that's
Not
right.
just the old banks.
Count your days over there.
I do every day, son. I do every day.
Yeah, we'll also see, I feel like with SoFi, we'll see a lot of customers wheel that as well. Sell puts, get assigned, sell calls.
Yes.
And then, just do that strategy. With the lower priced underlying, that's something you can do. Mm-hmm. But with the higher price underlyings like Tesla, small accounts, smart moves. Might need to do a put spread rather than a short put.
Yep.
Or a strangle iron condor.
Thank you for not using Johnny.
Yep.
Because I would have to send you a C&D.
Yeah, you'd be coming after me. You'd be coming after me for sure. All right. Well, thank you very much.
Good job. Good job
Thank
out of
you,
you,
Quinn.
my friend. We're going to take, not a break, but we're going to take a little bit of time here and we're going to hear from this person. That's right, my other road warrior. G-Money, what's up?
Doing well.
Okay, you can get a little applause for you.
Yeah.
You don't get that when you go home.
Oh, there's my
There you go.
like that one. I hate to say it, Tony, you're my friend, but I am a member of the fire safety team here in the office. So your little leaving the coffee warmer on. I'm gonna have to run that up the
up the food chain.
I don't even think you're kidding about that, because didn't we have some sort of fire safety
Yeah, every year.
No, I know, but don't we have like people that are like the fire safety? Are you actually that person?
Police.
Like you have to. I mean, it's a corporate thing. You gotta have like,
I have the vest.
Fire Karen. What are you?
I'll put.
You're the fire Karen.
Fire Karen. What are you?
Laugh and joke while I don't have the vest. But if I come back here with the vest on,
Do you have
nothing's gonna be fun.
You got like a little fire extinguisher too, like
I'm only
a desk size one.
I'm only the assistant elevator monitor. So.
Elevator monitor.
You are the assistant elevator monitor? Are you really?
Yeah, I wasn't
Do you
joking.
get like a sash?
I have a fire safety vest, but no extinguisher. Todd,
That would be
Todd
funny.
McCarthy is the head.
Oh my God! Please, I will. You know what? You scared me now. Okay, we will never have a problem with my. I will make sure with my hot coffee pot.
Thank you.
Here, I will make sure that I shut off all the time. I will not be the reason why we have to have a fire or fire drill. Even.
Thank you.
With you two in charge, I would never put everybody in harm's way like that. This is.
I appreciate.
Talk about a deterrent.
I appreciate.
Deterrent
your
is not
respect
my
for authority.
desk going on fire. Now having you two in charge of us getting out of here in case of a fire.
I will say my favorite story is I've, volunteered to do that a year and a half ago, maybe 2 years, because I really like the vest. It looks great on my chair.
You better wear that vest next time. You're gonna wear that vest.
That's right. I wore it for Halloween last year, actually. A little last.
Yeah, you're gonna wear.
I could see that.
But
you're on Thursday, right?
Our first
Thursday. I want to see that vest.
Our first fire drill. The role of the elevator monitor is to ensure that nobody goes down the elevator because it has a higher propensity of getting yield. Yeah. You can't tell anyone to stop.
Yield.
Tell you to yield. Yeah.
Oh my God!
And it was a fire. It was a fire drill, right? No, we knew there was no threat, but we do this for a reason. And it was maybe 5 minutes before the alarm went off, and we were all at our stations already. And Mr. Scott Sheridan tried to exit out a little early and miss it, and I told him, please take the stairs. And I told Clink that, and I said, I told Scott to take the stairs. She's like, seriously, what is wrong with you? Either keep your vest or keep your job.
Oh my!
Good answer by him.
What if he, fell down the stairs, Junior? But luckily, I still have the job and the vest. So
incredible. Do you have yearly practice runs?
Yeah. Every year we'll have. I'll let you know. I'll clue you in on
Thank you.
I'll give you the.
I'll be looking for that email from you. Hello, team. Today is our annual fire safety drill.
It's probably biannual. You do it twice a year?
I'll get back to you on that.
No.
You don't know that? It was one of the questions on the test.
It was one of my initiatives. What do I want to work on? Is making it quarterly instead of annual.
Oh my God. So good. So good.
I almost wore my Tasty FX shirt today. Honestly, I
Really?
like you. I almost did it. Yeah.
'Tis the season because we've got, oh my goodness, it's like Super Bowl week for
Fed.
me and the Tasty FX team. I mean, it's going to be a ripper of a week. Not only do we have the Fed tomorrow's going to be just a central bank bonanza. We have the morning.
Is this you excited?
Yeah.
This is an FX guy excited.
In the morning, Bank of Canada. Yeah, get ready. Then we've got the main event, Fed Chair Powell and the FOMC decision in the U.S. afternoon. And then for you yen traders out there, buckle up. It's going to be a long night because we've got a Bank of Japan meeting at 11 p.m. So, I mean, wow. You're going to have to pull your graph twice over.
That's right.
Even before I even get in here. Right.
Oh my God.
And the
What a
yen is
day.
up this morning.
Yeah.
I mean, 345 ticks, pretty good move.
Yeah.
Yesterday, a little bit muted, but today we're already seeing the dollar firm up a little bit, especially against those European currencies.
Yeah. British pound.
Yeah, British pound. So we had some UK inflation metric. I think it was on the retail side, softer than expected. That pricing into perhaps more Bank of England cuts. The British pound not doing so hot today. We look at U.S. dollar, Canadian dollar. That's at the bottom of its range, dating back to the beginning of October. So, with all these events, this event risk, I mean, it's really your trading strategy if you want to be proactive, if you want to be reactive. But that US dollar, Canadian dollar, perhaps setting up if that starts to reverse a little bit, maybe we get a healthier range there than maybe some of these other dollar pairs that could be consolidating before the Fed. And then looking
I get along that.
Yeah, looking at...
and I'm in, but you wouldn't know because we don't have the ding yet.
Ding. You're in.
Trying to get in.
But yeah, in other news, we've also got the Trump tour of Asia, which is also hammering FX markets right now. You wouldn't see it necessarily when looking at the dollar yen, but U.S. Commander-in-Chief Donald Trump met with the new Prime Minister of Japan overnight, and came up with, they said they're the strongest of allies. Whatever you want, Japan, you can have it. Already gave them some missiles, revving up their defense spending under their new administration. So the U.S. dollar versus the Japanese yen, a little bit flat. Market's not really seeing who comes out ahead on a relative basis. But if you look to that pound yen, that's the biggest mover of the day on my board, down a full 1% on some
Pound yen.
not only UK weakness, but some Japanese strength. So that's one that's coming off of its historic highs. So perhaps not a candidate for short-term mean reversion.
Yeah.
Perhaps this could go a little longer if this is a whole regime shift for the Japanese yen. I mean, we kind of priced in what this new administration would mean, and the perception was yen weakness. Perhaps not the case if their spending actually increases growth and we give them whatever they want. That's a pretty strong ally to have. So a lot there to do in the non-dollar space as well. And if you're looking just at those European currencies, if you're just looking at euro dollar and British pound dollar, you see a high correlation between the two. Perhaps you think they move 1-to-1. Well, if you look at the non-dollar cross, euro, British pound, that is at a high right now, dating back to.
So you got some extremes in these.
Yeah.
You got some extremes. You can look a little farther than the dollar if you're thinking, U.S. dollar won't make any substantial moves ahead of this Fed meeting.
Oh, that's a big move in the euro.
Yeah,
pound.
so
And that's because the euro is relatively strong today, and the pound is getting killed.
Exactly. Yep. So, I mean, if you're a contrarian trader, perhaps you want to see a little more, of an indication of this turning around before you jump in front of it. But if you're trading this small and willing to layer into it, then maybe this price level is enough to get you.
So I'm going to sell that. So I'm short the euro against the yen. I'm short the euro against British pound. I got long the U.S. dollar against the Canadian dollar. I got long the U.S. dollar against Swiss franc as well. That
all
one's
small,
That one's
right?
yeah, these are all small. They make fun of how small it is.
Right.
They do.
You know?
Just let me know when you put them in, and I'll ding.
They're in.
Ding.
Three dings. I want 3 dings.
Yeah, you got to add the ding to
A
that.
flurry of fills.
How could you not have it?
I know. That was an oversight.
Well,
Who's in charge of it?
Not me. 24/5 markets, we don't want dings waking you up, middle of the night.
Yeah, you do.
Yeah, you do.
Yeah, you do.
Yeah, you
I would
do.
want to be alert if I got filled. Yeah, I do.
Okay. That was a miscalculation on my part.
Yeah. Or you just silence the phone.
Right.
I didn't think about that.
And turn off the sound.
Surprised at you.
Unbelievable.
Ooh, I was doing pretty good until then, though. Yeah.
That's
Or
right.
if it's not how you start the race, it's how you finish it.
Got to write that one down, too. Shoot, that's good.
Good job out of you, my friend. What do you think about this market today? Even the S&P is up 7, really going nowhere. Mid-range for the day, very tight range. We didn't do a zero day today. We kind of missed the boat on that one. I have to remind you about that. We should have done one today. But volatility is up 18.30, up 30 cents, trading near its highs with the market higher. I think this is because of the news coming out tomorrow.
Yeah, you got so many earnings. You
Plethora
got
of FX news too. Sure. Totally agree. Bonds up 9. Bitcoin was over 116, almost 117. It's back down to 115.7. Oil down $1 and change. I think we're going to take a quick 90-second break. Nothing really to see here. All quiet so far. Agreed? Low volume day yesterday. Low volume day today so far.
Yeah.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. Who comes up next? That's right, Liz and Jenny.
Live
from the floor of the SIBO.
Yeah.
Peace, CBOE.
Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Everybody, and welcome to the Tuesday edition of the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Deerking, and it is a fabulous Tuesday in the middle of the SPX bid, live from the SIBO.
We are live from the SIBO. It is one of our two favorite days of the week. Tuesdays and Wednesdays, slowly becoming our favorite day of the week. We take the train in, we relax. Oh, but first things first. So we just had somebody walk by. His name is Jimmy, and his wife Esmeralda is a breast cancer survivor, and he gave me this pin to wear today. It's the tail end of breast cancer Awareness Month. October is Breast Cancer Awareness Month, and we're very, very happy that he gave me this pin, so we appreciate it.
Shout out to Esmeralda, breast cancer survivor, and to Jimmy. So a few more days left in October, Breast Cancer Awareness Month, and that was nice of him to come up and give you the pin.
It is. You know what? We've got it. Tomorrow is we're still in October. I might see if I can wear pink tomorrow.
Maybe I'll try wear pink. I'll wear pink tomorrow.
Yeah, we're wearing pink tomorrow.
Pink tomorrow. All right. So also shout out to Frank the Great. He's on YouTube, manning the YouTube chat. He asked us to ask our train conductor a question about gold,
which was pretty funny, by the way.
I know.
But we don't. Our train conductor, the one that there are as a train. We're not like in an unmanned train on the way here, but we're not friends with our train conductor on the way down. We are friends with our train conductor on the way home.
Our train conductor on the way in is Spruce Up 8, a little bit of a rally. So our train conductor on the way in is very
business.
He's all
There's
business.
a lot more people though, because we take an earlier train home, so there's only a couple of us. Our train conductor will sit with us sometimes.
But on the way there, it's a busy train.
Tickets.
So we could not ask him about gold, but we will ask our stock market sage on the way home your question about gold.
I'm pretty
Frank.
sure he's a quantum computing sage, because everything he's given us so far has been, hey, have you seen
quantum? Yeah, he does like qubit. He does like that qubits.
He likes.
He likes Marriott. He's a world traveler. He likes Marriott.
He likes Marriott. He likes qubits. Mm-hmm. He also likes JD. Remember that?
Oh yeah, he does.
JD.
He does.
He's always coming up and be like, "Where's JD today?" I was like, "My kid or the stock?" I can tell you where one is. I can't tell you where the other is.
I will let everyone know my daughter's car is fixed. Wonderful service. We tried to jump.
So it was the battery, not the alternator?
Yeah, we tried to jump it. It wouldn't jump. I called this service. They came to the house, looked at the car. They brought the wrong battery. So then they went to AutoZone right down the street, got the right battery, came back, put the new battery in, car started. And that car is a 2018. It was the first time we ever changed the battery.
Well, that sounds about right. They last about 5 years.
Yeah, I know, but that car's pretty old.
Yeah.
That car's 8 years old.
Yeah. My minivan, which is a tanker, by the way, is I think older than that, and I don't think we've ever changed the battery.
Really?
They run forever, though, these minivans.
Oh, well, I've changed the battery on my boat multiple times.
Well, I think you get water corroded. But nonetheless, it's been kind of a pretty lull day. Do you want to jump in? I want to take a look at where VIX is.
Okay, wait, before we go into the platform, I've got some big news, Liz. I thought I was having a run of bad luck between my furnace breaking, the car breaking, all these things. My luck turned around. Last night was a big deal for me since I'm the only girl in our 15-person fantasy league. Let's go to Twitter, if possible.
We're in.
Champion. This might be the one and only. I had to take a screenshot. This might be the one and only time I'm going to win my fantasy league this year.
What do you get?
Money.
How much? Can I ask?
So this league, every week...
Fame, fortune, glory.
I'm only going to get $110 this week. Every week the winner gets $110, but then there's more at the end for like the most cumulative points. Or
So I didn't know if it was weekly.
Weekly.
It is. You love weekly.
Yeah. So I texted the leader. I was like, great, this is helpful. My daughter's car needs a new battery and I need a new furnace. And they're like, this won't even pay for the tax on your furnace. The furnace is $15,000.
I know.
It's a crazy kind of, because it's it's like air, heat, all in one.
Yeah, and it's a smaller unit.
Small
it's gotta fit into a
unit.
certain spot.
Yeah. But I did win $110. More that I care more about the bragging rights than the $110.
Okay, now I would like to state 3 things that are super happy, and you can see this here. You beat your husband. And you beat your brother.
Yep.
I think that's more important than anything else on there. So, yeah. Good job.
So it was exciting.
I don't know.
Exciting.
I just really feel like Luker 21 is going to win the whole thing.
No, so far there's a guy. Wasn't in the lead this weekend, but he's won almost every other week. Yeah,
he's not on here.
But I'll tell you, for anyone who's in a fantasy league, this is one where you pick a new team every week. I changed my strategy. This is the first time I didn't pick any star. Like I didn't pick any high price star.
Well, sometimes they're gone. Well, sometimes they get kicked out, and then
or you're just spending so much money. Yeah. You're spending so much money on them. Like you remember when I was like, Jamal, pick my fantasy team, and he's like, this guy, and I was out of money after 3 guys. This time I picked let's say the stars are $8,000. I picked all people in the $5,000 to $5,000 range, 5 to 6. So I picked all average people, evenly spread out my money instead of star, and then low.
In the words of Tom Sosnoff, never fade a superstar.
I didn't take any superstars.
And she won, ladies and gentlemen.
And I won. I'm going to try this strategy next week again.
See,
no
wait.
stars.
You better be on this leaderboard next week.
I'll let you know. I'll let you know. But
all right, let's pop into the platform real quick. I just want to take a look where the VIX was because I feel like this is kind of a precursor. So take a look at this. Market unchanged-ish, right? I mean, we're all over the place. But VIX is up a little bit. Up a tiny little bit.
Up 33 cents. You know what else is 333?
Ooh. Good segue.
Well,
it was 3.33.
It was 3.33. We want 3.3.
Now that being said, this account doesn't. We don't. We are locked and loaded with our $50. We are at 100%. This will all just go away. It is out of the monies.
Yeah.
But we're looking for 33333. We don't know when.
And we looked at it on the show. I said, my birthday's 3-3, so I'm going to put in the 3-3 when natural gas hit 3-3, and I bought the butterfly. And we looked at it.
I'm telling you, I bought it with you too because I was like, you're not making $1,000 without me. I think I paid $90.
Like $90 for it. And we could have done it on the show, but then, the chances of pinning a butterfly in natural gas, honestly, the chances of pinning a butterfly in natural gas are high-ish. And I always, in my mind, they always go down. So let's just kind of go, I'm going to go into So we'll see where it closes.
Keep in mind, look at this right here. So we're in the 0 DTE natural gas, so it's 3.339, 3.3341. The next cycle is 3.86.
At least it's below 4 because it was over 4 for a while.
Over 4.
So maybe we need to start setting ourselves up for the 27-day.
But you can see even in the 26, if you look at the 26 or the 59-day, it's got 4.138. So these are all different. They're different prices.
Yeah. Let's start setting ourselves up for the 27-day.
I think it's a little high. So taking a look at this, I like when I have something. What do we have here? Let me see what we have. We have 32928. And
maybe just take it 10 ticks higher, 3.1. Can you do the 3.1?
Someone's on tape.
What was going on? I don't know.
So this is, but we only do the spread. Hold on, let me do it. I'm just doing what I do.
Maybe we have to,
we sell it, right?
Yeah, we usually sell the spread.
So you sell it by it.
Wait,
you're getting 8 cents for it.
$80. No, you'd have to bring it up to like 3.2, 3.
You almost have to bring it up pretty far. I don't know that we do this right now.
Yeah.
I mean, that's not bad.
That's not bad, 160. It's just,
I think it's too high. I think we got to wait till a little bit of a pop down in the next cycle.
But then sometimes natural gas gets away from us.
It does. It's just easier for me with these when I'm doing the downside. I like to do the downside ratio spreads in these. I will never do the upside ratio spread in it. It's not my cup of tea.
Yeah, sure. I get it.
Because it could go up. Because I have a naked option in there.
I will say this morning, whether it was 5 to 9, 9:05, anyone who would have just sold put spreads in SPX, they all came off. Mine came off, hers came off, they all came off.
All you need is a little bit of a pop. I think we did it a little on the early side because SPUs were actually unchanged when we put it on.
But at 9 o'clock, they were still about unchanged.
Yeah. I mean, no, we haven't been moving.
Yeah, you could go to the SPX. Why don't you go to the SPX minute to minute chart?
Minute to minute.
Yeah, we'll go to the minute to minute chart and see what's going on. At 10 to 9, I think the SPUs were about unchanged, and then it quickly got a little bit of a pop.
Hold on, I'm in monthly. 1 minute.
1 minute, 1 day.
1 day.
1 minute, 1 day.
So this is where we've been the entire day.
So yeah, go to 9.
We put ours on around here. That's what I'm saying. I think we got lucky.
No. See that? Okay, I see when the pop happened. We were on the train. Did you see when that little pop happened?
5 to 9.
No, then after 9. So after 9, move it to the right, 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 to the right. There. That's when. I feel like that little pop is when we got out.
Jenny, you got out like right here. You put it on. You put it on here. You got out like right here.
You think so?
Yeah, and I got out like right here, 100%. We were out before 9 because we put them on at like 43.
Well, we got even higher than that at 938. So like anyone who sold put spreads in SPX, they're out. They got out.
But this has been within the range, and that's all we're looking for. The whole point of these put spreads, and we're going to be getting back into it tomorrow, but the point of these put spreads is you're looking for a little pop. It doesn't necessarily mean that we're going to end higher on the day. We could actually wind up being lower on the day.
Right.
We're looking for a pop intraday. That's it.
I know when Jacob's done these studies, he's so concerned about, well, they perform well, we were in a bull market. What if we're not going to be in a bull market? But we're not. It doesn't, like, to your point, it doesn't matter if we're down on the day. We're just looking for a little pop after we put.
And we could have a violent down move. It doesn't matter. You're looking for a tiny little pop. That's it.
Okay, so we have a busy day. We're taking live tweets. Send us live tweets. Include the hashtag LIZJNY.
We have a busy day because we're also on last call. So we will be looking at earnings. We can pre-look at them a little bit, kind of decide what we're going to do, because this week it's heavy earnings. Today's earnings, tomorrow earnings, Thursday's earnings. I know we got all the big dogs.
It's going to, well, I don't know about today, but tomorrow.
Today too. Hold on. Let's go to Bob's list real quick so we can do that.
Okay. Yeah, let's take a look at Bob's list.
So today you've got EA, BA, Caterpillar, Etsy. Like there's a lot of them. Tomorrow's the Meta, Microsoft,
Google.
Yeah.
So tomorrow is
and
the real.
Thursday is Apple, Amazon. Wait, hold on. I'll go this way. Thursday is Apple, Amazon, Coin, Reddit.
Yeah. So it's a busy week. And there are certainly earnings in this list for today that I want to take a look at, but we've got last call. So we're going to have a busy last call.
Oh, look at this. So Rob Shepard comes in, and we'll go to this too, but Rob Shepard comes in, Antonio Batista, 41-minute, $50 wide, SPX, $107 gain. Thanks, ladies.
Nice.
Yes, I love this. I love it. So
and then look at Florida 7. Thanks, ladies, for SoFi. Got out with a 30% GTC at the brief little move up at the open. And look at his new profile picture. Florida 7.
It's a chat. I told you it's a chat GPT caricature. He even says it. I didn't say that. He said it.
And it's the
look at that handsome devil, Florida 7.
Yeah, Florida 7 looking good. I mean, I know. Well, we've been on a long time, and we met Florida 7, or we've had Florida 7 involved in the show.
Oh, we've seen him in person
for years. So I know when Florida 7 started, he was very young,
and then he aged it.
But now it's probably 10 years ago. And so we used to say, like, we used to
apologize in advance for whatever comes out of her mouth.
No, we used to have some people who were like kids, right? We knew them as kids. Like Florida 7 was he might have been 19 years old. Like he was like a kid, but now he's probably a young adult.
He is an old adult. GPT.
But we had we've had some young kids who started on.
Alex the Kid Trader. We don't call him a kid anymore.
He's not a kid anymore.
He works in this building, and he's been on before. He's got his own office in this building. Alex the Kid Trader's killing it.
I mean, when you're on air for 15 years, your viewers grow up too.
They grow up. Well, Quentin.
Yeah.
Who was on right before us? Quentin from the trade desk. We met him when he was 8.
I know. Someday Quentin's going to be our boss.
I know.
I'm not kidding.
He's great though. He's wonderful. I would love to work for Quentin.
Yeah.
Quentin, we've always liked you. We think you're a very
Quentin, you're one of our favorites. Okay, so speaking of earnings, let's look at our earnings trades from yesterday. Yesterday we did 3 diagonals. We did a diagonal in SoFi, UPS, and PayPal.
I'm going to turn these upside down.
All low risk. We paid $150 to $250 for these diagonals.
So I opened up UPS first. I just flip-flopped them, so we're going bottoms up. So bottoms up, everybody. So UPS bottoms up. UPS at the top. This was a $5 wide diagonal. I'm going to go into here. So you can see this $5 wide diagonal where we sold the at the monies for the cycle and bought the farther out one that we sold the expected move in the 4-day and at the monies in the 11-day.
It's interesting. If you go back to this week's, we sold the option at the expected move, and it's right there. So it's right at its expected move.
Yep,
we're right there, right at the expected move. There's still a $1.20 extrinsic value in that, but I would say just close it and take our 222 ducks.
We're
not. I was going to say I never hear them yell ducks anymore, but
we're not on the floor at 222. You know what? When we're on last call, right before it starts, I'll yell ducks.
Ducks. Okay.
Okay.
Sounds good.
I never hear them yell ducks.
We're not here at 2:22.
Okay, so I'm going to take this and close it. We're not trying to get that extra little bit. We'll take our $200.
Yeah. It's funny because, so growing up on the trading floor at 2:22, the floor would yell ducks.
Oh, our Nike GTC hit too. I don't know if you can see that.
Oh, good. And so someone was asking me for like stories from the floor or something. My decorator, my home decorator.
And you told her the duck story?
No, I don't know. So all I know is then whenever she would be at my house, she would wait for it to turn 2:22, and I'd be at my computer trading, and she's doing her thing, decorating, and it would turn 2:22, and she would yell in my house, ducks. And I was like, it's not quite the same.
And Sticks was 11:11.
11:11.
Sticks was 11.
Yeah, no one here says like Sticks, make a wish. They say, or no one at 11:11 says make a wish. They all yell Sticks.
Are we not here at 11:11 either?
No. We're out the door.
We leave at 11:09.
I'm gonna wait till 11:11 today.
I don't think they're there. Okay, but these are pushed through, so Jenny's gonna do it on the other side. So we've got Nike and UPS that were pushed through. So those diagonals were pretty good. We made $200 on a $5 wide. So we made
very low, like for what we paid for it. Great return on capital. We probably paid $220 something, $210.
So yesterday we wound up look. I'm glad we did this. So let's walk through this real quick.
We're killing it in UPS.
So yesterday we bought back our put because we only would have made 81 cents.
Yeah, we made like $30 or something.
Yeah, so we bought back our put and we would have only made an additional $81. So we bought that back and then we paid $210 for the diagonal and we closed it out for
$417. So we made $200 there.
Good.
That is good. And so
wait a minute.
What?
You know what I just realized? Hold on, let me go to it today. We put that Nike on yesterday.
What?
Yes.
It was the zebra.
That's what I'm saying. I was like, wait a minute. Why are you so excited? We put this on yesterday, and I put a GTC
I was thinking it was just some short puts in Nike because we did have short puts in Nike before. But then this was a viewer on Twitter.
Nike.
Thanks for the $100.
And it's down $1, and we took $100 out of it last night.
Yeah, so we put on the zebra. We said we'll take if it goes down $1, we'll make $100. We put in the GTC. It filled overnight.
Yeah.
Nice.
Yeah.
Nice work. And I'm not saying nice work from us. That was from a viewer. We can find it on Twitter.
But I was really glad we put a GTC in because, that's why I went to Nike. If you look at Nike right now, it's down $1.33. We know that if it goes down, it should be what the stock is. We put it in for $1. I'm happy about that because Nike bounced right back.
Like this wasn't our assumption. It was someone else's. Yeah. We were happy with the quick $100. We could have ratcheted put zebra or call zebra. Either one. We could have ratcheted it, take some credit, and take some risk off the table. But we were happy.
Lisa. Put zebra on Nike. Thoughts?
Lisa, thanks.
Yeah.
Excellent. Nice.
Yeah.
All right,
okay.
Good. Okay. So we're on a roll today because...
Sorry, I was so excited when I realized we put Nike on yesterday.
I forgot about that. All right, the SoFi trade, SoFi is down 40 cents.
Now, that being said, I'm still in the minute-by-minute chart. So it was Florida 7 who said they got a little pop and they got out.
Yeah, they got out. So look at that.
This is today's. So at some point they got out.
If you go to 8:30, like you could go to 8:30 when the market opens.
8:30.
And it was dropping down, but then...
This.
Well, I think it was So
you can't see that on there, can you?
See what?
So SoFi pops all the way up to 31 right here, where my cursor is. This pop.
What?
You can't see it.
And that's crazy.
Yeah. So it pops up to 31, and I bet that's where he got out.
Why do I not see that on the chart?
You can kind of see it, but listen. I'm visually impaired, but I can't see that. I can see it.
I can see it on your computer here. Yeah. Okay, well then that was good. He got out. Our SoFi is a very small loser. We're down $15, but I would just close it. And let's look at our earnings trades as like net of 3. We had 3, 2 winners, 1 loser. I don't mind taking $15 loss in SoFi.
So SoFi, we put it on we paid $129 for it, and we're going to sell it for $115. We're going to take a small little loss. There's nothing wrong with that.
That's fine. Okay.
So SoFi, we're going to take a little loss, but I'm okay.
It's loud down here today.
It is loud down here today.
But I don't think it's loud with trading. I think it's like the Halloween week. They're all getting wound up.
They do seem like a low. I mean, they were just making fun of somebody on the ticker.
Yeah, they're kind of.
The natives are restless, as we like to call it. Okay, so there's SoFi. What was next? We did PayPal, we did SoFi, and we did UPS.
You closed UPS. You didn't close PayPal.
So PayPal went up $7. Let's see. Let's assess the exact same situation. We know we sold it at the expected move for the cycle. I'm going to open
Yeah,
this up.
we sold the 3-day, so it's a little beyond. PayPal up $8, a little beyond the expected move.
And I think it got a lot higher. So this is
you got to go all the way. No, you're at 6 in the morning.
Oh.
You got to go to 8:30.
No, but you can see where the stock is trading too. It's kind of fun to watch.
Yeah,
So,
I like the minute by minute.
So it opened at 8:30. It's continued to go up since then. So
yeah.
Okay.
But anyway, how much did we make in PayPal? $281. For paying $224, we was $224, made $281. That's not bad.
So this looks like it's going to make 125% of what it can make.
Yeah, because no, it's 125% of the $224
of the dollars. We actually want it to be over 100 because we want to pay less than 50%.
Right.
Yeah.
So we paid $224. We're going to close it for $503. Take our $279. Honestly, yesterday's earnings trades, we're getting back into baby stepping back into diagonals. Not bad, not bad. But now you'll see when the big dogs come out with earnings this week, they're all going to be expensive. Those diagonals are all very expensive on the larger products.
They are very expensive on larger products. We can kind of take a look at some of those too.
Okay.
Now, is there anything else we want to manage before I jump in? I want to show some other diagonals. We also have Kai's market measures too, so maybe we do that before earnings because we have last call.
Right. We have. Yeah, we can save most of the earnings for last call. As far as anything else going on in our account right now,
so let me ask you this: Disney. If you open Disney, we've got 24 days left. We've got 40%, $59. I'm half tempted to take that off.
Sure. Yeah. So Naked Put is probably using $1,000, maybe $1,200.
So we're going to take that off. It's 88 cents. We'll see if we can get filled. And we're filled.
Okay, and you're filled.
These are all getting pushed through. We've been doing a good job taking things off, so we have quite a bit of buying power. So Disney's pushed through.
Yeah, okay.
Anything else?
And what? Take a look at. Can we look at oil? I know.
I'm gonna flip it back and forth. We have the MCL position.
No, I thought we got out of it.
No. We have MCL. We have a Jade Lizard and MCL that we put on. No.
That was a protection. Yeah, we took off our regular crude oil position, and this was just like a protection. So I feel like we could get back into CL. If you go to the chart, it had a pop up, but now it's
I'm gonna go back
falling
to
a little bit.
Hold on.
Oh yeah, because you just got the minute.
Yeah, I'm gonna go 1 day.
We'll do the. Just go to our 20-year daily chart.
This is our usual. Okay.
So it had that pop up. We got out of our short puts in crude oil, and now
we have protection underneath it. I would say in the 20-day cycle.
Yeah. So I don't mind because with that downside butterfly, just sell the 58 puts for $1.
Or you could sell the 58 puts, which would bring you down to 57. Or I could bring it down to. What do you think of this, Jenny? I'm just trying to get creative because there's only 20 days left. What if we went for the 57? And then put the Jade Lizard on top of it. We can get about $1, which will bring us into the butterfly range. Oh no, it's 88 cents.
So I can see the.
No, you can't get that far.
The puts we had just taken off were the 61. So going down to the 58, we're actually, it's not bad. We're giving ourselves more room, and then we have that butterfly that would kick in below it.
So the butterfly. Now I'm just gonna show you this on the curve view. Analysis.
There we go.
So this is with it in there, right? So the only spot this is where there's a spot where we could lose about $100 through here, which I'm fine with.
All right, and then where does that butterfly kick in?
The butterfly, because we have a naked option, you're not going to make that much money.
Wait. I'm trying to see.
Because you have the naked option, you're not going to make that much money on the butterfly because once you get underneath there, you're going to make some money back, but not all of it.
56, but once we get below, that's what levels it. Okay, so our butterfly starts at 56.
Yes,
that's what levels out our loss.
So here,
but then once you're beyond 54, so if crude got lower than 54, that's when we would start losing.
And that's what you should see because here's our butterfly right now. We have the 56, 54, 52. So it's a level off situation here, where you can't lose that much money through there. We don't only $94.
We don't have that butterfly on to thinking, crude's going to go into the middle of the butterfly. We have that on to make money on that butterfly. That was just some protection.
Well, and we locked in a credit. We locked in a credit when we did it, so I don't mind selling this. We'll sell it again. It's got 20 days left. We're using $835 to make 99 cents, or $99.
Yeah, and it's short term. It's only a 20-day trade. I know normally we would say roll at 21 days. The only reason we're using that 20-day cycle is because we have that downside butterfly in there.
We have it in there, so it's kind of like a little bit of a protection.
Okay, so you're working
now how
that.
about we go to Research Corner.
Option Jive from Kai sends this to us. They are great. Our research team is amazing. They are always working. This is the Option Jive.
We haven't done this in a while.
No. I feel like we haven't been here on a Tuesday.
Yeah, we haven't. I did it with TP once.
Last Tuesday, I was at the ring ceremony.
Yeah. So it's fun. It's kind of fun to go through this. So this is what happened last week, Research Corner. So this is last week's weekly summary. Japan's got its first female prime minister, and the Nikkei hit Nikkei 225 hit record highs as the yen weakened. That was last week.
And you could look at the ETF, the Japanese ETF, and
we're
see.
going to look at the yen and the Nikkei isn't the Japanese ETF, is it?
No, but I mean you could just see like Japan in general, like an EWJ. If you take a look at the chart there, you could see the jump that it had last week. Like you see those, look at those jumps that it had. And this is the Japan ETF.
So that is the Japanese ETF, and we're going to go as we go farther. He does bring up some things.
Okay, so strong Q3 earnings with heightened post-earnings volatility, and we did see heightened volatility.
Yeah, we did. We did see it. All the major indices except the Russell 2000 reached new highs, and even yesterday was a lagger.
Russell was? Mm-hmm. Okay. Slightly better than expected CPI and PMI data lifted sentiment. So it was a...
I can't believe we're getting this with the market shutdown, CPI and PMI.
Well, I think, didn't they hire special teams to bring it out?
They brought them back in. Yeah, they said it was important. Okay. Now, the next week ahead, the Federal is expected to cut interest rates by 25%, and that's priced in. That's what the
like 0.25%.
That's what the CME Fed Watch says.
Possible first meeting between Trump and Z during Trump's second term. Thanks for jumping in on the Z. I don't know.
President Xi.
It sounds right.
Okay. The busiest week of earnings season. So we've got Apple, Meta, Microsoft, Google, and Amazon, and those are tomorrow or Thursday. Apple and Amazon are tomorrow. I'm sorry, are Thursday, but Meta, Microsoft, and Google are tomorrow.
Were you surprised Amazon came out yesterday with the news of they're cutting all these employees, slashing, doing all these layoffs? Were you surprised that they came out with that 2 days before their earnings announcement?
No.
Why they wouldn't have just included that in their earnings call?
Nothing surprises me anymore about these. And this is really, I think this is pretty interesting because we're up so high. We're so frothy in these markets. I'll be very curious to see what these do.
I know.
And I don't think, it was last earnings cycle where we had these big ones, but it was like a tale of two cities. It would be like, I'm saying it, but like Microsoft was up and Google was down. Like they didn't all go in the same direction.
But I felt like for the most part, I don't know, but I just remember thinking they were mostly up and people saying like, okay, we won't really see the effects of the tariffs until the following earnings cycle, which would be this earnings cycle.
It was a tale of two cities last time. Okay. You had some up, some down, and it was all over the place. And I know this because I have 100 shares of all of these. Okay, so then the index weekly performance. So the S&P, look at this, green.
Everything green.
Yeah.
Cancel crash. Everything's green.
I mean, the NASDAQ and the Russell, how are they saying it's a lagger if the Russell's up 2.5%?
And 2.5%. Well, that was the week of 1020. Yeah, we'll go back to that. All major indices except the Russell reach new highs.
Okay, all right, Ty. I'll give you a pass on that one. Because it's up to, it wasn't the lagger, it was up a lot, but it wasn't at its new high status.
Hey, and you know what, I can't remember, we're lucky we can remember yesterday, we barely remembered the Nike put zebra, but there was a Russell trade last week. So I don't know if someone wrote in or we were looking at the Russell, someone said they've been using, we talked about IWM, we talked about the RUT, and instead of the S0DT SPX.
Oh, using the NASDAQ?
I think, no, using the IWM or Russell. Yes, we were here, and someone brought up the RUT.
So I know that TP uses it. Here, let me go back. Let's go back to this.
And it might have been on Twitter. And so just on the heels of that, I wanted to mention I got emails that day. Of other viewers who said they used the RUT as well. And
so
Bill,
TP does too. He doesn't use SPX. He uses RUT.
Okay, I thought TP used to use NDX. Maybe he uses both.
I think he uses both.
But I did receive emails saying there are people who use the RUT and they like the RUT.
It's bigger. Well, no, it's not bigger than SPX.
But maybe it doesn't move as much. I don't know.
But conceptually, it's the same, right? So I just want to go to. I'm gonna
like if you go to the 0 day, because they have every day,
I'm gonna go
right?
to open interest and volume. I want to do this real quick. Okay, hold on, and then I go to 0 day. I'm gonna clear this out. So I think the big difference here, and this is what we talked about last week, from my understanding, and I could be wrong, and I know we did this. Take a look at your volume and your open interest in the rut versus, okay, just look at that. You've got hundreds. There's no Ks anywhere on this board.
Right.
Versus your SPX, which we are in the middle of the SPX bid. You go to 0DT, compare apples to apples. You're at 36,000, and the open interest everything's got a K.
And I get that, but I just wanted to bring it up because I did receive emails of people saying, I do the 0 days, but I do the rut. And the reason being, like if you look at SPX, we've got a 16% implied volatility, $15 expected move for the day.
Yeah.
And if you go to the rut, it's half of it, right? You've got
$8 move.
$8 expected move. Is that well? No, 25% implied volatility.
Yeah.
What was the SPX?
Higher or lower?
Lower. Yeah. Yeah,
That's
it's 16%.
But everyone's going to use it for different reasons. People might feel more comfortable with the rut because the rut is a quarter of this price to its $2,000 versus $6,000.
I mean, for a while, I was selling strangles every month in IWM instead of SPY. I just felt more comfortable in it. So if there are people who like the 0 DTEs and rut versus SPX, sure, let them do it.
What do we have in IWM? Now that you IWM, we have
30, 20, 57, 67, just a $10 wide iron condor. This was, I remember, it's all coming back to me when we talked about Robin, the super trader, how she made all of her money selling IWM iron condors.
This is in perfect shape. It's fine. We're down $7. We made $11 back today, so this is fine.
Okay. So again, you've got a lot of products to choose from.
You do, and I think I like both of those because I do like the 0 DTEs, and Jenny and I were talking about it on the train. Whether it's RUT or whether it's SPX, you're done. Like once you're done, you're out, and that's what Blue Wackadoo always says. He's like, done for the day, thank you, Mr. Market.
I know, right? When you're using these 0 DTEs, we have scrolling positions. Like if you go through our positions, you're scrolling for pages.
I mean, this is a scroller, and it's not here. I mean, I'm pages after pages. Like mine, I don't even get to the C's on mine.
So we have a lot of positions, and our accounts move with the market, right? They move with the market. So to have, the earnings trades that you're into and out of overnight, or the SPX or the 0 DT where you're into and out of in a day, and then you can be done for the day and go to bed with no risk, wake up with no positions, and then start over again. It is kind of nice.
It is really nice.
It is kind of nice.
It is. I do like that, and then you're just kind of done. You look at it I kind of like that concept, and I know we talk about like my son's account all the time. My daughter's turning 18 in May, and I cannot wait because I want her to just do this. I want 2 different test accounts.
Yeah, I get it. But when I look at my P&L on the year, I made the bulk of my money in.
You are erratic in SPX.
No, but even it doesn't. Let's say. Even if I were consistent in SPX and had like great P&L in SPX, it's nowhere near like my net P&L mostly comes from.
But you also have a bigger account, so like
mostly comes from selling puts.
Hypothetically speaking, she makes $30 a day, which is less than what it would be if it's $50. Like they're on average about $50 a day. So say on average she makes $30 a day times 252. That's $7,500. That would double her account. That would be 1.5 times her account because she's getting a $5,000 account.
I mean, with doing that,
with going to bed with no risk.
And again, it's Annabelle. She's got a $5,000 account. We talk about this with the kids. With the kids, it's much easier to make. With a smaller account, it's much easier to make a very big percentage because you're not going to take the $500,000 account and go all in on the 0 DTE every day.
So if she's risking $500, say that's 10% of her account.
Yeah.
You're not going to do that.
Yeah, you're not taking it.
You didn't this morning take 10% of your account and put it in
SPX.
Correct.
Right. This morning I was like, oh, okay, I'm willing to risk like $2,000 to $3,000 on my SPX.
Yes.
And that's what I did. I'm going to slowly start scaling up until I get to Jack Tucker.
It's good to have goals. I agree.
Yeah,
okay, so everything was up, the weekly performance. Now here, this was, and I know this because I actually, when we were talking about it, the week before this, it was 166 was the move. So it's been 166 to 119 to 96.
VIX is only a 16 now.
I know.
Yeah.
So it's kind of crazy. So I do like looking at this. So the expected move for the week of the 27th Was this last week? Yeah. No.
We're the week at 10:27.
Yeah, so then let's go and
16.4.
see.
We're right where it is. We're 16.3.
Let's go back to SPX.
Right? Or 16.
No, I was going to see what the expected move for the rest of the week is. So that'll bring us to 3 days. It's gone up.
And VIX is 16.27, so right where it was.
It's gone up. So the weekly move as of Monday was, let's go back to
Well, I think with so many big earnings
No,
this
it's gone
week.
down. I'm sorry, it's 80. It's 80.
Okay, but with so many big earnings this week, I think there's going to, vol's going to stay bid a little bit with all those earnings priced in for the week.
I think you're right.
Yeah.
I think you're right.
Yeah.
I think you're right.
All right, we're right on the day.
Yeah, we are.
Yeah.
And the VIX is up. That's what I was saying. Like when we were green and the VIX was up, I was like, it's a little bit odd. Okay, I'm going to go back to the study for a minute. We'll get to all of these. Now, this is the major assets, IVR. So let's look at last week. Some of the IVRs went down. So S&P went down. Gold went down by 50%.
It's funny. Gold's down. The vol's down. IVR is down.
Gold's down. Vol's down. And that's what Frank wants to ask us, our train conductor. We'll ask him about.
About the move in gold. I don't know if he watches.
Bitcoin vol going down too. So Bitcoin and gold are moving together in volatility.
Now, yesterday we had that big move up. Bitcoin's up. Well, it's almost 115. It's almost 115. It says it's up $919 right now, but we're almost at that 115 level. But I think we hit it yesterday, right? Or got close to it.
I know, but that was like a blip in the radar. Now, this gold is under that 4,000 mark, and I mean, we've said it here a lot. Tim Knight has said it. That's a very big level for gold. 4,000. When it broke beneath it, that's a big level. Like they have to keep its wings up there.
I wonder what Tim will have to say this week on gold.
He's long term.
Well, we've got our position. We've got our short Qs, long gold.
And so taking a look at this, Bitcoin, you're right, hit that 115 level.
Mm-hmm. Yeah, just under it. It's just under it.
No, it's right there, 15,575.
Oh, that's funny because if you look at BTC, if you just look on the side, on the very side of the board, and you look at BTC, it says 114.
Because that's Bitcoin US dollars. This is the Bitcoin futures, which is, I don't know which is better. I don't know which is which.
I was just glancing at the side.
All I know is I'm going to go to this just because where is crypto? This is what we can buy in our account, which is not. Where the heck is it? BCH Cash?
Well, that's Bitcoin Cash.
No, there is. So what we have here is what we have down there.
It's the 114. It's the 114. Yeah. Because up on top is BTCX, which is a future, which is based on it's the future. So BTCX is the 115.
Do you know how confusing this would be to kids? Where's Bitcoin trading?
I know.
Well, the future is trading 115.
They really want me to keep talking to the stock market club, but I could just get on it in a.
I think you could take these kids out. What did you tell them about the last time you took them out?
No, I did. My daughter said, "What should I buy today in the stock market club?" And I said, "Target." I sent her with Target and Starbucks. It's like two things she knows. And honestly, I think Target's doing okay.
Turrets?
Yeah. Look at it. Look at that move.
Oh, that's not bad.
No. I was just trying to come up with things that she would know. Yeah. She's killing it. She's killing it in class.
You told them. I'm not gonna lie to you though. I'm pretty sure you told them right here.
No, I don't know.
Because you're like, I took the stock market club out. Okay.
No, there's a kid. So one of the kids, and honestly, I'm not that familiar with the stock market club. You're more familiar with it than I am. One of the kids in their class is like number one in the country. I guess there's a leaderboard for everyone, every school in the stock. No, he bought some goofy. Well, he got into the minerals, the rare earth minerals.
Rare earth minerals.
Yeah.
That's right. Good kid. It was fascinating having to text my son every day what the biggest movers. I mean, you should know that either way. Like I like texting him every morning what's happening. But rare earth minerals, and he kept being like, "What is that?" I was like, "Well, uranium."
So this kid in their class is like number one in the country in the stock market club.
It's rare earth minerals.
I guess.
Good kid. Tell Lily to hold on to that one. Okay, I'm going to go back. Let's finish up this study. Then we've got, gold fell 5.7 on Tuesday, ranking in the top single-day drops in the past 2 decades.
Yeah, that move, that one-day move. Like, there hasn't been a big move like that in a long time.
Yeah.
And
then the yen declined 1.7 for the week, closing at its lowest level since February.
Let's take a look at the yen. Let's go into TastyFX.
So do you want to look at the 6J?
Sure, we can look at 6J. I was just curious.
Because I like to sell. So that's what I want to see the implied volatility. Hold on, I'm going to go.
We do not, just FYI, we do not have a yen position. In our FX, we do not have a yen position.
So I like to look at seeing if we can get some room. So the FX position is great. So what I'm going to do here is I'm going to go and open it up and take a look at the yen position and say if we're going to go the expected move, make it $10 wide. So here you're getting 225 for a.
I mean, this cracks me up. Like, I'm going to collect .0000018. That's $225.
$225, and here's what kills me. And this, don't get TP started on this because he gets fired.
Well, this is why, I don't know why the small exchange wasn't on fire, more popular. Yeah.
Okay, this is what makes him so mad. Is your max loss is 1,000. You're buying. Well, usually it's
flipped. Yeah.
He gets mad when it's flipped. He's irate, like steam's coming out of his ears.
Okay, will you go to the chart one more time in the yen? So, it had a pop up today, but whatever. I know some people will say, with the up move today, I don't want to sell a put spread in the yen. But I don't mind getting into the yen.
Is there an M6J? I don't think so.
Then we would just have to, they wouldn't typically, I don't think the M6J would have options. What's going on? Pressing news?
No, it's for my son.
What did he say? He's watching our show?
No, he did, but he had to go out he went out on Friday night. I had a ton of people down at his college. And apparently they can't go out in like sweats. I didn't know this. So
the pledges.
No. The boys, like you can't go to a bar in sweats.
Oh, in general, everyone?
Like everyone. So they all borrowed JD's pants. My son is 6'7". So they all borrowed his pants, and I was like, "Do you need new pants?" Did they all take them home? He's like, "No." They all put on. He's like, they all hiked him up and tucked him into their socks. That's the text I just got.
Funny.
So I was like, okay, whatever.
Cute.
But so M6J.
So wait, nobody else brought pants to school?
No, but we were at tailgates, so everybody was in sweats.
Oh, the visitors. I thought you meant like his fraternity brothers.
No, the visitors. Every visitor came with sweats.
And they all borrowed his pants.
So now he's walking around like pantless. I was like, I'll send you more. But they're like specialty order pants for a 6'7" kid.
For a 6'7" kid.
Yes. Okay, so this.
Yeah, so would you say like, I don't want to sell a put spread in the yen because it's up today a little bit?
No, but I'd rather sell a put spread in the yen than just FX.
Do like the US dollar.
Let's make it tighter. So let's say we're in the yen game. So when we're at a cocktail party.
We're in. Are you
when
in the
you're
yen?
At a cocktail party. Are you sure in the end? Yeah.
Are you going to any Halloween parties?
No, I have to stay and hand out candy.
If people don't know this weekend is Liz's birthday.
Yep, Sunday.
We're not going to be on air on your birthday.
Nope. Sunday, I'm not coming on Sunday, and you can't make me.
So Sunday's Liz's birthday.
Yeah.
Yeah, big plans.
The big 4-9. No, actually, after this weekend, I don't have any big plans. I mean, we have plans all weekend.
Mm-hmm.
Plans all weekend. I don't think I'm going to be sitting down, but nothing big.
I just can't believe
Halloween.
1 year. Okay, so you're Liz is the youngest of our friends.
The very youngest. I bet cleanup.
Yeah, the very youngest of our friends. So it's going to be 1 year from now when you're turning 50, and it's going to be like, happy 50th birthday. And we're going to have celebrated so many 50th birthdays.
This is what always happens to me. It happened on my 30th. It happened on my 40th. Everybody's like done and tapped out by the time I turn 50.
It's going to be like another 50th birthday party.
Yeah.
Here we go.
That's why you notice I've never had a party.
Because everyone's tapped out by the time we get to you?
Mm-hmm. That's why I told Christy Lagoni. So she's another one of our friends. She actually works in this building. She's Halloween. So I was like, we are throwing a rager on our 50th.
On your 50th.
Like
next
we're
year.
combining it in between the two. So yeah. We're not, though. I don't really want a party.
So anyway, when you're at your birthday party, you can tell everyone you're along the yen. Let's do this one. 137 max profit, 487 max loss.
And the buying power is, this is what I like here too. So it's like 373 in buying power. This is pretty good. Then we can say we're in the yen. We're in the 38 day.
And honestly, I know the rank is low, but the yen seems to be close to, a recent low. So I don't mind that the rank is low.
Okay, and only because we're in the SPX pit and what we do with the
You seem to be getting really excited about this.
I am. So, if you were going to look for a small pop, if you're looking for a small pop in the end, go to the FX. Right?
Yeah, so, buy it in the
right,
buy it
so
in the FX.
Kind of what we do in SPX, I would go to the FX market.
If you want to just get out quick move, small pop in the yen, get out quick, do that. Versus this is a longer. This is going to take a couple weeks.
This is a 38-day trade. We're saying the yen's going to be above 0.0005. Before then, at the end of this, that's all we're saying right now.
All right, ship it.
That's why I was getting excited about it because I wanted to say that that's it. If you're looking for that quick pop, this isn't it.
Just do the FX.
Just do the FX.
And the FX is great. But this gives us some room to be wrong.
Yeah.
And I like room to be wrong. Even in our 0 DTE, we're sitting there together on the train. Liz is doing the at the money 50 delta short put spread. I'm doing the 30 delta. I like a little room to be wrong.
Yeah, you like room to be wrong.
But I think that translates in our lifestyle too.
Yeah. You took a lot more risk than I take. But that's not true. I think I'm more risky than you are in life.
Well,
but in that one, I take a lot less risk with the at the
I took more risk, but I have a higher probability of not getting hurt. I think in life I like to have a higher probability of not getting hurt.
But when you get hurt, you'd cut off an arm, where I would be like a flesh wound. So, but that's what's great about what we do tomorrow. There's going to be a menu of options, and not a single one on that paper jumped out as this is it.
Right.
Do you know how like when the research team before would do things like 21 days till expiration? That's glaringly obvious, and it's been glaringly obvious in our entire research.
Oh, every time I do research, it's if whatever trades you have on. Close them at 21 days till expiration or 50% when I do back testing.
Yes.
But then you see us sometimes, like we just sold a put in MCL with 20 days till expiration.
Yeah, but that also had a protection underneath it.
I know, so that's a little different.
So like that's not a new trade.
We know. Sometimes
but you know what I mean? That glaringly obvious rules that the research team have come up with in the 0 to T SPX, they're not glaringly obvious. They're like, hey, pick your risk tolerance. It's kind of like what it is. It's kind of a menu. That's the way I look at it. Like, what's your risk tolerance?
And I thought about if we asked Jacob to do some rut studies, since I had gotten emails of like, hey, I'm using the rut. And I don't know that the results would be that much different than the SPX. They'd probably be very similar.
They'll be very similar, and we're here, so we got to stick with our guys.
Well, yeah, sure, but you know the rut's right around the corner.
Oh, I know, but we're in the SPX pit.
If we know,
unless we transfer sets.
If we know we're going to film from the new Mag 10 pit and the rut's over there, and for the day we could do a rut study. She's tough. She's tough.
Okay, so then keep going through this. The biggest S&P movers this week. So you'll notice that all the up ones were. These were all earnings.
Yeah.
Love had earnings, Deck had earnings, Newmont Mining had earnings, Netflix had earnings, Love had earnings, Ford had earnings. This was all earnings. So your biggest movers are your earnings. GM had earnings.
Okay, I'll tell you this about GM. Rode the new test track, loved it.
Ooh, I didn't know there was a new test track.
Yeah, it's been shut down for a while. So test track's been shut down for a while. Loved it. It's GM, sponsored by GM, and now it's all about kind of like cars of the future, how they're going to be driving, and they're going to be.
Is it faster?
Is it faster? I don't think so.
Just like driving with Grandpa. That was the first time we ever went on. We had your daughter, and it was the first time she rode it, I think, right?
Oh, maybe.
Yeah. It was years ago. It wasn't last week. And you're like, just like driving with Grandpa. And then Annabelle and I say that line all the time.
So it's very cool. The new, what's new is all the inside. And just talk about just cars of the future and how it's going to be, and it was very cool, and you really get to see these cars are going to be driving themselves someday. I think my husband was saying he read something that like Annabelle and Lily's kids will never learn to drive or never own a car.
Well, it's like our kids do. I mean, did your kids learn cursive? Mine did because we went to a private school.
Oh yeah,
but most kids don't. Like that's gone. Cursive is gone. Driving is gone.
Yeah, well, because our kids went to a private school too. They learned cursive, but otherwise in the state schools here in Illinois they don't learn cursive.
Yeah, it's like a secret language. Like all the kids in college, I could write you a note and it would be like, I could write a war plan in cursive
and they couldn't read it.
How to read
They couldn't read it. So anyway, GM was up. It was cool. There was definitely some cool GM cars to look at that when you come out of test track.
That's cool. So every time. You don't listen to Smart List, that podcast, do you?
Yeah, I do. I've listened to, I've probably listened to 20 of them.
So Will Arnett is the voice of GM. I'm sure he was all over that.
Oh.
He's been it for 30 years.
Oh, really? I don't know.
Yeah, he's got the deep, like GM.
No, I know who he is. I'm Arrested Development's one of my favorite shows.
Oh, it's so good. But he's the voice of GM. Okay, so taking a look at GM, it was up last week. Let's take a look. It was the highest mover last week.
Oh, yeah, look at it.
And talking about the 3-day rule, it's still up, but you'll notice the IV rank is down, so I don't know that we're going to get into it. I just wanted to take a look at the move. Okay, I want to get through this to the other side.
This is the longest option drive. I feel like we say this all the time. It's the longest option drive ever.
We can take this and do things with it. So I like that he does lots of arrows everywhere. So here, this was last week. So Cliffs was down 17, GM was up 15, Netflix was down 10. He's just giving us the
big movers.
The big movers, and then this is pretty interesting. So the week of the 13th, it was 45 winners, 55 losers.
Oh, percent, and then the week last week, 52% winners, 48% losers. So it was a mix, and you said that it's going to be half and half.
It was a tale of two cities last week, where it was like some are up a lot, some are down a lot.
Yeah,
which was crazy.
A mix. Okay. All right, that was it. And then this week. So today after the close, Enphase Energy, Seagate, Visa, EA, Cheesecake Factory. Did you hear that? That's you know who that is?
I know.
Yeah.
Your buddy Carl.
Yeah. Who's buddy? Someone's buddy. Frank, your buddy. Yeah. He's a real class act. Don't ask us to talk to him again.
No, I'm just kidding. Okay, so then here, these are right after the close, right? So we're not gonna. We'll take. I mean, have you ever traded the Cheesecake Factory? Because I don't think I ever have.
No, but I went there. I went there last week.
You did?
I was meeting my mom for lunch, and it's close to her house.
Oh yeah, perfect.
Yeah, so we went there. Yeah, it's
only because I'm going to springboard into this. It kind of goes into the top 20 symbols going through the thing today. These are all. This looks like a normal cast of characters. The only thing that I don't know
PayPal
what it
had
is,
earnings, SoFi had earnings.
Tesla's on deck for earnings. Nvidia's on deck. United Health had earnings.
Do we usually see IBIT on here or not?
No, IBIT's usually on there.
Okay.
The only thing that I've never seen in my entire life is Wolf.
I have Wolf. I own Wolf. I've got Wolf. Yeah. I don't know why I do. I think I heard the boys talk about it one day, and so I just bought some Wolf. And
Wolf. Oh, congratulations on your wealth.
I mean, I don't have that much of it. I don't even know what it is. Terra Wolf.
I don't know what it is either. But they do have earnings on deck.
That's why these shows are nice. You hear someone say something, you're like, yeah, let me look into it. So take a look at puts in here. I'm curious. If you just go the like 24 day, the regular.
Well, I was just going to try to do an earnings setup something, but I just want to see the capital.
Like, yeah, sell a put.
Oh, that's good.
Yeah, that's not bad at all. Take a look at our history. Are you sure we've never traded it?
I never have. You might have traded it with somebody else.
Wolf, go back 120 days.
No.
Nothing.
Secret Wolf trader. I mean, I've never even heard of this, but I do take days off, and it was probably a day.
It was probably a day you were not here. I don't know, because sometimes at the lunch table, and that might have been it. Because usually, if you're off, I go into the studio. I think I was like in the studio, and they were talking about it.
You never go into the studio when I'm off.
Hey, yeah, I have. I've done the show with Glenn.
True.
Yeah.
Yeah, that's true. Okay, and then this is breaking news from Frank Walsh.
His buddy's classier than we thought.
He's not. No. He said check Nokia options. Stock was halted.
Ooh, okay.
I love breaking news, Frank. I think it's Nokia. Okay, yeah, it was NOK. So it was halted. Let's take a look. Ooh, look at that.
Whoa, Nokia.
And then he also said 104 calls versus 6,000 puts.
I wonder what the news is in Nokia. And did you hear Vanetta talking about Qualcomm?
No. Oh, yeah. Hold on.
Also, I wanted to see, and we're running out of time, I wanted to see...
so NVIDIA is to make a $1 billion investment in Finland's Nokia. That was today.
Oh, it's from Finland?
I guess. It just says Finland's Nokia. I had no idea.
My friend, she bought a place. Honestly, she bought a place in Finland, in Helsinki, or maybe not in the city of Helsinki, but like a suburb of that.
She is Finnish, isn't she?
I know, but honestly, the price of this place, cheap. The town she's in, nice. They ride their bikes everywhere. She loves it there, and I hear it's another one of those like great places to retire to.
Finland.
Well, it's probably cold.
I would move to Austria in a heartbeat. I loved it. Salzburg.
Well, I do like Salzburg. I do.
It's Austria.
But it's cold. The weather, and I guess it'd be the same in Finland. It's cold and it gets rainy.
I mean, I agree with you. We got perfect weather when we were there. But it's like Chicago. I mean, sometimes it's cold and rainy.
No. It rains in Germany. I mean, I know that's Austria. It rains like...
They're right next to each other.
It rains most of the time.
Oh, it does?
Yeah.
So we just get really lucky with that 3 days?
Yeah. I'm going to go...
The hills are alive with the sound of music. I'm in.
No, it rains a lot. I'm going to go somewhere warmer. I'm going to pick somewhere warmer. I'm going to choose warmer. But
me too.
Finland, she does like it there. Not a bad place for a second home. She's got a lake. She's got a bike. She's got
a bike.
She's living the life over there.
Bike. So nothing I really want to do in Nokia, but take a look at this. Like you can see that it's gone up so much because there's not even call options on the top.
Yeah. If I saw this news, I'm like, yeah, I want in on this Nokia. I would just buy some.
Yeah.
I would just buy some. Or maybe I would sell the 7.5 put to buy the 8 call.
Just do the combo. Oops, gotta buy one.
Right? Put that in for 9 cent credit.
Yeah, but you're just buying the stock then. You're actually paying more.
Am I?
Yeah. Watch this. Yeah, you're paying $100 more by that combo, and you're just washing extrinsic value anyway.
Well, okay, what did we say it takes advantage of a call skew, the buffer?
Yes, okay, I'll go to it, but this doesn't have, we could try this, hold on. If you wanted to, I did 7.5, 6.5. Oh, I still have the stock in. I was like, what the?
Yeah, buy the put spread, buy the 7.5, 6.5, and then sell the 9.5.
Sell the 9.5. There you go. And you're back in. Now, granted, we have a little bit of risk right here, but I'm okay with that because then we're back in at 6.5.
Yeah, the buffer. Sure. Send that. Push that button, Liz. So we can make $190 if Nokia continues to go up, but if it goes down, we've got some room.
Wait a minute.
Wait.
I'm clearing this out. I'm going to do it again. So I'm buying the 7.5, 6.5. So I'm paying 63 cents.
Yeah, and then sell the 9.5.
And I'm selling the 9.5. Okay.
Oh, whoa! Look at the market on that 9.5. 34 cents at 282.
This is where the problem came in. I was like, something is.
Yeah. Just clear this. The markets are. If you want to trade this, you have to just trade the stock.
Yeah. Okay, because I was like, why is the market so? When I looked at them together, I was like,
yeah, the market, and it wasn't a fast market. They can go $5 wide in a fast market, or it was halted. So take a look at Corning Glass.
Yeah, there's a button you can press and it just goes $5 wide. Corning Glass.
I want to see what Corning Glass did.
Oh, because they had earnings, right? They're down 4%, down 3.5%.
Okay.
After the fiber optics got put into your parents' yard.
Oh my gosh. Yeah, I told you. They're putting fiber optic cables through my parents' entire town. So yesterday, Julie knocks on their door. We got to come mark for the fiber optic cables. My dad's rushing to open the gate and trips and falls.
I know that poor guy.
And if he's watching
Wait a minute.
What?
Hold on. I think I just saw something. I thought we're filled in Nokia.
What?
For $191.
I don't know. So go to our analysis page and look at our Nokia.
Hold on.
Because I don't even know what. Let's make sure we got. Go to the analysis page.
Okay, I just want to look down here. I just want to see. So we're short the 9.5, and I'm long that spread. So I'm
so 9.5 to 7.5. $2.
And we collected $2 for it.
Yeah. So let's take a look at the curve view analysis and see what we've got going on.
Yeah, this is
Yeah.
right.
It all went in fine.
Whew,
so
I can't believe we got filled.
We won't start losing until it gets to 6.5, so it can go back down $1. And then to the upside, we can make 190 if Nokia keeps going up.
This is perfect. So I mean, that was luck. I thought I canceled it when I went in to do it because the markets were so wide, but we got filled $1 higher than when I went in to put it in.
I'm surprised. I'm gonna put it in too. See if I can get filled. What'd you put it in? November?
It's in November with 24 days. So we'll get long Nokia again.
See, all it takes is saying like, oh, NVIDIA's investing in Nokia.
And so then if it pops back down and NVIDIA pulls its offer, we're right back into Nokia where it was.
Yeah.
I feel like you're sending it wrong.
I just bought shares, just because. If it goes back to 6.5, fine. I'll tell my friend from Finland I bought some Nokia shares.
That's a good buffer trade.
It is a good buffer trade. I didn't. I just threw some shares in. I'll watch it. I'll let you know if it's down $1 tomorrow.
That was luck.
I'd like to just keep an eye on things. It's an easy way to keep an eye on things.
And Frank Walsh says it's ex-dividend day in Nokia, so congratulations.
Oh, great. I bought shares maybe a day too late.
No.
A day late, $1 short.
Let's see.
Yeah, day late, $1 short on my table. I'm not going to get the dividend.
Sorry, you didn't get the dividend. It's the 28th. She missed it. I'm going to go to our position, see if there's anything. Actually, you know what I'm going to do?
Yeah, make sure we got to everyone in Twitter. Okay, Florida 7 out 7 seconds after opening bell.
Nice. Nice, Florida 7.
That was on a SoFi.
Okay, and then there's the earnings from today.
Yeah, we'll look at that at last call.
Yeah, so we'll look at all the earnings trades in last call.
Wait, one more time. Go to my fantasy league. Got it. JNY Tasty at number 1. That's going to be the only time you ever see this. I don't think.
Hey, don't say that. Don't you dare say that, Jenny Andrews.
Thanks, Liz. All right.
You're going to be number 1 for 5 more weeks.
No.
How many weeks are there of football? I have no idea.
I don't know. You know, Super Bowl's always like first weekend in February.
7 more weeks.
But I don't know how long this keeps going. I don't know if it ends at the playoffs. I'm not sure.
I'm putting good energy on the room. This is what I'm going to do for you.
Thank you. All right, that's it. That's a wrap. We are done. We will see everyone later today on Last Call.
Last Call will be on. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny Show. We'll be back tomorrow live from the SIBO here in the SPX pit.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
I got Joe. Joe in Houston. What's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing. For guys like me out here, what you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
Very. You made my weekend, man.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. And we got a fantastic, exciting week. A lot of Mag 7 products reporting earnings. I did an earnings preview yesterday.
Nice.
Had a really hard time with the image, getting it sized correctly. So I had to recruit the younger guys.
How did that feel?
You know?
How did that feel?
It was a
Was it a humbling moment?
It was a humbling boomer-esque experience. You know?
That's great.
But it's crazy because the earnings preview I did was for Google. We have a number of earnings previews if you want to check out the News and Insights tab. But Google could report $100 billion in revenue for the quarter for the first time ever.
Wow.
They probably will, honestly.
Yeah.
They were close last quarter, and now it's just surging demand, surging revenue.
Mikey, there's something like transformational happening right now, seriously. With this AI situation, huge news this morning with Microsoft and OpenAI. I don't even know what they did, but it was something structurally, right? And now Microsoft, I think they said, or I don't remember who owns, somebody owns 27% of somebody. I don't even know anymore. Once upon a time, it would be easy to just assume Microsoft, but it could be OpenAI. I mean, OpenAI with a $135 billion valuation would be number 90 in the S&P 500 right now, the 90th largest stock in the world. Like, that's amazing. And again, you talk about Google, obviously Apple, the rest of these guys were earnings this week. There will definitely be some kind of focus on AI and how much they're spending on it, and data centers, and everybody is just a lot of, I shouldn't say everybody, but there are a lot of components to this, right, that are involved. It's amazing.
Yeah. Microsoft gapped higher, up 10 points right now, but similar to UNH, opened much higher, sold off since. United Healthcare had earnings as well. They did really well in terms of the numbers, but this was another one, kind of a weird move where gap higher, we were sitting at 380, and within 3 minutes of the open, we were back down to being flat. So is this a market where we're going to get some good numbers, maybe a little movement higher, and then it's just sold on the open? It's kind of weird.
It's kind of what we've been seeing with some of the major ones, right? Last week, Tesla and Netflix, kind of the same. But it's just the major ones, honestly, because like PayPal is up pretty big this morning. I thought UPS really surprised me with their move this morning. We were talking about that yesterday, Nikki and I, on the close, and it's funny because I was making fun of Liz. I was making fun of Liz in a way of making fun of all of us. Like, she said something to the effect of, I'm not even sure if I want to trade it, right? And we feel like that a lot of times about something, and it's like we kind of sort of tell our honest feelings about what we feel. But the reason why I'm sure she felt like that is because look at the stock. It doesn't really look good, yet there seemed like an opportunity, and clearly there was a bit of an opportunity. So, again, that one's doing well, but it's been the big ones. It's been the big names that I feel like sort of make a move on earnings and then kind of pull back. I wonder if that's what we're going to see from these Mag 5 that are coming out this week.
Yeah. Could be wild. Could be wild. I think what's interesting about Google, to your point of AI, I think the market is going to want to hear a lot more about AI overviews, AI mode. A lot of people are in the camp of Google search being dead because so many people use ChatGPT. Like, I know a handful of people in this office that just use ChatGPT for their search instances. So, and really it makes sense from a business perspective because you can gather all your thoughts and data and then come back to it and be like, tell me what I told you 2 weeks ago with all these numbers. And it's a more responsive search engine and intelligence gatherer, I guess we'll say. But Google AI overview, AI mode, the cloud, I think will be all in focus. Still not too crazy of an implied move here. 16 points for tomorrow's earnings announcement after the close on a $260 stock. That's like 5-6%. So it's on the lower end of the range, but still 16 points for this week relative to 30 points for the rest of the year and into January. So still making up for about half of the implied move for the rest of the year. But to your point on UPS, like, you look at this chart, and this one even scared me. I was like, I don't want to trade this. But when you're looking at household name stock at annual lows with 30% implied volatility, like, this is where your opportunity is if you get the pop, or if you play it to the downside and you get the drop. Like, any equity that's reporting earnings with 30% IV is an opportunity for diagonal spreads, calendar spreads. If you are right, you get a nice return on capital. But
it definitely was. It was one that was probably in my wheelhouse. I just kind of chickened out on it for sure. Wait, I got to backtrack what you said on Google. That's a good point. I mean, I think that's really probably one of the most interesting things for earnings. So wasn't it last week OpenAI came out with a new browser or something like that? They announced a browser. I forget the name of it. I just looked up Google segments. Google search and other is 57%, let's call it, of their revenue. That's bigger than I realized. And so the fact that you said that there's all these people that are starting, I'm sure there's a lot of people that are starting to use OpenAI as their primary search engine. That's something to really keep thinking about here as we go into earnings. That would, I don't know. I don't know if that would make me want to play it to the upside or not. Because that could be a threat when 57% of your revenue is from the search engine. And again, we know what they do. YouTube ads is 10%. Google Network, whatever the hell that is 10%. Google Other is 11%. Google Cloud is 10%. Yeah, whatever that is. So that's interesting, man. Like, that actually makes me kind of bearish on Google to some degree. I got to think about that. I don't know if I'm going to play. No, I got to watch for that. But, I mean, yeah, we hear everybody in here mentioning these other ones, Grok and Claude and obviously, ChatGPT. That's really a threat to their business. It's interesting that the stock has been doing what it's doing recently.
Yeah. Something that might be interesting, if you think the UPS move to the upside could influence products like Amazon, similar model in terms of delivery, if we were to just isolate that. And then FedEx, another one seeing a little sympathy rally on UPS earnings. All three of those are up today. Amazon being the one that's reporting earnings this week, October 30th after the close. That would be Thursday.
You doing anything in there?
Not yet, but I will. I'll probably play all these to the upside. Just close my eyes and
For sure.
lose on all of them. But no, I think the Mag 7, I mean, in this environment where you have low implied volatility, it feels like the market is now waiting until tomorrow after the close. Like, I wouldn't be surprised to see us just chop in this really narrow range for the rest of the day. But yeah, I think when it comes down to the numbers, all these companies should just report explosive numbers.
Yeah.
But it's a matter of how the market digests it.
Yeah.
I think UPS is a great example. Still up on the day, big, but sold off aggressively from the highs. It was above 100. And then UNH too. Great numbers. They increased their guidance. Still sold off from the highs. Up $3 now. But this is up like 20 points on the open. So kind of a weird market. But gold. Catching a little bit of a bid, but what a fall from grace here. I mean, down to 3,900 earlier today. Could be some buyers stepping in. Could be some sellers closing to get this little bid here. But what a move! Complete reversal of what we were seeing a couple weeks ago.
Yeah, right. It's a different trade. Ever since the big fall on a week ago today, it's a different trade for sure. I got long yesterday, 40.11. Like I mentioned, I said I would close if it broke 4,000. I did. Tried again, got long, and had an order out. Well, not an order, but I had an alert out overnight just to see if it would break 3,900. That was probably my biggest fear, if it would break 3,900 meaningfully, meaning like a lot of volume, heavy selling, and it didn't. It actually held, and it's kind of been bouncing back all day today. We'll see what happens, but it's a different trade right now.
Yeah,
it's not the just move, the just blistering up move like it was a couple of weeks ago. And silver silver's actually a little bit stronger, to be honest with you, what I've noticed a little bit recently. So the metals trade is still alive and kicking. You'd imagine we're going to see some type of movement from them, from the Fed meeting, right? I mean, them, bonds, like you imagine we're going to see some type of movement.
Yeah, and if you look at all three of these precious metals, gold, silver, platinum, all of them have, regardless of whether they're net up or down, they all have big sell-offs earlier today, but they all caught a bid, especially silver and platinum. Big bar here in platinum that got bid up. So
bars.
But yeah,
oil, man. Oil's back down to 60 now.
Yeah, I think the entire energy sector is what's dragging the E-minis. Nasdaq's up 100, E-minis up 6. There's a pretty big disconnect there, which you see from time to time. But yeah, oil sitting at 60. I believe it's time to buy.
It seems like it, right? Take a shot.
So I have this iron condor with a put spread here. I think I'm just going to close this whole package and just get long a micro contract here. Because I've got 20 days left on the iron condor. 55, 65 short options, 1 point wide defined risk. That's up 85 cents in isolation. Collected $300 for it. And then I had this put spread at 63.5, 63. A call spread at 63.5, short call spread. That's up 50 cents into the sell-off. So yeah, I think I'm going to flip the script here, close the call spread, close the iron condor, book $140 overall, and then get long the micro contract at 60.
I just did for 60.10. I just did.
There you go. Yeah, I think it's feels right.
Feels right.
Especially into like multi-day sell-offs. That's what I'm looking for. Price extremes to the downside, to just get a long micro contract and just hold it until hopefully it rallies.
Yeah.
But yeah, let's get these orders in. Let's see if we can get it closed near the mid price here. Not going to rush it. But yeah, outside of that, I did close. I made an adjustment this morning in UNH. So I had the 400, 420 call diagonal spread, short the 3-day, 420, and I'm long the December 400 call. The basis on it was only $390, but into that sell-off this morning from the highs, I rolled down to a calendar spread. So I moved it out just 1 week, moved the 420 down to the 400, and collected $1. So I now have the 400 calendar spread, November, not December, long November, 24 days out, short the 10-day with a cost basis of $290. So basically a scratch right now. If we get a rally back to 400 or near there, it'll be a profitable trade, especially if it's next week. But just trying to reduce basis there in case we just chop around here. Didn't like the gap higher with the instant selling this morning.
Yeah, it feels like we are going to chop around here. Well, UNH, if UNH and the market actually, it does kind of feel like in general we're going to chop today. I mean, nobody wants to do anything huge ahead of this bonanza tomorrow.
Yeah. I was just filled on the crude iron condor. So I took some cheddar out of that thing.
Cheddar.
What do we get? $120? No, 80 cents. So yeah, closed the iron condor, booked 80 cents there, closing the put spread for 55, 60 cents. I'm just going to buy the micro now. Sorry, the call spread, not the put spread, because I already have, if I have short delta, it doesn't really matter if it rallies because I'll have the micro on it.
Mm-hmm.
It's kind of like a covered, sort of like a covered call feel. So yeah, buying the micro, filled at 60.11, 1 penny higher than you. Feels bad. What did you do today? Any? I see some adjustments here.
Yeah, I mean UNH was just the. It was literally just the calendar call spread that I had, and the 390 calendar call spread. Closed that out for flat. Actually, it didn't really. So a lot of times, and I know people always ask me like, do I have a profit target in mind or anything like that? I mean, sure, it's always at least 50%, right? But a lot of times it's not up to me. It's more about how the gap happens, right? And usually I'm at the edge of the expected move on these earnings positions on these calendar call spreads. So it's just a matter about the gap up. And I had the 390. There was really no gap up there. And early on, it just seemed kind of quiet. And so sometimes I'll usually just leave it on all day. This particular one, I took it off, which means it's probably going to rally for the rest of the day. It is what it is. But I just chose to close it. I do have a lot of different things on, and I just chose to close it off. I mean, especially given that we got a lot of earnings coming up, might as well just take that back in and be able to deploy that on the next trade, because the next trade is out there for sure. There's a lot of earnings coming up here.
Yep. Yeah, totally see that.
Oh, and then CCJ. Sorry. Yeah, CCJ. Obviously, it was big news this morning with them. You know what? It's crazy. I'm telling you, man, there's a lot of these deals that are coming out, and sometimes it's a little weird to follow the corporate structure. And again, it doesn't really matter because, again, we're ticker agnostic, et cetera. But I'm just curious sometimes at some of the things that get thrown out there. And so I guess there was some deal done with CCJ and Brookfield Asset Management, who apparently owned Westinghouse, and apparently both of them own it. But there was some deal that they did, I think, with the government for nuclear reactors or something. And so that's why the stock popped. And I just thought it was a pretty good opportunity to sell an upside call. And I don't typically sell upside calls. I typically buy them. But because I buy so much, every now and again I need to sell an upside call. You know what I mean? And this seemed like a pretty good opportunity. The 130 strike, 23 delta. It was like 20 delta at the time I sold it. Yeah, and after a big move, we'll see what happens. Hopefully it doesn't turn into a 2-day move. It's just kind of a 1-day move.
Yeah. And even if it just sits around here, you could easily see this premium take a little hit.
Mm-hmm.
But yeah, basis up at like 133-ish, and that would set big new highs if it gets up there.
Mm-hmm.
But yeah, crazy moves in this market.
Yeah,
real quick recap for other things that are moving in the future space. Let's sort by downside move. Natty gas down 3%. Ethereum, crude down over almost 2%. Heating oil, 1 ounce gold down 1%. Everything else within 1%. Let's see the upside here. Volatility.
Volatility. Ooh, a little bump. I didn't even notice that.
That's the funny thing, though, is like you look at the percentage, it's like, ooh, and then you look at the change, 30 cents.
Yeah.
Disregard.
But it's interesting, though. It tells you that, something's around the corner, right? There's a little angst. Where's the VIX one day? Actually, that's what we should look at, probably. I bet that might be popping. No, it's not really. I thought it'd be more, but 81 cents, I guess.
Pretty decent. But yeah,
that tells you, right? That right there says something's coming. Is essentially what it's saying.
Yeah. We do have, what is it? October 28th. So we got the rate decision tomorrow, of course. And I'm trying to see if there's anything that's actually going to be reported. Don't think so. But yeah, rate decision tomorrow. And really, I mean, it's not about the rate decision. The rate decision is going to be 25 basis points. I would be shocked if they did something crazy. That's not what they want to do. They don't want to create shock in the market. But I think what will be interesting is 25 basis point cut with a little narrative of like, this market's a little too strong right now relative to what we're seeing in the numbers. We'll have to revisit for 2026 rate cuts. December's priced in, basically. There actually is a growing chance that we stay at 1 basis point cut. So that reflects what I'm talking about, where yesterday there's a 5% chance that we got that we stayed at 37540, which is where we're going tomorrow, unless something crazy happens. Now it's 12.8%. So more than double the probability, and 12.8% isn't nothing. Still, more than double the probability from yesterday to today that we stay at 1 rate cut in for the rest of the year. So staying at 37540 for December. But tomorrow we're going to get a 25 basis point cut. But I think the increased probability that we only get 1 this year speaks to the narrative of maybe Jade House says something along those lines of, we're not seeing the data we want to see to continue the rate cuts as scheduled. That would be a really strong statement, and it could create some waves in the market. And if we look at SPX for tomorrow's implied volatility, and through Friday, you're looking at 80 points with the VIX where it is, super low. 80 points is a pretty big number for the rest of the week, all things considered. So, yeah, we will see what happens. I think tomorrow only being 40 points seems a little light to me.
It does, right?
I would have expected to see that closer to 50 or higher than 50, but we shall see.
Yeah, it does seem a little bit low, considering, but I guess really it's about the rest of the week more than anything. I'm trying to see. I thought I saw at some point that they're, obviously I think the rest of the week includes maybe some moves after repositioning, but I thought there is supposed to be a PCE number. I don't know if it's actually coming out on Friday. Was it listed? No, it's not listed anymore. It was listed. No, it's still listed, but I don't think it's happening. So, yeah, I mean, there's a pretty big bump, as you can see, for Thursday and Friday. I mean, I guess there's this expected movement for the rest of the week. Again, I mean, those earnings do come out after the close on Wednesday, so that's another part of it, and Thursday. So, I mean, I guess that's really more of what it's factoring in. But like you said, we shall see, because what we've seen so far from the major earnings is maybe a decent move initially and then womp womp. So, I don't know.
Yeah.
What year is it? What year is it?
I don't know. When
you see IBM stock, when you see Intel stock, and then this stock. Like, what year is it right now?
Nokia.
Is it 1998?
We need some Radio Shack. We got to get that Radio Shack.
Yeah, Radio Shack.
That was my favorite one when all these companies were talking about blockchain in their earnings reports, and Radio Shack was like, yeah, we're going to do some blockchain stuff too. Green Mountain Coffee Roasters.
Oh, yeah, GMCR. Oh, dude, GMCR was a heck of a trade.
That was a good one. They're like, blockchain.
Damn,
stock was up like 40% for no reason.
That stock was nuts. Oh, my God.
But yeah, Nokia, you were talking about this before the show opened here. What's the deal with this?
Apparently, NVIDIA made like a $1 billion investment. I don't know in what. I don't know what they still own. They probably own some, like, I don't know. You know, again, this is probably just for some intellectual properties of something, I'm sure. I don't even know what they still own. Like, I mean, this is, you know what? We need to do, are you looking up what does Nokia do?
Yes.
Okay, and I'm going to go to ChatGPT and say, what does Nokia do? See, this is a good test. Nokia do.
Yeah.
Global technology company based in, yeah. You see, I mean, again, with telecommunications equipment, right? Network infrastructure. I mean, this right here to me is clearly I don't know. It's a thinking forward move for sure. Mobile networks, fixed networks, IP routing, optical networking, cloud and network services. I mean, this is just a play on something for down the road for sure.
Yeah, a lot of buzzwords.
Yeah, a lot of buzzwords.
Collaborate on AI networking solutions and explore opportunities to incorporate Nokia's data center switching and optical technologies, NVIDIA's future AI infrastructure architecture, Finnish company said in a statement. So yeah, AI, data centers, technology. Yeah, I think
they're bringing them back.
It's crazy. It's wild. But yeah, someone in the YouTube chat, if you want to join us on YouTube, we're streaming live there. Just head to tastylive. Someone in the YouTube chat brought up the call skew here, which is quite insane into this move.
As it should be.
Yeah, 45% increase in implied volatility over the last 5 days. Really today, I would say, is where you're getting that. Back like at 100% IV, this was sitting at 50% IV a couple days ago. But yeah.
This thing still has a $40 billion market cap. It's $40 billion.
The more you know.
Yeah.
But yeah, 40 cents for the furthest out of the money strike in November, 9.5 strike. That's more than 20% from the current price of 760. And then you look at the at the money price at 7, and it's trading for the same price. So definite call skew here. I think still it's a $7 stock. I would, if you want to play it to the upside, I might just buy shares or buy a leap. Like there's really not much you can do here with these stocks that are under $10.
Yeah, I mean, honestly, I'd be a buyer of calls here more than anything. Upside calls, honestly.
It's a cheap way to get exposure. Yeah.
It's cheap.
Especially longer term. And that is the nice thing about smaller priced companies is that when you have a company that's $100 or $200, when you go out to these far out of the money options, 400 days, 800 days, that's where the premium really starts to get costly because it's reflective of the stock price. With a Nokia $7 stock price, which is significantly higher than where it was, if you look at January 2026, the 10 strike call is trading for 40 cents. The Jan 2028 10 strike call is trading for $1.50. So it's like, why would I ever buy the Jan that expires in 80 days when I can buy the 10 strike that's $1.50 that expires 800 days from now? Like if my idea is that at some point Nokia is going to go from 7 to 25 or whatever, I'm getting the 800-day option for $100 more. 10 out of 10 times. You have 10 times more time for 3 times the amount of cost. And that's because you're getting out of the near-term IV here. 80% IV in December or 69% IV in January versus 51% in the furthest out of the money cycles. Yeah, you can get a bigger return on the near-term ones, but you can also just get vaporized if it doesn't move.
Yep.
And you don't have that time for it to work out. So
this
just a thought.
No, back to highs. This thing's catching a real bid here.
What stock?
Nokia. It's catching a real bid here. It's like it's back to highs. It had faded some. Because what about what was it yesterday that jumped 20%? Qualcomm jumped, right? And it kind of faded pretty much the rest of the day, and it's down today. Whereas,
what? I have no words. It's a 30-point range cut in half.
Yeah. I thought about buying a put spread in there yesterday, but I just didn't. I was like, I don't feel like playing this game, but it seemed like a buy.
This is the craziest news-driven market I think I've ever seen.
Yeah, it's pretty.
You get a headline and it's 20%.
Yeah, it's kind of where we are right now. It's definitely kind of where we are. That's why it's really, transformational. And the companies that are doing it have a lot of money to sling around. I mean, it's nothing. Oh, we'll give you $1 billion. You know what I mean? It's nothing right now. It's what we're hearing, seeing.
Indeed. All All right. I'm going to pop over to the YouTube chat now. See if we get some questions here.
Questiones.
Trick or treat. Why is crypto down? I thought it was October. You had your move yesterday. Actually, crypto's up now. It's up 160. Basically.
Yeah. Yeah. What are you talking about?
Basically flat. But yeah, I think we gapped higher. We're chopping. This is pretty much par for the course. But we'll see where it goes the rest of the week. AI is a fad. It will be over by New Year's. Grumpy Mike. Grumpy Mike.
No, Mike. There's a lot of billions of dollars of fad.
Yeah.
Lots of billions of dollars is a fad.
I was just filled on my crude position.
Cool.
So I'm out of the crude iron condor and short call spread. Just have the micro crude contract now. Any thoughts on an upside crab trade on Netflix? Let's take a little look-see here.
Yeah, what's your crab trade again?
Crab trade is just a butterfly where you push out the long option that's closest to the stock price. So instead of doing a symmetrical butterfly in November, you push out your long option that's most expensive to December.
Oh, gotcha.
That's basically it.
Oh, okay.
So you're inventorying delta in a longer term cycle that has lower implied volatility relative to the two shorts you're selling. So if we just pull one up like 1110, actually let's go 1100. We usually go to like around the expected move. Let's just look at the 1150, see what that's looking like. And then we just create symmetry. So it would be 1100, 1150, 1200. I mean, it's definitely viable. It's just an expensive trade here where if you hold this, let's see, earnings are, they already announced earnings. Forgot about that. But yeah, $2,700 for a 50-point wide crab trade. It's expensive, but yeah, you can get a nice return if you get some time to pass out of this thing. Not changing implied volatility at all. This is just fast forwarding to middle of November. If you get a neutral to upside move, you're reducing cost basis by 50%. So you're buying this option for $5,000. Your total cost is $2,700 because of these two short options. You're defining your extra short calls value here. So yeah, I think something like this, December, November. I'm not sure I would do November with a weekly. I think that's too short term. If you're going short term, I would just buy a butterfly. But yeah, I think long December, short November, cookie cutter setup. Just depends on where you wanna put it. Thank you for UPS. Didn't realize it was filled. Nice trade. That's always a fun one. When you
I don't even know what they mean. I mean, I didn't do anything in UPS, but
I didn't either.
Great job.
Maybe it was Nick.
Maybe.
Claude is my homie. Rock for me. Yep. Everyone's got their AI friends.
Who's responsible for Claude? Like where's that? I don't even remember who made that one.
Meta.
Is that theirs? Okay.
Yeah.
I don't remember. Oh, Anthropic. That's right. Anthropic is Claude.
Yeah. Let's see.
The market just jumped a little bit. What was that?
Great question.
It jumped like 10 handles.
11:30. Maybe something happened here.
Oh, weird.
Yeah, I don't see
It's
it.
becoming a thing on the show, man. Like market just jumps out of nowhere.
Yeah. Naturally.
As it should.
Question on IonQ. I have a diagonal spread, 85.95 November Jan. Should I take it off and reestablish or give it time? IonQ. 85.95 November Jan.
Wait, what do they got?
The 85.95 diagonal spread.
Oh.
So it's down.
Jan.
Yeah, this is a big sell-off, but nice recovery from 52-ish back up to 63. If you have November, the November short option in November, that's what I'd be looking at. It's trading for $1.25, so it's not nothing. They do have earnings coming out next week, November 5th. So, and that's with an 11-point move projected. So if you get back up to 75, this thing will be looking a lot better. But to your point, if you wanted to close this and get closer to the current price and get a little more premium for the earning cycle, it's trading for $5 right now, this current setup. So if I clear this out and we just go to like the 65, 75, you can put up a little more capital and get yourself into a better range to make more money on this. That's what I would do if you wanted to, but it's still going to appreciate in value if you get a 10-point rally or more. You don't want to see a 3-point rally or a sell-off at all on this product. If you get a 2 or 3-point rally, these options like the 85 in January might still lose a little value because you want to see a move that's to the expected move or a little bit greater if you're looking for a big pop in that Jan option. So I don't mind adding a little more capital and moving it down closer to the current price.
Yep.
But that's pretty much it.
That's what I like to do. Can we just pause for a second? The 95 call, 24 days to go, is $1.14 bit. That's crazy.
Yeah.
That is jack, bro.
50% increase in the stock price.
Wow.
Yeah. But yeah, going to be a big gamma play either way. But you need a rally in here.
Yeah, I mean, if you believe in the trade, I mean, if you know whatever your initial reason for doing it, I mean, if you still feel that way, I just like to roll down. You know, just take the loss on what you're dealing with right now and roll down.
Sold a put that's deep in the money in INQ. Going to let it get assigned so I can play hardball. There you go.
Okay.
Yeah, depending on where it is,
play hardball.
You could still get premium for rolling it. If it's at even if it's at 85, if you look at rolling from November to December, you're still going to pick up a couple bucks. So you don't need to take the stock, but if you want to take the stock to get that static delta, totally fine.
I'm still short of putting here. 55, Nove.
Perplexity is the future of search today. I use Comet all the time. Yeah, I mean, there's a myriad of different products that people use for different reasons, but
which says to me at some point there's going to be consolidation. I think.
Yeah, could be, but yeah, there's definitely something to be said about 5 years ago, everybody just used Google search. Only a handful of Bing is still kind of under the radar. I think it depends on what computer you have, of course.
I mean, you used to laugh at people if they used Bing, you know? Until 3-4 years ago when Microsoft did the investment in OpenAI, right? And then all of a sudden it was like, oh, Bing's actually better than... I remember people saying that in the last 2 years, Bing is actually better than Google. And I was like, get out of here. But
yeah.
I mean, I definitely have a bias. I'm not going to lie. I was on Gmail beta. I remember when somebody sent me, you had to get invited to get on Gmail. I remember that. And so I definitely have a bias that I probably need to shake.
Well, it's just this social stigma. If you have a Gmail email, then it's okay, normal. If you have an AOL email?
Yeah, exactly. I know, right? I know. Is it going to be that? It's going to become that, isn't it?
Might.
Well, what's the email thing? I mean, it's still the dominant probably email domain.
Oh, yeah. Right? Gmail for sure. Do a little digging. Why don't you use ChatGPT too?
I know that. Dominant email domains for sure. I mean, Gmail is. I mean, well, first of all, this website that I'm on looks really old. Email. I don't know. It says Gmail is 17%, Yahoo 17%, Hotmail 15%, AOL 3.2%. Is that for real? I mean, that makes sense, but I feel like we see at least a solid 90% of the 3.2% of AOL emails that we get. That's something.
Is true. But yeah, we used to see them all because we used to get a lot more support requests via email. We used to see a lot of wild emails. Lean hogs and live cattle.
I'm not going to mess this up. Ellie is cattle.
Yes.
Right? Yes.
Correct. Yeah, HE. Down bad, down to 81. Thomas could not make it today, but we'll have to get his insight later this week.
Wow.
HE, we have traded this. I haven't traded it recently. If we look at the order chains, it's been a nice trade. This is all just Thomas ideas. Green. But lean hogs, we've got more of a mixed bag because we had that big loser here. I think I had a diagonal spread or call calendar here. It's down at 227. Do we want to bite on the live cattle futures price?
Bro, is there like a virus going on or something?
Well, there was. They had the screw worm.
Yeah.
The screw worm was creating some supply issues, which is why this spike in the price happened. But it may have been resolved given this sell-off here in the price. But yeah, I'm not going to touch these things. I think there's too many other interesting things with things on the horizon. I don't need to dive into cattle and lean hog futures today.
Totally.
Scanning. How do we feel about this trade in DraftKings? December 19th. Let's take a look. Ooh, DraftKings down at 31.
Yeah, I got a short put in here, and I was actually looking at it earlier today. It just seems to be no lift. I haven't decided what I'm going to do yet. I mean, I guess I'm just going to keep it, but curious about this trade. What is this trade they're talking about?
30 put in December with a 40-42 call ratio.
40-42 call ratio.
So, I like the idea, but I don't like the call ratio. So this for me is like all of your premium is coming from the put. You're selling the 30 strike put for $2.20. This call ratio at 40-42 is giving you an extra 20 cents in premium, but you have unlimited upside risk here. If you just kick this down to a regular call spread and you turn this into a stupid, one of my favorite strategies, where you're financing the cost of this call spread with the sale of the put entirely. This call spread is only 20 cents. You have no upside risk. You have no issues if DraftKings has a great earnings report and they skyrocket. I would rather do that than have a naked call on for 30 cents. So I would just give up that 30 cents, 40 cents, just do the vertical spread here, because this is just an upside kicker. You have a $200 value potential that you're paying 20 cents to get into. So almost all your premium is coming from that short put. Again, I would get rid of the ratio and just do the vertical spread and just play it for an earnings surprise to the upside. But yeah. I like this trade. I can get behind this. Stock at lows. Yeah, we'll do this. $2 flat.
Wasn't it them that, again, a lot of this movement to the downside recently has come on the heels of, the rise in prediction markets, and I think they just invested in one recently, I believe.
Yeah, I'm not sure. But there is something to be said about, yes, the rise in prediction markets, what's going on with DraftKings stock price here. Either way, this thing being at annual lows, given the implied volatility that it has, is interesting to me, for sure. Because this stock, even with an IV rank of 50 in the middle of the range, you're looking at 65, 70% IV. But with an IV rank of 0, you're not really getting lower than like 40% IV in here. So plenty of IV, really low price stock. This was a year-long trade for a couple of years here. So I'll get back in here, sell the 30, buy the call spread for a little kicker, see what happens.
Yeah, I just rolled my puts to D's. It is roll week, essentially, and a lot of different things.
Mm-hmm.
You got a lot to roll or no? Or I mean, it's always interesting, right? Because there's some things to roll, and then some are like they're just in this cycle that you could probably close, right? There is that kind of letting that play out the next couple of days.
So yeah, I've got these static contracts: M6B, MCL, MNG, all static, not doing anything there. The Natty Gas Iron Condor here is interesting. 27 days to go. right in the middle of the range, up 75 cents. But this is one where like I don't want to roll this to the next cycle, because rolling to the next cycle means rolling to the next contract, which is a totally different price. So this is one where I'm ignoring the 21-day rule. It's defined risk anyways, so I don't have gamma risk here for the most part. So I'm going to hold this past 21 days if it's not at $200 prior to that, which is my my target here of 50%. Since I collected 430, wheat 560 call, need a bigger rally out of that thing. I've been in that for a long time.
You got a big rally yesterday, to some degree.
Yeah. DraftKings trying to get in that. ETH A, diagonal spread, nothing to do there. Gold diagonal spread, IBIT strangle. I just rolled into this 1 day ago. So I rolled into the big rally that we saw in Bitcoin when it was up 5K. I rolled from November 65.75 strangle into the December 65.75. I've collected almost $3,000 on this trade, which is actually more than my target that I thought I would get. I started this trade with $500 at the beginning of the year. I've made 12 rolls, and I've got up to $3,000. So a lot of premium there. This will be a core position for me forever, I think. Well, I'll continue to do year-long trades, but this one I think I'm just going to continue to roll.
It's going to do it forever.
Yeah. I mean, the premium there is just so good, and I want to have an upside bias in Bitcoin. And the call skew is great. That's one of the other things is like this 75 call trading for almost $2. Like, and my whole idea here is I'll have the call on, and I think this is applicable for SPY. I want to run a research test on this. So you have a strangle on, SPY or SPX. You have a strangle on. Instead of having short delta, where if the market rallies and you're tested on the call side, where normally you're going to roll the put up and take some short delta. Instead of doing that, just shift the whole thing up. So if IBIT rallies from 65 to 75, move this entire thing. So I have a short put at 75 and a short call at 85. You can do that for a scratch all the time. So this is a way to continue to collect premium on the upside. So if there is a sell-off, you're hedging your downside risk, but you're never in a scenario where you have short delta or an extreme amount of short delta.
Well, it's kind of like playing skew, right? I mean, basically is what you're doing each time. You're basically playing the skew game with it.
Yep. I've done that a couple times in IBIT. I've moved it. When I started this trade, it was at 50.65. So now I'm at 65.75, and I've never really had short delta here. I've rolled it up from 50.65 up to, actually down to a straddle at 55. And then once I got tested there, rolled it back up to a strangle, rolled it up and out. And I've been at these strikes since July. The 65.75 strangle I've had on since July. Just rolling. Awesome. 280, 250, 180. So like that's the nice thing about this product. So I'll continue to have short premium for the whole year, next year too. But yeah, I think next year's year-long trade might be in SPY. I might throw it on SPY and do something similar to this, where if I'm tested on the upside, I'm just rolling the whole thing up.
Nice.
Oh, we got an AOL user. If you didn't grow up with dial-up internet, you wouldn't understand. I grew up with dial-up internet.
Yeah.
I used to play video games.
I understand.
My parents would be trying to make calls. Sorry, can't do it.
We understand.
Yeah. Let's see. Short meta at 775. Yeah, I think this is interesting. We're at an interesting time where like these stocks are having a hard time ripping. And it's weird because yesterday we were just talking about how like all these stocks are probably just going to rip higher. And now for some reason today it feels more ominous.
Yeah, I mean there's definitely something weighing some of these things down, I think. You could feel it a little bit.
Yeah, Stock Messiah corrected me. I'm talking about the Stupor Bowl. Selling a put to pay for call spread. The stupor bowl is when you sell the 50 delta puts to pay for 5 to 10x as many 15 delta calls. I do like that as well. What's interesting though is that used to be a cool setup in SPY. So like before the interest rate, and maybe it'll probably come back into play now that they're cutting interest rates. But what you used to be able to do in SPY is you used to be able to do something like a short put at 675. So, or 677, we'll call it 10 points below the market price. And then if you go 10 points above, the call skew was never like this because interest rates were zero. It used to be so cheap where you could sell this for $1,000 and you could buy 2 or 3 because these would be trading for $300. But still, I like that idea of selling a put to finance upside gamma. So like something like this, where if you look at your expiration graph, you are selling a put for $1,000, buying 2 upside calls for $800, still collecting a $200 credit. But if you get that rally, your profit potential is way more than your short put because you have these upside gamma calls that you're completely financing with the short put. So if you are truly bullish on something like SPY or the Qs, doing a setup like this is very interesting because you still have a high probability trade since you're eliminating the entire cost of the 2 calls with the sale of the short put. If your risk profile aligns with that, something like that.
And markets never go down. So, I mean, there's...
Yeah. Never, ever. All right, 10 minutes left here. I'm going to scan through the chat. Adobe?
Adobe.
Up $4. Sitting at lows. This is one of those companies that, I don't know, worries me a little bit.
Why?
Because like Adobe is the mega suite for all things production related, creative services. They're weaving AI into this. But like now I can just go to ChatGPT and be like, make me a futuristic image of X, Y, and Z and blah, blah, blah. And it's just 5 minutes later, it's there.
And like Sora and things like that.
Yeah. So I don't know. This company, it worries me a little bit.
Well, you wonder if they pivot, if they buy something, what do they do? I don't know what their cash situation is. You're a little bit surprised they haven't done that yet. Again, something transformational is happening, man. And they missed. I'm glad you mentioned Fig. They missed out on buying Fig, right? I can't remember if Fig turned them down, what the deal was, but they missed out on that. So, yeah, you wonder.
But yeah, if you think that Adobe's not going anywhere, then yeah, this is a prime situation to potentially buy the dip. Short premium is expensive, $360 stock, but diagonal spreads, calendar spreads, this IV is still very low. 40% IV for an equity is still low. So let's just look at the premium distribution.
No, it feels like they might have had their heyday in 2021.
I mean, yeah, that's what I'm saying.
Although the stock did drop big everything dropped big in 2022.
Like these are the strategies I would look at. So like getting into a call calendar spread where if you look at when earnings are, they're projected to be early December. You can see an implied volatility boost in that December cycle. You can buy January at a discounted IV. You can sell December at an inflated IV. And if you look at this cost distribution, you're buying January for $1,400 in change. You're selling December, same strike, for $10,000 in change. So 80 days relative to 50, and you are reducing cost basis by 60%? No, way more than that. 70, 80%? 80%. So yeah, these are the strategies I'd be looking at if you're playing upside or downside in Adobe, is just keeping it really small and reducing cost basis aggressively with the short option. This risk graph is if we were to just do nothing here. Actually, that was for middle of November. But if we do nothing to IV or time, if you get a rally, you can make 50% on your debit paid. So I like these, like super small calendars, takes advantage of the IV.
Super small and risk defined. Yeah, I like that too in the same, because again, there's a lot, like you said, it is a little worrisome about where they are right now as a company.
Let's see what else we got here. What else we got? Adobe put credit spread 24 days to go.
Adobe fan club here today. 24 days to go.
Yeah, I mean, I would just rather do the calendar spread. Like if you're selling in, so my issue with this is, first of all, these markets are 30 cents wide.
Mm-hmm.
Second of all, if I'm selling a put spread right at the money, 360, 355, I would expect to get $2.50 for this. You're not getting that. Even if you go to 355, 350, you're under $2. So now you're like at the stock price and you're collecting 1/3 the width. It just doesn't make sense from a risk reward standpoint. Your risk is $300 here if it drops to 350. If we look at the calendar spread at 400, where you're playing for an upside move, your risk is going to be probably less if you get that same downside move. So yeah, your P&L at expiration, of course, is your debit paid, but your theoretical P&L is really not that crazy. You can see here, like if we were to get a 50-point sell-off in Adobe tomorrow, because I'm reducing cost basis so much on this long option by the sale of the short, my risk is only $150. Your theoretical risk is only $150 because you're reducing cost basis so aggressively. So I like this setup better than a short put spread.
Definitely. I mean, you just have, I think it's just a better profit potential I like.
Let's see. Here comes the Nokia micro pull. little rug pull. That'd be crazy if this ended like net down.
It did touch over 8, right? What was the high here? 805 probably? Oh, 810. Yeah, look at that. I mean, wow.
810. Let's do my favorite thing and look at these out of the money calls. Yeah. This 10 strike call was worthless yesterday. Now it's trading for 70 cents.
Yeah, how about that?
These are the things I like to pull up and be like, if I only bought.
I know. I know, right? I know.
But yeah, crazy move here, and you can see it completely reflected in the IV rank of 182. Like, let's just look at Nokia.IVR.
I mean,
let's see what this chart looks like.
Honestly, I would expect. I'm surprised there's not more trading. I'm surprised there's not like. Well, I mean, there is a lot trading, but I guess this is fine. I thought there'd be like 20, 30,000 calls traded at this point in the near term. Okay, I guess for tomorrow for Friday's expiration, there's like 65,000 that have traded on the 8 line. It's fair.
210 million shares traded today.
Yeah, about it.
That's hilarious. Let's see. What was the previous?
Back, man.
What was the previous volume? I guess. I mean, it's still actually pretty volume heavy. 20
Some
million,
people who
40
still believe.
million. A couple days ago, 60 million, 110 million. But yeah, today, 210 million.
If you have an AOL domain account, you're trading Nokia for sure.
Probably. And you probably held it for 20 years. Finally. But yeah, crazy move there. We're seeing crazy moves across the board. Let's take a quick look and see if anything else is standing out. NASDAQ 100, upside moves. PayPal, Intel, Tesla, CrowdStrike, Microsoft, like you said, Shopify, NVIDIA. Downside moves. Qualcomm, MicroStrategy, below 300.
Is it? Wow.
Lulu,
Interesting.
below 180. Lulu. Left for Dead. This stock looks like a UPS chart.
It does.
Don't forget about BlackBerry. Oh my God.
Yeah, BlackBerry was a crazy trade too. And originally it was RIM, Research in Motion, for whatever reason. That was the name of their company. And RIMM, that was a crazy ticker to trade. I got to tell you, that thing had some vol and it had some moves.
Yeah, I was never a BlackBerry guy or a Palm Pilot. Didn't like it. I loved my T9. I liked my
T9.
phone that lasted for an entire week without charging the battery. And T9, like I could type so fast with T9.
Yeah, I know. I remember T9. I remember T9. The BlackBerry was nice though. On tapping on that, it was kind of like.
Yeah.
But once that ball got messed up, you're done.
But the keys were just so tiny.
Yeah, they were.
It's like, what is this?
And you didn't even have to look. You just.
Yeah, that's what T9. I could do it sleeping.
Yeah, I remember T9.
T9 knew exactly what.
Whatever happened to T9? That was really kind of weird.
That was peak texting.
Yes, it was. Yes, it was.
Any thoughts on target bounce right here? Yeah, I love it. I actually have a diagonal spread in target.
Yeah, you do.
I've got a 95-100 call diagonal spread. The 100 strike expires this Friday, and it's trading for $110. So this is one I'm going to hold because even if we get a little bit of a sell-off here in target, that 100 strike call that's worth $110 going to zero this Friday will offset some of that move. It's up 25 cents right now, and I've been in this trade for 60 days. So this is another one that speaks to diagonal spreads for earnings, which is what this was. I bought this trade when it was 85 days out with November, October. So actually this might not have been an earnings trade because I went longer term with that short option, but paid $6.40 for a 10-point wide spread, and now we're finally seeing this come into fruition here. So yeah, I'll keep my eye on this for sure, but I'm gonna hold on to this for now. But love the bounce. And it's still tradable. Like this is they have earnings coming up early November or mid-November, but the IV's below 50%. It's at the bottom of its price range. Sub $100 stock means cheap options here. So yeah, you could get into a new one if you wanted to, like long January, short November. Like a 100-110 is actually trading for $5. It's a nice low cost basis for being able to hold it through an earning cycle if you're bullish. But that's it. 12 o'clock on the dot. We out of time. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Stay tuned though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. And yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then.
Peace. Taco.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore.
What's the most financially irresponsible thing you've ever done in your life?
Oh, yes. Okay. So when I was like 16 or 17, I was working at Jewel Osco. I was pushing carts. I was making like $7 an hour, $8 an hour. But for whatever reason, I decided my car had to be painted from red to black. So I worked for like 6 months. I literally spent like $2,000 to paint my car from red to black, and then like a year later, I didn't have the car anymore. So I worked for 6 months at Jewel pushing carts to paint my car for literally no reason. And that was the most irresponsible thing I've done. So don't let your kids do stupid shit like that.
What kind of car was it?
It was an Acura Integra.
Just buy a lot of near-term weekly options. If I had a $100,000 account, I was long like 20 grand worth in the front month for sure. Don't do it, kids. Don't do that.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
What is going on, everybody, and welcome back to Risk and Reward. It's another midday. It's another boring midday. I got to be honest. It's another all-time high, so kind of same story. We're going to talk a little bit more about the fixed range volume profile and the anchored volume profile, especially on a slower day, so that we're prepared for all the volatility to come. But before we do that, brother, how are we doing today, Gus?
Shoot, man, it's never a boring day for me on all-time highs. Keep going higher. No, I'm feeling good. UNH earnings went the way that I needed it to, and then faked me out in the middle of the day today. We returned to pre-earnings levels. I was a bit terrified for a moment, and then we've rebounded right back. Yeah. So no complaints out of me. But yeah, feeling good. It's a good day. Taco lunch.
It was good. It was fire.
Taco lunch low-key weighing on me right now. I'm a little sleepy right now. I can tell. No, I keep this energy up for you guys, but I'm just gonna be gassed when I get off this stream. Is the deal?
No, I hear you. I mean, it was good today. I usually like the steak. What's your preference?
Oh, I thought you meant like STAKE. Oh, no. And I was like, what are we gambling on?
It's probably Shake Shack or something.
No, chicken for sure. Chicken. Yeah, from that place. Yeah. Can't. Yeah, the steak is good, but
can't complain. The Kramer commercial still cracks me up every time I see it. It throws me completely off guard. I'm like, I forget we have this running. It's hilarious. You've seen that commercial, right?
What commercial? Oh yes, the one that we have, the Kramer one. Yeah, I just saw that comment as well. Yeah, had me. That always has me laughing. It's just so good. It's so good.
It's good. But for any of my active traders out there, I know it's been a little bit slower. You know, it's a time period where we got to be a little bit more patient. Ripping into all-time highs. You know, managing a lot of positions, whether that's taking some long delta off. I'm not looking to get ahead of the curve and call the top, so I haven't really been putting on any short delta. So with that being said, I've been patient sitting on the sidelines. I wanted to use today to find the levels in the market that is going to be a little bit more attractive to the active traders out there. So we're going to use a volume profile to do that. And there's a couple different styles of the volume profile you can use. So we'll talk about the differences, and we'll go ahead and get into the TradingView platform and go through all the assets we want to look at for the day.
Yeah, we're closing on 7,000, man, in SPX, which is as crazy as that is to say. I don't know. I would have felt like even yesterday, I would have said that I think we might need until the end of the week to touch 7K, but we're just right there.
Yeah, I mean,
we're only 100 points off now. It seems very reasonable that we could do this by the end of the week. So we'll see what happens. I remember seeing a comment earlier, like hours ago, earlier today, about how 7,000 just might be the greatest set of stop orders that we've ever seen in our lives. At
7,000?
Yeah, at 7,000. Like that's going to be a bunch of people. Yeah, you're going to have profit takers. You're going to have short stop orders. Like everything is going to align. That's going to be a big psychological resistance.
No, I'm looking forward to it. I mean, at this point, we're at all-time highs. If we want to keep going, by all means. I'm not going to be able to catch most of the bag if we keep going. I mean, I don't really mind at this point because it's not like I'm in a lot of these long moves right now, besides the existing positions that we have on. But from an active trader point of view, it's like all-time highs is just one of the, I'm keeping it a buck on here. All-time highs is one of the worst places to be as an active trader. Like there's not much going on, especially with FOMC this Wednesday. I think we have PPI later this week. Either that's Thursday or Friday, if I'm not mistaken. Don't quote me on that. Actually, you can quote me on that because I would like to know exactly what that is. But FOMC, I'm looking forward to that. 2 o'clock on Wednesday, and then the press conference is 2:30. I think it's hilarious. We get the press conference after the interest rate decision. But we can jump into the TradingView platform, and we'll touch on all those topics.
Yeah, let's dive right in.
The press conference just gets me every time. It literally says press conference.
I mean,
you know what I'm saying?
Yeah,
it's a press conference.
It's what it is. It's the post-game interview.
Right, post-game interview vibes. But we got NASDAQ over here on the charts. Really not anything going on this week. I wish I was on here talking about what positions we might have been taking, what we're looking at, but there's been nothing. So we've just been sitting on the hands, getting some of the things done. But with that being said, another all-time highs. And we had a massive gap up over the weekend. And I know that's going to be a level we're going to be paying attention to in terms of, or myself at least, in terms of skewing more of a bearish bias. I think we would need to head a little bit lower because it feels like we're going to be in pullback territory for quite some time until we get a significant pullback. All about J Powell's tie color. Yeah, we had seen that. And to my point, I'm colorblind as well, so it's not like that would help my case too much. But Nokia also popping off. I know you guys were touching on that earlier today.
Nokia is going so crazy. It's, I mean, and rightfully so. I just had this revelation in the last hour since I read the story about the NVIDIA is giving $1 billion to Nokia. That's the TLDR. Giving isn't the right word. NVIDIA is investing $1 billion into Nokia. It's not just a gift. But they are, so Nokia is mooning on this news. I did not realize how large of a company Nokia still is. Ahead of this move today, they had something to the tone of a $40 billion market cap.
Is it $40 billion?
Yeah, which I would never have guessed. I would have thought, I mean, I went to look at Nokia's market cap because I was like, why aren't they just giving this in a percent? Like, is NVIDIA not just acquiring 50% of the company here? And no, they are not at all. They're a major cell service provider in Canada.
Cell service.
Yeah,
they went
is the deal.
route.
Yeah, so that's where they're at.
Okay, so Nokia again was the brick cell phones, if I'm not mistaken. I didn't have a Nokia. I think that was just a little bit before, maybe the 80s, 90s.
It was early 2000s. I don't know what it is, the Nokia 6300 or whatever. You've seen a picture of it before, but that's like the indestructible cell phone. Like there's a meme that circulates of one that got like paved into cement in a sidewalk and like it's still just intact and stuff like that. But yeah, the Nokia, is it 6300, 7100? It's something 100. Somebody in chat will tell me. That's like the indestructible phone.
Okay, well, I mean, the stock seems indestructible right now. I mean, we've went from about $3, $4 to about $8 now. Not the biggest move, it seems like, but I mean, that's a 100% increase in this smaller underlying like Nokia. So they're going strong, no pun intended.
Yeah.
Going strong.
Yeah, quite the ripper of a day for them. I was worried. I'm short BlackBerry and have been short BlackBerry. Yeah, and I was worried that this was going to catch a sentiment move, but it did not, which is good.
I think it's hilarious.
It would make no sense if it did.
Right.
But I was still scared.
BlackBerry is supposed to be the Nokia killer, so it'd be funny if somehow Nokia still comes out on top when BlackBerry was killing their business for a minute there. But as we get into and before we move on from the cell phones, I was watching a video yesterday with Steve Jobs talking about it was the first presentation talking about how the BlackBerries aren't very is not a very efficient device to be using because of the buttons that they have. And he was just giving the presentation on the very first iPhone coming out. And then I was sitting there watching that presentation and I was just like so shook just to see how in hindsight, how right he was about this tech and building into this and him just doubling down here and just seeing how it pans out through the years. And then sitting there recognizing I'm watching this on my iPhone. It was such a full circle moment. I was like, whoa.
No, yeah.
I'm watching this on my iPhone, watching this video.
It's true. It's insane how far things have come so quick. I'm debating getting reshort BlackBerry here.
Okay.
Now, I mean, my position is fundamentally dead, and it was basically a just for fun position in any case. I'm down. It was something like $40 a contract when I bought them. I'm down 25 a pop. They're sitting at $15 a contract right now.
BBBY?
Just BB.
BB.
BlackBerry also, their market cap is $2.82 billion. So BlackBerry is the size that I thought that Nokia was. But little did I know that Nokia has made the right moves behind the scenes and is somehow 20 times larger than BlackBerry in the big 2.5. So good for Nokia.
2.5.
But yeah, I think I'm going to just... I think I'm just going to exactly redouble on my position. Is that crazy? if I just do 4 more at 16.
It's not like you were oversized in the first place.
Yeah, no, it was very small size in the first place.
Right.
Let me see what my exact price on these was. Get my new cost average.
I love the Nokia. It tumbled down on my icy ski hill scratch free.
Exactly.
I just vaguely remember Nokia being another meme stock in 2020. I'm sure Reddit trolls have remainder shares will be thrilled.
Yeah.
Oh, they have remainders. Yeah, the bag holders.
Yeah. Right. Nokia and BlackBerry both were. Yeah. I see it. You mentioned that right after. Nokia and BlackBerry both were memes around that time. My cost average on these is 42 a pop. So I'm very
32.
42. Yeah. So
you're chilling.
I'm very low overhead on this.
Yeah.
So yeah, man, let's freaking double down. Quantity 1, 2, 3, 4. Please give me a fill.
And I mean, they were getting hammered. In 21, all the way to about 24. Could be the fourth turning.
gonna lose my freaking mind. Every single time I try to place a trade while we're on air, I get slipped. I don't know how. It always happens the second that I switch it.
Market's a little wide over there.
I got slipped $1. No, it's a 2-cent wide thing, but it was a 1 cent wide. It was 16.17, and I tried to get filled at the 16, and then it quickly expanded out to 16.18, and I had to move up to the 17 to. Anyway, we're locked in. I now have 8. I now have 8 BlackBerry 24 DTE November 21st expiration 4.5 strike puts.
What's wrong with their user interface? The problem with them is really sort of in the bottom
with this, guys.
there. It's this stuff right here. They all have these keyboards that are there whether you need them or not to be there. And they all have these control buttons that are fixed in plastic and are the same for every application. Well, every application wants a slightly different user interface, a slightly optimized set of buttons just for it. And what happens if you think of a great idea 6 months from now? You can't run around and add a button.
I've never heard of a Palm Trio before.
So what do? It doesn't work because the buttons and the controls can't change. They can't change for each application, and they can't change down the road if you think of another great idea you want to add to this product. Well, how do you solve this? It turns out we have solved it. We solved it in computers.
A great presentation.
20 years ago.
So good.
We solved it with a bitmap screen that could display anything
Although
we
computers
want.
also
Put
have a
any
keyboard.
user interface up.
I would add.
And a pointing device. We solved it with the mouse, right? We solved this problem. So how are we going to take this to a mobile device? Well, what we're going to do is get rid of all these buttons and just make a giant screen.
I just wonder what that organic feeling felt like. Right? Like we knew it was coming.
How are we going to
like
communicate?
organically,
We don't
I
want
wonder
to
how
carry
it
around
felt
a
like.
mouse,
Whoa.
right? So what are we going to do?
That's got to be
a stylus, right? We're going to use a stylus.
I love this part.
No.
No.
Who wants a stylus? You have to get them and put them away and you lose them. Yuck. Nobody wants a stylus. So let's not use a stylus. We're going to use the best pointing device in the world. We're going to use a pointing device that we're all born with. We're born with 10 of them. We're going to use our fingers.
Thank you, production, for that wonderful interlude there. Yeah, we needed that. I love that commercial. It shows the part that gets stepped over in that presentation. Commercial isn't the right word, obviously. In that presentation, is that he says very quickly, what if we think of some other wonderful feature that we want to add later and we can't because we have this keyboard? And that's why he was such a visionary right there, is because he was thinking ahead. He was thinking about iOS, and that happens now, right? All of our iPhones change all the time. iOS, what is it now? 17 just came out with like the liquid glass and all that. Yeah, I can't even keep track anymore. But he had the foresight even at that time that things were going to be constantly evolving within the phone and that you wouldn't want. It's crazy. It's crazy.
It blows my mind to just look back to, because when you brought up the buttons, like they're fixed buttons, makes perfect sense. Like if you're playing a video game, stream or whatever, it's like, how's that button going to be able to be optimized for every facet that you want to use it in? So just thinking about it at that time, it seems like such an obvious, right? In hindsight, because it's like we grew up with the technology, but it almost seemed like such an obvious right solution. Yeah. But at the same time, during that time, that was when we barely had the software and tech developed to even do something like that. So
well, and the stylus part too is interesting, because like styluses that like really came and went right there. Like it was like, I remember like my DS, like you had a stylus with your DS. That was a big deal. Some of those original Android and Samsung phones had a stylus that would pop out the side and you could use. Maybe they still do. Apple has the pencil now, so I guess they came full circle on that one, but you obviously don't need it. But yeah, styluses for touchscreens for like a little 5-year window there were like that was what you had to do if you wanted to directly touch on the screen.
I can't recall exactly what year that video was from, but I remember stylus were popping off even more when I was in like middle school. I remember I wanted the Note, so that the Note phone. Remember the Notes?
Yeah.
Those are first
Galaxy Note.
The Galaxy Notes, when those were first coming out, they had the stylus.
Yeah.
That's what made them popular. And also, the Notes are one of the first Galaxy phones that were as large or close to like the iPhone.
Yeah.
So I remember
the video was 2007.
It's 2007. Okay, so the video was 2007. I was in middle school. I fell in love with that phone for some reason. The Note specifically. I would see people with it in public, just thinking like, wow. Imagine having that. But that had the stylus, and that was about 2012, right? He dropped that in 2007, and he made the stylus seem so dated.
Yeah.
And this is before we even got some of the best stylists into 2011, 2012, 2013. And he was already had the vision to recognize stylists were going to go out of date anyways, before they were even, mainstream or popular with every single phone. So anyways, that is kind of interesting to think about. I didn't even think about the time when he released that, 2007.
It is. What a fitting video for Apple's first venture over $4 trillion market cap today.
Are they venturing towards $4 trillion?
It's they made it over today. It's their first time in the $4 trillion club.
I think I was a freshman or sophomore in college when I think Apple became the first company to hit a $1 trillion.
It was around that time for me too. I think high school was when, late high school was when Apple became a $1 trillion company for the first time. But that's crazy because they were the first $1 trillion company ever then, and that's like 5-6 years ago.
And they 4x'd.
Yeah, and they have 4x'd, and they're like, I think they're the third biggest company in the world right now. They got passed.
That's not even that's kind of a small time window too. I feel like it wasn't that long ago. I know the last 5 years feels so skewed with COVID in 2020, but it doesn't feel that long ago to 4x your company another $3 trillion on top of the $1 trillion.
Yeah, Apple, as we actively speak, have given back the $4 trillion. They are valued at $3.995 trillion. And yeah, Microsoft and NVIDIA both above them. Microsoft 4.035, and then NVIDIA, obviously king of the castle, $4.771 trillion company. But yeah, it's crazy. It's crazy to think that, that video we just watched wasn't that long ago, and then you compound that into when they hit $1 trillion, and now they're already.
He's dissing stylists.
Well, and the crazy part is what has Apple really done in the last 5 years that's revolutionary that you can name off the top of your head?
Nothing.
Nothing.
Well, that's where
they expanded their revenue segments. That's a big thing. They expanded into services, and they've pushed Apple TV. Why am I blanking right now? Fitness Plus, Arcade Plus, Apple Music. They got
Vision Pro.
Yeah,
a little bit of the Meta.
A little bit of the Vision Pro in there. They've managed to get some services revenue going and diversify their segments, but holistically, they've really just stuck to the same old Apple model we've always known. New phone every year and new computer every now and then. And they haven't apart from the Vision Pro, which did not ever hit wide scale consumption. They haven't really rolled out any new product since then.
No, and that's why I just got to say to Tim Cook, hey, don't get Googled, man. Don't get Googled.
It's true. It's true.
Google, I saw them as untouchable. Nobody's gonna ever come close to them, and now they got to rival ChatGPT, which Google's still the big dog. But at the rate of speed that AI and ChatGPT and Sam Altman is moving, they could take over Google in terms of the main search engine.
Oh yeah, we were just talking about this yesterday. But honestly, Google could really, really fall by the wayside. I think genuinely, I will make this prediction right here on the record. I think within 2 years, if not 1 year, Google is no longer a Mag 7 company. I don't think we'll be talking about it in that same echelon, just because. I think that their revenue gets cannibalized down to YouTube and Gmail. I think that that's what they still have that are still going to be good offerings that they can continue to have. But yeah, search engine revenue is getting cannibalized in the first place, and then ChatGPT rolls out ChatGPT Atlas. They say just go ahead and browse with us.
I downloaded that today.
Yeah, it's there are some security constraints. Don't
are there?
Apparently,
I literally hit download maybe an hour.
This is all just Twitter conjecture I'm about to regurgitate, so take everything I say with multiple grains of salt. But yes, to my understanding, there is something with the nature of it being a large language model that is built directly into a browser that makes it way easier for hackers to get in on the back end and give commands is basically the thing.
Yeah.
So
I'd imagine IG wouldn't let this go through if I.
Yeah, that was part of it.
Put it in my applications folder yet too. So I don't know. I hope my computer doesn't.
No, I got it on my computer out there. I'm way ahead of. Yeah, no. As soon as I saw that thing dropped, I was like, oh, I need this immediately, and I love it. I love the UI. I love the ChatGPT built right in. I think that will become my primary browser, but I would I'm gonna let everybody else be the guinea pigs for 3 months, and then I'll pick it up.
I got you.
Atlas is a Chrome extension. Yes, that's also true, more or less. Okay, what else we got? 1997 for the Palm Pilot. I see everybody talking about this Palm Pilot and the Palm Trio.
What's a Palm Pilot?
That was one of those other BlackBerry-like phones that he was. I said I've never heard of a Palm Tree before in my life. Palm Trio, rather, I think is what it was called. Tim Cook is a hardware guy. Agree. They pimp new features that have existed on Android for years. That also is part of the Apple model. That's been working for them forever.
I'm sorry. I'm not making fun. I hear that all the time by Android users. It's a meme now, isn't it?
It is, yeah.
Yeah. It's like when the new iPhone, when the new camera comes out, they're like...
Every time, yeah.
It had this gigabyte. We could zoom in 50x already, which I get it, bro, because if another company came out with features that we were already producing and screaming at the top of the hills and someone else came out with it and they're all like, wow, revolutionary, I'd be like...
Well, it's just...
I've been saying we had that.
It just showcases Apple's marketing. I mean, Apple has convinced the American public, myself included, that they are a luxury brand, no matter what. They are a luxury brand. They are the top-of-the-line smartphone, to the point that we, myself included, no longer even care about the features, really.
True.
We want the Apple ecosystem. The ecosystem is a big part of it, and we want what we perceive as being the luxury product. And that's the thing, too, is the ecosystem locks you in. Right. Because it would be obnoxious. Maybe it's not. Maybe they have made this easy because they know that they have to. But in my brain, it would be very difficult to switch all of my stuff on my phone right now onto an Android if I were to go that direction next. I wanted to acknowledge this as well. J-Fan, you all are sleeping on Waymo. Good ass point. That's a good point.
Are we sleeping on Waymo? I see the cars with 50 cameras on it driving by here and there. That's the Waymo, right?
Yeah. There's a few of them now, like a few companies doing the driverless taxis. I'm not sure. You see them here in Chicago? I don't know.
No, down in Tampa.
Oh, sure. Yeah, I'm not sure if that's Waymo down there or not, but Waymo is gaining a lot of prominence in the cities that they are in, and that certainly does have upside. I mean, because I guess that's a very good point, because when you look on that side, I think Waymo cannibalizes Uber. So there's something there.
I mean, absolutely it does.
It's just funny how companies' identities shift, though, because in this world that I'm talking about, it would be Google is YouTube, Gmail, and has a giant portion of their revenue coming from cars.
Google?
Yeah, Google.
Right.
They own Waymo. Yeah, they have a giant portion of their revenue coming from Waymo. What I'm saying is, I think that there's a very real world where our children are like, oh, Google, like the company that owns Waymo, like the taxi company, and like that's sort of a crazy thing to think about.
That makes perfect. The logic behind that makes perfect sense. So just thinking about that,
and I don't think YouTube has gone anywhere either. They have a monopoly.
Good point.
On that.
Because I'm not gonna lie, the way ChatGPT is moving, I just don't see. I mean, I just ask ourselves, look at our own behaviors. Have our behaviors changed from going to Google in terms of first, even thinking about it? Like, have our behaviors changed? I know I've seen mine. I use ChatGPT as a resource a little bit more often to search things, but I'd always think of it as like Google's too big to fail. Google's too big to.
You want to pull up Google here while we're?
Yeah, we can pull up Google in the meantime. Google's too big to fail, right? And it would make sense at Google, especially if they own Waymo, they might just be the top dog in another, in another area.
I mean, that would be the big pivot. But yeah, and then that has implications for Uber and Lyft in its own right.
100%.
Yeah, that's all sorts of interesting.
Yeah,
and I don't think YouTube is going anywhere. I think that they have that locked in. But yeah, I mean, I think, but and I was going to respond to your question about behaviors. Yeah, for sure. I mean, I noticed that sometimes still, just because old habits die hard, I will Google something and then be like, why did I just Google this? And then before the results can even load, I will close my app and go over to ChatGPT. But yeah, I don't use Google for any searches anymore. I mean, unless it's something very, very quick, like a date or like how many days since or something like that, like something I know it can just fire off for me real quick. But aside from that, I don't really search things on Google. I use ChatGPT. I will, if it's something high end or like if I'm writing an article for the website or something like that, I will always use Google to corroborate what ChatGPT is telling me. But if it's just like something for myself and in my personal life, I'm just using ChatGPT and that's that.
No, I'm pretty much in the same boat over there.
Oh, yes. And Microsoft also announced a revenue deal with OpenAI today. I saw that. 27% is what Microsoft is going to own in OpenAI. And OpenAI that was a full OpenAI restructure with the Microsoft ownership. But I also saw that it's, how'd they phrase it? OpenAI's nonprofit arm owns $130 billion of OpenAI's for-profit arm.
Okay.
Which, is that, like, legal? Like, you can just do that? You can just say, oh, like what if right now, I don't know, Tim Cook. What if right now Tim Cook just created a nonprofit company and then sold himself Apple for $1 and then was like, this nonprofit company now owns 100% of Apple. So we don't have to pay any taxes, even though we own 100% of Apple. Like, where's the line? Right. At what point can your nonprofit not just own a ton of it anymore? That's very interesting.
You're asking way too many questions. Far more than they want you to ask, brother. Any comments to catch up on before we get into some of this NASDAQ right here?
Just hit 1.2 gigabyte per second download speed test on my Pixel on Verizon.
Okay,
That's
Jay's
insanity.
flexing on us right now.
That's just too much.
Absolutely flexing on
Nobody
all
even
of
needs
us.
that much. A nonprofit is legally able to own a for-profit business. Well, yeah. Why is everybody not doing that then? That's
yes, 100%. I'm a part of a for-profit a nonprofit. actually.
Well, yeah, we should let's just sell why doesn't IG sell this company to a company that they also own that's nonprofit for $1? Why doesn't everybody do that? I'm missing a piece here.
I know one of the benefits is sometimes a nonprofit will grow such a big brand that you can't really profit off of, and then you're forced to open up another arm of the business that is a for-profit, but to still be able to take advantage of the nonprofit brand equity and then utilize it over there a little bit. Nonprofit is big in Europe for corporations. You should look at what the more.
I was about to call it
right in the middle of my screen. Google
forever in the red. we ain't gonna do that here. We ain't having those conversations on air here.
With that being said, I mean Nasdaq's extremely volatile, trading towards all-time highs, and over the gap over the weekend, it left some interesting details, which will allow me to be a little bit more bearish once we can head into those areas. But
what's the time frame on this volume profile?
So this one is going to be, we're using the fixed range volume profile on this one to start. So what I did to get this fixed range volume profile, went over here, and then if we go under volume based, we have anchored VWAP. We'll go over another time, which is fire 2. We have fixed range volume profile, and then we have anchored volume profile. I've always made the argument. So I remember when I was first using volume profiles, I would click on volume profile and it would plop up on my charts, but I never knew the data in which that it was taking it. So I never knew, is this volume profile from this day? Is it from the previous week? Is it the entire year? I never really knew where the data was coming from on the volume profile. And I think using the fixed range volume profile answers all those questions for you. So with the fixed range volume profile, if you just take the time window in which you want, it'll plot the volume nodes for you. So if I go back all the way to over here to where we had this extreme sell-off on October 10th, I can click right here with my fixed range volume profile. I'm going to click at the top of this move so I can really take the entire range that I want. I'm going to click that, drag it over all the way to today's current price, and then I'm going to make sure that I'm low enough to make sure that I capture the entire range that I want to capture for this volume profile. And then once I let go, it's just going to plot it for me. So you can see it'll just take the exact range that I want it from. And for another example, if I wanted to go back even further to where we're trading at right now, I could go all the way back to, let's say, September 17th. I can grab this at its highs, pull it all the way to today's price action, all the way to the lows, just capture the exact range that I want. But I want everything, so I'm going to go all the way to the top, all the way to the bottom, and I'm going to take this entire window, and it's going to populate a completely different volume profile for me. So you can see that these two volume profiles are the same thing, but the only difference is the time window in which it's taking it from. And you can kind of see that visually right here. But that's really useful. I think that's very helpful to give you a little bit more context. I think when you lack context using volume profiles, they're pretty much useless in my complete opinion. They're useless if you don't have context with them. So with that being said, that's how you use the fixed range volume profile. We're going to go ahead and take these off right here. And another way that you can do that is by using the anchored volume profile. So I'm going to go over here, same area, get that drop down window under volume based, anchored VWAP, fixed range. Let's hit anchored volume profile this time. And now I can just go back and click wherever I want to click. So I'm going to go all the way back to, let's say, September 8th. Once I click that, it's going to have it on my right-hand side, and it's going to show me all of the volume occurred from September 8th to today's trading price. So you can use a fixed range volume profile. You can use anchored. It really doesn't matter what you use, but different strokes for different folks. I was looking at the settings a little bit here too, and you can have the volume profile on the left-hand side if you want it. I think it's so weird on the right. I think I like it on the left. I think the first time I seen a volume profile was on the right-hand side. It doesn't even matter, but being able to see the forward-looking price action relative to what it traded before, it just makes more sense to me in my brain for it to be on the left side. So that's why I like it over there.
Interesting.
That's about it. And then you can come over here to the width, the percent of the boxes, right, for the width. So I can change this to 15. Oh, 315. Let me change this to 15, and you're going to see, right.
So that's just the scale, basically.
Yeah, 100%. So yeah, you can play around with it like that, and see what you like better.
Interesting.
Why choose? What's EJ?
Valuable tool. Edward Jones. They're talking about.
Edward Jones.
Data Trader, in response to your question, this was a good question. I have a voice search button in the middle of my home screen. Google gives you both an AI generative answer plus the rest of the regular search results. How is ChatGPT better? And that's a real question. I've never used ChatGPT because I have no need. How does it actually improve upon what I described in the current Google search? At that point, it's just a matter of preference and convenience, I would say. You can, people who are really into AI and LLMs will point to these very, very subtle differences between Claude and ChatGPT and Gemini, and I'm sure that there are subtle little differences, but I mean, for the everyday user experience, I wouldn't necessarily say that ChatGPT has any considerable leg up. I think that that's just fine. It's just the expedience is the thing, and it's about getting to the answer that I want quick. And the Google AI overviews specifically, not Gemini if you go off and use Gemini on your own, but the Google AI overview feature is really bad. In my experience, I've come to find. Like, what was I trying to search for the other day? I was trying to search for the last time that it was something with the NLCS and ALCS. The point is, I was searching the last time that some trend had happened in the ALCS and NLCS in baseball. And Google AI popped up and said, the last time this trend happened, blah, 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 was in 2019. I don't remember the exact teams, but it had the right teams. Maybe that was Astros Nationals that year. It was like the last time this happened was 2019 when the Astros played the Nationals. Both teams went to 7 games in the championship series and then both lost in the World Series. That was what the AI overview said. They both lost. They went to the World Series and they both lost. And so it's little things like that where it's like, it's just not all the way there. But again, that's just Google AI overview. And why did I do a blanket Google search for that? I do not know. That's totally a ChatGPT question. I don't know why I didn't go there first. But yeah, the AI overview is bad, but Gemini itself is good. I presume that that's what you're getting access to with that in the middle, and I wouldn't say that there is any considerable difference. I'm just kind of yapping now.
Nah, I hear you.
I hear with Errol there too. Oh, you're talking about the left side versus right side argument? Yeah, you guys are left side or right side volume profile people. Let's get some teams forming.
Someone said we're sleeping on Waymo. I got to say, I'm definitely sleeping on Waymo. I know it's coming. I haven't seen a lot of people use Waymo. What would you say is a good use case of Waymo?
I mean, they're just not around here is the thing. But like Waymo, I mean, it's just a driverless Uber is all that it is. So.
Right.
Well, you're asking what the use case is?
Just let's say you're in a situation where you can use Uber versus Waymo. I'm not seeing the opportunity.
Me personally, I would choose whichever one is cheaper, which I assume is going to be Waymo every time because they don't have a driver to pay. So that's the big advantage. Also, safety is a thing. I mean, women safety in Ubers, that's been a big concern as of late. So having a completely driverless vehicle, removes all of that. And I shouldn't even just generalize that to women. Anybody can get kidnapped or killed or whatever in an Uber. It's obviously they do all their background checks and everything, but just takes
some people are ready to crash
the wrong person one time. Yes. Exactly, the wrong person on the wrong day. So there's definitely a safety element to it as well. And from what I've heard, people there, where are they? Phoenix, San Francisco. If anybody can drop me the full Waymo cities list. Let me just. Google's free. Waymo cities list.
Robotaxi. Stefan said.
I was right. Phoenix, San Fran, Los Angeles.
Okay. Stefan said Robotaxi over Waymo. That sounds like the same thing.
Are those not the same thing? Those sound like the same thing. Right. But is Robotaxi its own brand?
It could be.
Robotaxi.
Look into the details there. It says Waymo absolutely destroys traffic in the Bay Area. How so? Is it not?
Oh, Robotaxi is Tesla.
Okay. So we got Anthony said Waymo absolutely destroys traffic in the Bay Area. You know what he means by that?
I have seen things about Waymo causing traffic issues, just because it can't make,
So it destroys traffic or it creates traffic?
I think that he means it creates traffic and in turn destroys your experience in traffic. And unless I'm misled, clarify if that's what you mean. But everything that I've seen as it pertains to Waymos and traffic is that they create more traffic. But I could be wrong.
I got you.
Waymo, not Wayland. Oh, I see. There was a typo.
AI answers are frustrating at my actual job. People call in thinking they know the answer and then get angry when my expert and definitive legal answers differ from what they have researched.
Oh yeah, I know. I've actually seen something in that vein with barbers and particularly people who do braiding. Is that people will have AI generate an image of braids and then come in and be like, "Can you do this?" And it's like they don't even have starts and ends. It's just like some craziness.
I wouldn't even mind that. What I think would rub me the wrong way is if I'm an expert at braiding hair and somebody's searching up stuff on ChatGPT and they're coming trying to tell me no, the braids are supposed to be this way.
Yeah.
Because I looked and fact checked it on ChatGPT, I'd be like, bro, I've been doing this for 20 years.
Yeah.
That's where I would kind of probably start. I'm like, bro, what? ChatGPT. So
I think AI is a very valuable tool, but if you're ever in any case where AI has told you one thing and you are talking to somebody who is proficient in the field and has spent years studying it and they are telling you something different and you don't trust that person, you're
braid your own hair. Go ahead, just braid your own hair.
Yeah,
just braid your own hair.
Exactly. They just stop at green lights. I see. They merge behind construction sites where the lane is closed and just stop halfway into the lane.
Okay,
Yeah,
so it sounds like another GPS error.
yeah,
satellite.
that's kind of what I've been seeing. And yeah, and I know that there will be like the construction zones is a great point. Something else that I've seen is like, and there's a lot of this in Chicago where there's parallel parking on both sides of the street, and it's like really tight for two vehicles. And sometimes they'll kind of just like stop in the middle of the street and start to tweak out because they don't feel like there's enough space or whatever. Yeah, so there are issues like
merge
that.
behind the constructions. I thought you was talking about my sister driving. I ain't gonna lie.
Waymo is using Uber in
I have to
Austin,
get
using
Waymo.
Lyft in Atlanta, and self-performing in San Fran. They could coexist. Testing, they will find the answer. Oh yeah, I have seen that where like you just call in an Uber, like you call on your Uber app, and then the options pop up, and Waymo is one of them. Which I think, I think that's a good way to integrate. I mean, Uber and Lyft, especially when you zoom out to globally, have the infrastructure. So if it seems logical that perhaps they would coexist, that's a good point.
Yeah, it sounds like it would be a nightmare right now.
Yeah, and I mean it's just all early stages. I mean, such is true with anything. I mean, I saw Anthony say that as well. They'll work out the bugs. Yeah, they'll work out the bugs. It's just a nightmare right now. I agree.
Is you think there's going to be other industries lobbying against that? I mean, I feel, because if we're talking about transportation, get pretty political.
The poor regular taxis, man.
Oh, I know.
they got shoved down another rung.
On the apps, at least it shows the taxis on the apps.
That does happen, and that's all. Well, that's city to city. That's whether the city's taxi lobby has done enough to get their taxis in the apps.
Okay.
Like that's a big thing in the UK. We were taking Ubers all over the place when I was just in London,
right?
And the UK black cabs are always listed in Uber because that's a huge thing. And getting your black cab cert in London, I think, is like one of the hardest taxi certifications in the world. So they were like upset, obviously. And so they have to always be listed. But that does vary city to city. A lot of them don't show taxis at all. They aren't aggressive like a real driver.
Better not be aggressive
in traffic. It's true though. I mean, there are points in driving when you kind of have to be offensive for a second, like to make things happen.
Sometimes to protect
yourself, and also that does help the broder flow of traffic generally too. I mean, well, I shouldn't say generally.
Yeah.
There are instances where we're getting a little bit aggressive.
So I think it to me, it always seems it's going to be difficult to tie in AI with other humans. For example, in my mind, Waymo would be a beautiful service right now if everybody on the road was in a Waymo vehicle.
That's my thing. That's the end game.
Hybrid is tough.
Yeah, that's the end game. Is I think that there is a world in the future that you and I will be alive for, where all the cars are driverless. I don't know. That's like kind of gets scary and dystopian because I feel like you'd almost have to regulate that. A lot of people would want, and I'm not suggesting that we should, but I think it's a very real possibility that, or perhaps different lanes on the highway. That would be a good way to integrate it. What if you did 2 lanes on the side of the highway that are just for self-driving electric vehicles, and they know to take those lines, and then as soon as you get in that lane, they all can sync up with each other, and then we could just go 150 miles an hour if we wanted to, and nobody would ever hit each other because they're all.
I mean,
it's something I've brought up before on the show. I don't mean to beat a dead horse here.
No, it's a good angle to think about it from. That's why I'm thinking about it. The way that I see it is like, who in the world right now has the best transportation? Is it Japan?
Probably. I mean, probably Japan.
Something like that.
I would say.
Right? Whenever we get to talking about every vehicle on the road being a Waymo, it's like, why wouldn't we just increase the public transportation and make it like extremely high tech?
Sure.
Because that's essentially what it's going to be, just individual units of what could be one big thing.
Yeah.
So then I think like what's going to be more efficient. But then again, maybe if you want to get somewhere a little bit more specific, it'd be pretty cool for this thing to drop you off exactly where you want to be. So,
yeah, that's where I think it comes into play, and where it could kind of be another level above public transport is that it takes you directly to your destination. I mean, there's never any. But again, I mean, that is sort of a Wall-E situation, like you described.
So,
yeah. Anyway, to the point of the question about Intel, I do not know why Intel is mooning.
Intel is popping off right now, trading at about $42, just shy of 42.
Oh, they reported
a rank of 50 right now.
Earnings this morning.
Okay.
All it is. But yeah, Intel, another beneficiary of NVIDIA's endless wealth that they are throwing at everybody. Also, does NVIDIA get antitrusted sometime? Like, I think it might be time to start having this conversation. How many companies can NVIDIA buy? I don't think we're close to there yet, but when NVIDIA puts massive investment into Intel and then they put a massive investment into Nokia, how many more, or like, what's the tip? What if NVIDIA all of a sudden right now tried to buy some AMD? Like, is that too much?
It depends. It depends on how much stake of the government has in it. Then they will allow NVIDIA to buy everything up.
Sure. Yeah. It's just, I don't know. And like I said, I don't think that we're anywhere near that point yet. They haven't done anything crazy, but I want to put a pin in that on everybody's watch list that perhaps the NVIDIA antitrust suit could be loading sometime in the next 5 years if they continue to just acquire.
Again, lastly, before we move on from the topic of like ChatGPT, Google, wasn't Google just in the courts about like trying to break them up because they were getting too big and powerful?
Yes.
Wasn't that was like still now?
They have, which is hilarious with the way just the world has changed since the lawsuit broke.
Exactly.
It's a 2021 lawsuit against Google that they have a monopoly on search engines is the lawsuit, and it's still open. Like this is still an ongoing thing that they've been fighting. I see an update on it like once a year. But yeah,
I feel like the landscape has changed.
It has, yes, right? It has changed aggressively. I mean, yeah, now we've turned all the way over to where we're like, is Google search going to die? And they're still in court trying to prove that they don't have a monopoly somehow. But the ever changing landscape has definitely aided Google's legal team in that, I'm sure. I bet the lawyer in charge of that case was the one person in Google's entire company happy when ChatGPT came out.
Right.
It's like, yes,
probably
another search engine, a competitor. I mean, that's basically what it is. You got to root for your competitors in that situation.
Like they're probably having some fun now.
Yeah, they're just messing around. Western Digital earnings this week too. Unlock some shares.
Check those out. We haven't been doing too much in the portfolio, but let's get a quick update on what's been going on. We still have our Baidu position on. We sold an out-of-the-money call spread there. 24 days left till expiration. Going to look to manage that by the end of the week. Even if it's got to be break even, I don't know if we'll add more time onto it. It's going to be dependent on if we can roll that for a credit. That's going to be Baidu. It's the only Chinese name that I'm in right now. They've been pulling back after their insane rally. Even names like Baba. And then Beyond. It seems like a lot of the fun with Beyond is pretty much over, but we sold an out-of-the-money... we have a Zebra on in Beyond. I forget about that. So we got the Zebra on in Beyond. I think we got more long delta in there, over there as well. 52 days left till expiration. So if we can get any type of pop in Beyond, we'll be out of this one. Like even if Beyond could pop to maybe $250, $3, $350, if it just pops, we're out of Beyond. And hopefully that could happen within the next month and a half per se. And then we got Google. We got a little bit more delta on in Google as well. This one's coming in a little bit more. It's a slow roller though. Google's been, or my gold position has been a little quiet, but the volatility has sustained on Google. We paused for a little bit, but we're heading and making lower lows on the asset. And then for Oracle, Oracle's been another really volatile one. Sold an out-of-the-money put spread there. Got some long delta on in there. Pretty bullish on all the talks with TikTok. 24 days left to expiration. Going to manage this one by the end of the week. Getting towards expiration, and I mean, we're up just a little bit on that one, so it's been a little anticlimactic in there. And then Unity Software, this one's down a little bit on the day, but the overall position is up. $5 wide, 24 days left to expiration. Got some long delta on in here, about 7.5 million shares traded. The IV is still pretty high, so if this is something anybody else wants to take advantage of, it's a solid one to maybe look if you want to sell a Strangle, maybe an Iron Condor. The implied volatility is up, but there is some opportunity there. And then for UNH playing out pretty well today. Probably going to end up taking that one off. Only got a couple more dollars to squeeze out. So with that being said, anything else top of mind for you? How's I know silver is kind of the same boat as gold.
Yeah, silver worse than it was yesterday for me, but not by much. But yeah, like I said yesterday, I might have been too aggressive with the silver position. We'll see if I can get the lows in that I need. But obviously taking a little bit of a bounce today. Accenture is actually my winner of the day today. ACN.
Nice.
I am aggressively positioned on this thing. I discovered this from the wonderful 52-week near low watch list that is built straight into the tastytrade platform. It was really near its lows. Accenture is a very strong company that I actually think has really good growth prospects into the next year or so. So I went definitely still leap, but not crazy leap, just like 200 DTE. I've been bag holding these for about 60 days.
Okay.
Things have finally started to turn over today. I took 2 short put verticals, which this is not the way you should ever go about this, but I took 2 short put verticals in a ladder with the same expiration, which is not necessarily the smartest move in the world, but I was very confident. So I have long 230, short 240. That's one position, well in the money, it's a 254. And then I have long 260, short 270, which we are working towards. But the reason for my aggression, if we go back to the chart here, is that we are talking about this being a $400 stock in February. February of 2025. I'm not talking about...
Actually, no.
No previous.
$398.64.
Yeah, precisely, yes. Yeah, exactly. $398.35, whatever the ATH is. But $400 stock... What's that? Still 8 months ago we're talking about. And it cratered all the way down. These levels just started to feel a bit overextended. This down move is not unsubstantiated. They have been lacking. But yeah, once this started to get down like sub 250 is my entry on this. It just seemed to be a little bit too crazy. So that is why I do not feel... that's why I felt confident enough and aggressive enough to stack the 230, 240, and then also the 260, 270 on the same expiration. And I would note as well that I structured these such that the 230, 240 covered my buying power for the 260, 270. So had I middled those, it would just be a scratch.
No, I love it. I mean, they've been absolutely killed since February. It's kind of funny you pointed that out.
Yeah.
Just looking at some of the news on there on the platform too. First thing that pops up is Oreo maker Mondelez
International
to use new generative AI tool to slash marketing costs. AI tools cut in production costs by 30 to 50%. Execs say. How's the quality, though, is what I want to know about that. I know costs are getting covered. How's the quality of that? Interesting. AI sets up Kodak moment for global consultants. Double on October 24th. Just see if there's anything that stands out here. Unfortunately, big clients are...
Salesforce mentioned.
Sleeper build to say the less over here, Gus. Been absolutely crushed since February.
Yeah, it's right there. So if you... they have a stadium, Accenture Arena?
Do they have Accenture Arena?
Not Acrisure. I'm talking Accenture here.
I know eMedia said Errol should take a look at Gold. Or, I mean, not Gold, Google. Gold has been top of my mind. But Google, it's not looking too bad. We have earnings on Google pretty soon. I think October 29th, if I'm not mistaken.
Yeah.
So we're going to be patient for that one.
I think the 30th. It's either tomorrow or Thursday.
For Google? Mm-hmm. We got, I believe it's 20... What's today? The 28th?
Today's the 28th.
Okay, tomorrow after the bell.
Sure.
29th. There we go. Google, there was another ticker I wanted to take a quick look at. PayPal.
Yes, tomorrow confirmed.
PayPal. Inside move on PayPal. I know they name dropped AI again a little bit.
Well, this is OpenAI and PayPal have partnered is the deal. I don't think OpenAI took a stake, but now it's PayPal is going to be the exclusive. They're the first payment provider to partner with OpenAI. Mm-hmm. So now I think that the vision is that you could do have ChatGPT do some shopping for you, find whatever you need, and then just all in without ever leaving ChatGPT, you can check out on
Great play. Hey, whoever was behind that decision making, whoever let that deal go through, that's a pretty fire deal. I'm not gonna lie. I mean, snag PayPal, get that integrated in there.
Yeah, that's an interesting one. I'm interested to see what kind of how that shakes out. But
they're coming for Google. They're coming for Amazon's neck next.
Yes.
They're coming for Amazon's throat.
Well, that's one, though, that I think this would work directly alongside Amazon. I think that you would say, I need a black bookshelf with these dimensions, and then it would say, here's what I found across the web, and Amazon would be one of those listings, and Wayfair would be one of those listings.
And then Sam Altman's probably going to see that and be like, I hate that it brings up Amazon's listing. And then he's going to be like, we cooked them. Let's bring up our own product. Maybe bring up our own store. I don't know. Jeff Bezos didn't think he was going to be selling stuff online. He was a bookstore originally.
Well, he was selling books online, and then he went to selling other stuff online. I mean, that's different than being a large language model and then suddenly launching into e-commerce. I mean, they're in just totally different industries. I'm not saying it couldn't happen. I mean, that's the thing is perhaps the OpenAI takeover is upon us. But I think that they would be much happier just working alongside each other. Maybe
it's a lower lift in the short term.
Yeah, maybe they get Amazon and give them a little under the table money, and they pump those search results up, something like that. There's all kinds of stuff like that going on.
Big dogs just trying to take over Amazon and OpenAI.
I know Wayfair was another mover today. Ticker W. Gotta love a single letter ticker.
W.
Yep. But catching a bid today after a good earnings report before pre-market today.
I like Wayfair. I think they're a great company outside of the stock market. Don't know how well they're doing. It looks like they're doing pretty well here, but I think they're a pretty great company.
Yeah, they make they've had some scandals, which
have they?
You can make what you will of those. Okay. But in my experience, they make great furniture. So that's where I'm at. It's super easy to assemble. I will say that Wayfair is top of the line in ease of assembly.
Not IKEA, bro.
No, yeah, Wayfair is amazing. I mean, I once built a Wayfair bed that required no tools and didn't have a screw anywhere.
Oh, that's awesome.
It all just
that's amazing.
It all just everything was cut so it fit together and it was just sturdy at the end. I finished building the bed.
I just know our dads and our older generations above us are just looking like.
Yeah, it was funny too. I had a whole bag of tools. I was ready to when you building the bed, it's usually kind of an intensive thing. I had a drill.
It is.
and then so they're just just go ahead and snap them all together. What?
The beds will catch you off guard.
But and yes, PayPal earnings today also. That's the double win.
Yeah, no, it looks like PayPal earnings today, they absolutely crushed it. Had written an article on PayPal last night after the bell. And I had also seen more friends that aren't, engaged in the market every single day, posting their long-term positions on their Instagram stories today because of the PayPal news, which I thought was pretty cool because they'll post their screenshots, how they're down so much on PayPal and how they've been holding for years. So the fact that it's popping, I know they're in good spirits today. So shout out to you.
Let me float something. This is really off topic and random, but it just caught my eye, and I've been meaning to mention this for a while. That article that you're hovered over right now, that news headline that says 3.5-year highest sales Trump estimates. People have been doing this a lot, and I think that they are trying to capitalize on Trump SEO. I think they are using the word Trump in like a actual grammatical context, like to one up to win, but. I think I've noticed an increasing use of that word, and whether that's just subconscious because he's way more in the cultural zeitgeist, or if it is a conscious decision to get more SEO, I think that's an interesting phenomenon happening there.
Oh my gosh.
Puts on PayPal. I hope you grabbed him at the top, Anthony.
Nokia is crazy.
Pier 1 for cheap DIY furniture. Pier 1 import. Are you talking Pier 1 imports right now? Did somebody just say Pier 1 import? Are they still around? Holy cow. Did they just move full online? I used to see these like physical locations all over the place when I was young, and I haven't ever. Oh, right here. Oh, in June 2020, Pier 1 officially went out of business and announced that it would be closing all of its stores by October.
Theta asks, is most Wayfair stuff like that? Never bought from them. Didn't know they had their own brand, proprietary.
Oh my gosh. So. Pier 1 Imports was a Ty Lopez company. It was one of Ty Lopez's Ponzi scheme companies.
Was it really?
Yeah.
He also purchased Radio Shack?
Yeah, it's that one. That's how I stumbled across the article. It said they bought Radio Shack and Pier 1 Imports. Yeah. I never realized that was the other one. Radio Shack's the one I've always known. But yeah, how about that?
He tried to turn it into like some crypto company.
Here in my garage with my Ponzi scheme.
Yeah. And then he hired like some intern to run their Twitter. It was just like, this is.
I remember that.
It was like such a fever dream.
The Radio Shack Twitter specifically.
Yes,
they clearly were just like, do whatever you want in the world. Like, yeah.
And it worked.
It did.
It worked.
It did. I mean,
We're talking about it still.
Yeah, at least in terms of brand recognition. I mean, he's in jail, so I don't know how much
Bro's cooked.
Isn't most Wayfair stuff like that? Never bought from them. Didn't know they had their own brand. Proprietary advantage, if so. I can't speak to whether it's their own brand or how that all works. My entire experience that I'm speaking on here is built on building a bed and a pantry's not the word, but a set of kitchen shelving from Wayfair that were incredibly easy and all just snapped together. I heard Pier 1 was trying to make a comeback. I think that's the Ty Lopez thing, unless they're taking another shot at a comeback, in which case I'm rooting for him. That would be hilarious. That would be so hilarious. Imagine your company goes out of business, gets sold, gets bought up by a YouTuber. He Ponzi schemes people for $115 million, goes to jail, sells the company, and then it comes back. That would be so crazy. I want that to happen. I thought there was some kind of pump and dump. Yes, precisely.
As for Nokia going absolutely rampant. This thing is definitely in play. Who's trading it?
Yeah, is it over?
I don't know. Now? Don't care. But 270 million shares traded on the day. Is not pocket change.
When does this become a short opportunity?
You're talking Nokia?
Yeah, that's sort of my question.
A difficult one, but it's absolutely in play for sure. Like you bet there's for example, Beyond Meat. It was such a shitty company, but there were big dogs trading that because the opportunity was there, right? And it's like probably the same thing's gonna happen with Nokia. When you got 270 million shares traded. Shit, that's not just retail. That's 270 million shares traded. So there's a lot of people active on this one. And I think that's going to be the big question. When is it going to be time to get short? But it's in play, no doubt.
Yeah, I want to sell some premium here. I mean, I feel like this just has to be getting to be too much. I mean, they close, what's that, close to 550 yesterday, 556 close, something like that.
Yeah.
And then, yeah, I mean, now we're up, what's that, 50%? More or less, basically 50% on the nose.
$8, yep.
Yeah, so I understand NVIDIA and the weight that carries, but we got a $1 billion investment into a company that was worth something to the tune of $35 billion yesterday, and then it goes up 50%. It's like, that maybe feels too parabolic. Obviously, it's people buying the NVIDIA thesis is the psychology of why this is going up. That is not lost on me. And I gotta quit saying I'm not a value investor, because maybe I just am. I keep saying I'm not a value investor,
You're
but
in denial, brother.
Yeah, maybe I just am. But I don't know. This seems a bit too crazy. But it's like, how do I even want to attack this?
So, what was the Beyond Meat news again? What originally moved Beyond?
How juiced are these?
Do you remember what originally moved Beyond?
The Walmart thing. They're in 2,000 Walmart stores.
Right, which was bullshit. And then it was. I mean, it was such, and I feel that's going to be the same thing with Nokia, if I'm being completely honest, because a healthy company doesn't move like that. Like, even 100%, 240% less than, you're already a penny stock. So I don't know. We'll see what kind of momentum it catches, but
yeah,
it'll be a fun one.
Let me do something small, just because I think that this is going to pull back right away. What can I do here, 3DTE, that's defined risk? I don't want to just sell a call. We're talking about $450 I have to post up to get $22 of credit on selling a call naked. What if I do this? Oh wait, these are in the money. I'm like, why is this so expensive? Silly boy. Yeah. What the heck? I can go short call vertical, long the 750, short the 650 call for this Friday, Halloween, October 31st. $29 of buying power for 71 in credit. 650, where's that on this chart? That's a bit aggressive. What about the 7? Or can I do like 7-8? I'm not going to say it.
All right.
I will not entertain these two contracts.
Yes. Is that the new one? Beyond has some serious money troubles. Yeah. Could drop tomorrow on some profit taking. Yeah, any type of pullback. Yeah, agreed. Nokia looks like Beyond after the pop and pump, the pump and dump. That's what a lot of these are. And again, like fundamentals are cool and all, but I think a lot of companies use fundamentals to their advantage for liquidity. So it's like I even think companies will name drop other reputable companies, even when they know they're kind of BSing right now, you know? Bro, Friday 7 strike puts are 8 cents, just grab 5, Jared said. Sell a BRKB, put on today's
you see, the naked put thing crossed my mind as well. I could just do that. Yeah, you know, well, I don't know. I'm between things here. All right.
We got time.
Authority. I'm just going to go short call vertical for Friday, 7-8. So this is 54 buying power for 46 in credit. Arrow laughs.
7-8 is fire. 7-8 is fire.
7-8's next? Is that
yeah.
That up next?
Yeah.
And then I think I also, just because they are so cheap, am going to get a naked put going as well. Yeah, $6.
You're getting more than a third of the credit on that width, huh? What'd you get in for that dollar wide 7-8?
Yeah, that's 54 for 46.
Oh, that's
credit.
fire.
Yeah, so
That's
pretty much 1 to 1.
Over 50%. That's fire.
Yeah. Yeah, so, yeah, whatever, man. Give me 10. Give me 10 7 puts. They're $6.
Kimberly said, what did Walmart pour into Beyond Meat? Got filled over there?
Yeah.
Amazing.
What did Walmart pour into Beyond Meat? Less than $1 I bet. Probably. Well, they didn't give them any cash money, but what does Beyond Meat being available in Walmart pour into Beyond Meat? Yeah, I don't know. I would venture less than $1. I mean, quick math. 2,000 stores, I mean, what's $1 billion on that? $500 a store? That's math, right? Yeah. So, no. Am I stupid? Math with zeros is hard. Yeah, because 1,000
very smart
is $1 million. So 2,000, not 500, but 5,000. So we need 5,000 in revenue a store to get to $1 billion there. Which I guess when I put it like that doesn't sound too crazy, but that's also revenue. We're not talking costs. Do they incur more costs having to get that meat there? I don't know. Anyway, yeah. Cool. All right, we're short Nokia. We're shorter BlackBerry.
We're shorter BlackBerry.
I cannot believe those are the two trades I took on air today. I traded Nokia and BlackBerry today in 2025.
Yep. That's what I'm talking about.
Golly.
Now, we got about a minute left. Anything else to add on before we hop for the day? Yes, sir.
Thank you. No, that's all I got. I can't. Now that I'm putting all these dots together, I can't believe those are the two companies that I'm short. But here we are. Yep. So take us out.
I love it. We'll see how Nokia plays out. We'll see how Beyond plays out, fizzling out a little bit, especially gold. And then the rest of the market. We got FOMC on Wednesday at 2:00 Eastern, and then we also have the press conference about 30 minutes after that. So be sure to stay tuned for that. We will be live. Be sure to come check us out tomorrow. Thanks for taking the time to hang out with us. We'll catch you guys next time. Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the eve of the most important FOMC decision of our lifetimes edition of the show. So thank you guys so much for being here and being a part of what it is that we are doing, because it is only because of you all that we can do what we do. So thank you guys so much. If it wasn't for you, we could not do all the things that we do. So if you're watching over on the Tasty Live network, I would actually bounce on over to YouTube, because you can join the conversation and join the discussion. And man, you can celebrate another all-time high in the marketplace. This is now the 99th consecutive all-time high from a daily sequential basis. It is a good time. It is a good time indeed. And of course, if you have a question for me, I would drop it in the chat box. I'll try to get to as many as I can here right around the second half of the show. But John, bring us in to the market. Another day, another deal. It's so funny. Autumn and I were watching some movies this weekend, and she was like, hey, it's almost Christmas season. Let's watch Groundhog Day. And I'm like, Groundhog Day is a Christmas movie now? I'm like, I understand it's like winter, and I understand it's like the movie is shot with like snow and stuff, but I'm like, this is not a Christmas movie. I'm like, especially if you're still not willing to accept that Die Hard is a Christmas movie, I'm not willing to hear offers about Groundhog Day. Like, we've got to take this thing back to the roots, man. We got to nail out some basics before we start getting on to some, complicated Christmas movie strategies. But anyway, I digress. Today is very much Groundhog Day. Whether that's a Christmas movie or not, I'll let you decide. But E-mini S&P is up 23 on the day. Risk-free instrument, also known as the NASDAQ Futures, extremely high-risk product. At least that's what they tell me. NASDAQ up 190 on there. You got the boomers up 340. And then the Russell, man. The Russell just cannot get its legs underneath it, which is really interesting, because you would think, cheap money is on the horizon. Interest rate cuts are on the horizon. QE infinity is back. Like, you would think the small caps would just be really stoked about the super low, not super low, but the decreasing nature of interest rates, but they're just not. They're just not at all. And so Russell 2000 down 4 points today, which is a little bit surprising. Bonds are up, notes are up, oil's down, but it's just doing what it does, man. It just kind of meanders around. It goes up, it goes down. The Bulls win a little bit, the Bears win a little bit. And then when you look back, 18 months later, you're like, yeah, we're at the same price that we were at, 18 months ago. But I digress. UB40 up a little bit, man. The Shifties, yikes, man. Look at this thing. The Shifties down 46 points on the day. Hold on. I'm getting blown up in the Zoom chat. Look at production. Production saying ground. So this is good. Okay, so it's settled now. It's settled. This could be coming from James. This could be John. It could be Ryan. It could be Matt. It could be Laura. I don't know who actually said this. It's James. Okay. Thank you, James. So James says Groundhog Day, it's not a Christmas movie. Groundhog Day is not a holiday movie. Groundhog Day is a Groundhog Day movie. Man, that's perfect. It is its own category. I agree. I 100% agree. And so that's some good stuff there. James. Very, very good. I appreciate that. And so, yeah, but look at the metals, man. Metals down 46, gold down 46. Look at silver. Silver's actually up today, But if you look at a chart of silver, and we'll do the same thing for gold here, because it's like, hey man, we've got 38 minutes to burn. It's like they're not going to burn themselves. I mean, the stacks of cash around earnings, those are pretty much going to burn themselves. But the minutes on the show, like we got to find content, man. We got to find some commentary. But if you look at silver, if I look at the chart of silver, you can see, yeah, we can look at a daily chart. That's fine. You can see that overnight, it was all the way down to 45.51. So I believe that happened overnight, kind of in the wee hours of the morning. And so, man, that's a pretty big difference from where we are now at 47.16, basically around the highs of the day. I mean, the highs are about 20 cents higher. But given where we were with silver, it's like, man, wow, we were at 54 a couple of days ago. And this is why I think looking at a daily chart right now makes more sense, because look at this. Silver was all the way up to almost 54. This was on 1017. Guys, this was 11 days ago. Silver was at 53.76.5. When that was happening, did you really think this is the high tick for now? Maybe forever. I mean, I don't know. Did you really think that this is it? This thing is going to sell off? It certainly didn't feel that way. It certainly didn't feel that way at all. It's very similar to Liberation Day back in April when EMI S&Ps were 4,800. It didn't really feel like, wow, this is the bottom tick. And yet it was the bottom tick, at least for the time being. And so that's silver. Let's look at gold, though. So gold, very similar story. Not quite, silver is green on the day. Gold is still red on the day. But you've got gold was all the way down to 39.01 on the lows. I believe that happened overnight as well. And so now we're 39.70. And so, the big number bros, they didn't really come out of the woodworks at 4,000, but man, they came to play at 3,900. Like, you couldn't depend on them at 4,000, but at 3,900, they really started to show their stripes. So they really started to kind of support, the shifties out there. And so, I mean, we're buying albums, we're doing, bedroom posters, things like that. But yeah, 39.01, that's pretty significant stuff. Pretty significant stuff indeed. So yeah, a nice little rally back for the metal so far. We'll see how the day ends. And then, of course, again, tomorrow, I mean, listen, guys, come back to me for a minute. If you're multitasking, give me your full attention for the next, 1 to 2 to 13 minutes. So I've been trading since I started trading in 2007. I've been through a lot of economic data prints. I've been through a lot of FOMCs. I've been through a lot of CPIs. I've been through a lot of PPIs. And in the first half of my career, like, I was completely disillusioned. I really felt like this economic data is real. I really felt like these numbers actually, they're meaningful. I've since learned, of course, it's all just made up. But still, the market reactions to said numbers, it can be really explosive. Tomorrow, the FOMC print, I've never seen anything like this before. Like, what we are walking into the lion's den. I mean, we are taking a chapter right out of the book of Daniel. This is not good. This is not good at all. And so, is there a gimme for this gotcha? I don't know. This might be the first time in the history of gimmies and gotchas there are no gimmies. But if I could find one that might be a little bit of a reach, you've got 24 hours left. You've got 24 hours left. So what should you be doing? I mean, I would have a lot of batteries on hand. I would have a lot of bottled water on hand. And don't get the Dasani stuff. Like, if you're going to go out in style, man. Get some Fiji, right? Get bottles and bottles of Fiji. At least get some smart water. But I don't want to see any Aquafina. I don't want to see any Dasani, because this could be it. This could be it. Get the batteries, get the bottled water. If you don't have the bunker materials in your driveway now, it's probably too late, because there's obviously going to be a rush of orders for those bunker materials. But at least spend some time with the people that you love. Spend some time with the people that mean the most to you, because this could be the final 24 hours that you have. But anyway, I digress. But we'll be together. Like, we'll be together tomorrow at 2 o'clock. So as it all comes crumbling down, you guys will go out. Speaking of going out in style, you guys will go out with some B minus. Yeah, I mean, I'm ready to go back in whenever you guys are. Okay, cool. I'm back. So we're back. Wow. So the whole internet just went down. So that's crazy stuff. And so amazing. So I don't know. I don't know where I left off, but we're back. Hopefully it stays on for an extra couple of seconds. But where was I? I know we were talking about FOMC tomorrow. We were talking about the metals. We were talking about the market. Man, I don't even know. Let's talk about a couple of things going on, though, in the portfolio. So thank you to the production team for helping me get back. And somebody please get on Autumn, because she is super late on these internet bills, and it's really starting to be a big problem. But anyway, let's go ahead and so a couple of things I do want to do, though, because now we still have plenty of time. At least we have at least a couple minutes before the internet bombs out again. So anyway, okay. So let's do where am I? Okay. So number one, rigatoni. It's over. It's done. It's over. So rigatoni was quite a battle, right? Obviously, we've had this trade on for a while now, and so it's been quite a ride, quite an adventure here for good old Rigetti Computing. Given the fact that we have FOMC tomorrow, and again, this is not like your grandmother's FOMC meetings. This is the real deal. I'm thinking we got about a $3 loser on our hands. I mean, you can see it right here. Our total credits collected are $13.95. We are going to be able to buy this back for about $16.60 right now. That's really not too bad. It's like, man, that's less than $3. If you would have told me when Rigetti was 58 that I'm going to have a chance to close this thing down for a less than $3 loser, I would have been like, man, where do I sign? I would have been like, man, sign me up. I'm ready to go. Let's do it today. And so the fact that I have that chance now, yeah, of course, things could continue to work out. Maybe we get a muted, response in the market from tomorrow, from the earnings, whatever. But I'm just like, man, this is a pretty good outcome given how bumpy this guy has been. So given just how kind of difficult this trade has been from basically the very beginning, we're going to shut it down. Let's shut it down. Let's free up some capital for earnings, because, again, tomorrow's going to be a crazy day. Tomorrow's going to be an absolutely crazy day. And so let's make sure we've got plenty of capital ready for tomorrow, because, again, those stacks of cash, I mean, sometimes they kind of burn themselves, but they kind of need to be coaxed along. We kind of need to play our part in doing what we can to get in some hot water pretty quickly. So let's go into Rigetti. Let's highlight these guys. Let's close this guy down. 1657. Boom. There you go. And we're done. Oh, wow. We got improved to 1626. Man, look at Vinny's markets there in rigatoni. Look at that stuff, man. That's crazy stuff. And so, all right, let's go ahead and I just caught a quick glance at the chat. And who is that? That's wait a minute. Paul Haven is making me laugh. Says Autumn is spending your money on $13 a pound fresh chicken. It's not 13, it's 14. So just so everybody is clear, it's not 13, it's 14. And I'm giving very strict instructions. In fact, it's not even enough for me to just go to the butcher now. I have to spend time on the farm. I have to spend time with the chickens. It's not enough for these things to just be, in the showcase. It looks good. It's whatever. It's like, no, man, I got to make sure that the chickens that we get are the ones that are liked by all the other chickens. I've got to make sure that the chickens that we get, I'm not getting any outcasts. I'm not getting any weird chickens. We need the valedictorian chickens at our home. That's the only thing she'll take. And so she knows the difference, man. It's pretty incredible. But anyway, I digress. So let's go ahead and, all right, so we did Rigetti. What else did I want to do? Oh, you know what I want to do? Okay, so number one, let's talk about MES for a second. So, because I want to get to you guys here in just a minute. And let's see, 69.50. It's too funny, man. It's too funny because we just laughed about this just yesterday. And when I said this on the show yesterday, I was joking. It was meant to be a joke, but man, truth is stranger than fiction sometimes. And we are about to be tested on this call strike. And I really can't believe it. Now I'm going to sit tight. I want to sit tight. I want to see what happens with FOMC tomorrow because, I think everything is priced to perfection. Everything is just ready to go, rearing to go to the upside. And maybe this is going to be, we had the roaring 20s in, the 1900s. Now, maybe these are the roaring 20s again, 2.0 here in the 2000s. And it's like, man, I'm just crazy. I don't see it, whatever. But everything is just priced to perfection. And so if we get any type of a hiccup, if he rolls out with anything other than a purple tie, which I know is not going to happen, but let's just say in theory, you would think when he opens up the closet in the morning, there are other colors outside of purple. You would think that. Again, we could all be dead wrong, but I would just think he's got a baby blue in there somewhere. Like, I would just think, he's got a gray in there somewhere. Yes, of course, he doesn't have a fire engine red. I got it. Of course, he doesn't have a neon green, a lime green. Like, that's probably asking a little bit too much. But can he come out with a black? Like, potentially? I mean, it's not that crazy. And so if that happens, all bets are off, man. EMS&P's going down 95 on a dime in an instant. As soon as the cameras catch that black tie, like, it's over. So I'm going to sit tight on MES for a second. And we're not going to do anything. But here's what I want to do for tomorrow. So, how the mighty have fallen. I don't want to do anything but Chipotle. We got GDX, Palo Alto. It's all fine. You guys took me down on PayPal, obviously. But the great thing about PayPal and the great thing about you guys taking me down on this trade, because this was y'all's idea, I think. This wasn't even my idea. I can't remember who it was because I stopped keeping receipts, but we got to fire that back up. We're in December with 52 days to go. And so there's no reason to panic. There's no reason to do anything right now because we have so much time left in the trade. There's so much time left. There's so much opportunity for this thing to come back. It's no different than when you do kind of a regular trade, 45 days to go, and then, it gets away from you. Like, what do? You don't do anything usually. Like, normally you just kind of let it simmer, like let this guy cook a little bit, and we'll kind of revisit it, when the time comes. But for PayPal, I'm going to sit tight and do nothing. But what I want to do, so here's what we're going to do, guys. We're going to do SPX for tomorrow. Oh, not SPX, Z. We're going to do SPX. But here's how the mighty have fallen. So every core in my being wants to do an expected move butterfly. You guys know that. Of course you guys know that. Not to mention, actually, wait a minute. So we might actually do it. Because this is so new for me, right? Like, I'm not used to being with you guys on a Fed Wednesday. I'm going to be on air when it happens. Like, I'm going to be on air when the Armageddon begins. I don't exactly know how that's going to go, but we're going to figure it out together. Normally, I'm trading on Tuesday with the expectation we'll come back on Thursday. We'll kind of talk about everything in kind of an ex-post type of way. We're going to be living it together. We're going to be living it in the present tense. And so normally when I would do like an expected move butterfly or whatever in SPX, I would do something for like the front week because I knew I wouldn't be able to come back until Thursday. Going into today, you know what I was going to do? We were going to do an iron condor, guys. So this is how the mighty have fallen. We were going to do an iron condor for the FOMC tomorrow. We're not taking any shots. We're not even pretending to be Shooter McGavin at that point. Like, we are laying up. Like, we are 100% laying up. We are the antonym to Tin Cup in that memorable scene when he shoots it like 17 times and then finally gets it on the green or wherever. Maybe he never does. I can't even remember. Does he get it on the green eventually? I don't remember. You guys got to help me out. You guys came up clutch yesterday with the Al thing for Quantum Leap. But does he finally get it on the green? I think he does, right? After like 15 tries or whatever. And so help me out in the chat because I can't remember exactly. But we were going to go iron condor. We were going to lay up. But now I can't do it, man. Because here's what's amazing. We're going to do an SPX butterfly for tomorrow. We're going to do this for tomorrow. And the objective is going to be to manage this guy on the show with you all. It's too much for me to put it on and then take it off the same day. Plus, you've got day trader things, pattern day traders, whatever, which obviously that may go away here pretty soon, which would be great. But let's go ahead. I'm going to do one. Let's do an SPX butterfly. We're obviously going to play it to the downside. Because, again, we got to be a little bit of a stick in the mud. Let's do, let me try a 6905, 6975. I'm sorry, 6905, which is right at the money strike. SPX right now is 6905, 6905, 6875, 6845. So it's 30 points wide. That's going to cost me $5. Okay, I don't mind that, but I want to move it out a little bit. Let's play for a little bit more of a disastrous outcome in the marketplace. And of course, disastrous, we're talking about a 50 basis point drop, right? We're talking about this thing being 55 basis points off of all-time highs, right? Nothing says the opposite of disaster quite like 55 basis points off of all-time highs. But I mean, if the EMS&Ps drop 40 points tomorrow on a Jay Powell black tie event, I mean, the internet is going to lose its mind. Let's go 68.95, 68.65, 68.35. That's only 425. Okay, I like this a lot better. Now, again, I mean, you guys know what to do. You should be on the other side of this. I couldn't possibly make it any clearer. I even came back from the internet outage. Like, I went inside, I gave Autumn a talking to, and then we got it paid right away, and I was back. It didn't take that long. And so the talking to last night didn't work, so this was a second talking to. And so I'm not sure she was listening to anything I said, but 68.95, 68.65, 68.35. This is going to be the butterfly for FOMC tomorrow. So let me put this guy on, and then I want to get to you guys. All right, 4:30. Okay, beautiful. Fill for SPX tomorrow. So there's your play for tomorrow. There you go. I don't know how I could possibly make it any clearer for you, but boom, there you go. And so let's see here. Where are we at? I want to surprise and delight some people. I may surprise and delight everybody today because everything is all thrown off with the internet and stuff and, whatever. But look at Small Trades Offices. Is Dr. Jim already in the bunker? That's pretty funny. It was pretty funny that the internet went off. I'm not sure if you guys got the whole little bit about the FOMC thing. Hopefully you did, but it was very similar to what you've gotten in the past. So you didn't miss out if I happened to freeze there at the very end. But yeah, that's pretty funny that it happened to go like that. And that's pretty funny. And so let's see. Groby Mike says, Dr. Jim, live from the eye of the hurricane. Yeah, there's a pretty bad hurricane that's brewing in like Jamaica and Cuba right now. It looks pretty bad. And what's really tricky about being, on one of those islands right now is you can't really go anywhere. And so obviously when things come around Florida, it's a little bit easier for us because we can leave. We can go to Georgia. We can go to other parts of the state or whatever. But Jamaica, Cuba, I mean, man, put those people in your prayers because, they can't really go anywhere. And I think that right now might be the eye of the storm for them. And so, yeah, it's not good. But let's see. Oh, Groundhog Day, Dr. Jim freezes again. That's pretty funny. That's pretty funny. Here we go. And so Manny TP is in the house. What's going on there, Manny TP? Manny TP says, good morning, Dr. Jim. What's going on? AMD question. I'm ready. I'm in a poor man's covered call, April 26, 165 call, and a December 25, 240. So the 165 is your long call. The 240 is your short call. Net debit of about $50. I want to stay in the long. When and how far up and or out would you roll the 240 call, or would you manage differently? Okay, so thank you for all that context. That's incredibly helpful because you said very clearly that you want to stay in the call. That's very, very important to understand in terms of what you're trying to accomplish with this, with this position. So AMD is all the way up to 260 now, and you're short a 240 call as part of your poor man's cover call. Okay, so the first thing to understand is this is a good scenario for you. Like, you are making money on this position. Are you making as much if you had just bought the stock? No, you're not. But again, that's what you give up. That's the concession. That's the gotcha that comes alongside the gimmies of a standard covered call or a poor man's covered call, where you're giving yourself more ways to make money. You're giving yourself more ways to be profitable on the position. You're giving up the opportunity to benefit from a straight line higher, which is essentially what AMD has done. And so let's make sure that we understand this is not a bad outcome for you. It may not be the best outcome, and it may be a little tricky to navigate, but it's not like an Oracle strangle blow up in your face. It's not like a Rigetti strangle blow up in your face. All of a sudden the stock is at 58 or whatever. This is a much better outcome than that. But you've got the 165 call. You're in for about $50. You're short. So your 165 call is in April 2026. So that is pretty far. You've got another 6 months or so. The December 25, 240. Your net debit is $50. Okay. One thing, and it's going to be too late for you to put this in the chat and for me to kind of find the information that you add to this. But one thing that I think is important is, your net is $50 on the trade. Did you just put this trade on, or has this been something that you've been able to sell some premium against and kind of whittle down the initial basis? And the reason why I ask is it's kind of similar to a standard covered call that is for something you want to hold for a long time. Standard cover call, you buy the stock, let's say you buy the stock at 100, you sell some calls and you whittle it down to like 96, like something very modest and something very, within reason. And then all of a sudden, then it gets away from you. Then the stock runs up through the short call, and now you've got a tricky situation on your hands. The reason why that's very different, in my opinion, than just buying the stock at 100 and then the stock runs up against you is because you've already whittled away your basis a little bit. So you're in for 50 net, it appears, But is that you bought it at 50 and this is the beginning of the trade, or was it you bought it at 55 and now it's at 50, if that makes sense? To me, that changes what you do next, because the way I look at covered calls when I've been holding them for a long time, it's kind of an investment style covered call, this is kind of that, because I would imagine you're planning to hold this thing at least until April would be my guess. So it's not necessarily like an indefinite play, although it could turn into that. But it's not something you're looking to get out like this month or next month or whatever. And so it's a little bit of a tweener in that regard. If you had whittled down the basis from 55 to 50 or 54 to 50 or 57.50 to 50, whatever, then paying a debit to improve the positioning of the short call makes more sense to me than if that is your original basis. So if the 50 is your original number, I don't love adding to that number in exchange for improving the positioning of the short call, just not me personally. But if I've been whittling away basis and I want to reclaim some of the intrinsic value that I've lost out on because the short call is in the money, then that becomes more of an option in my eyes. And so those are a couple of things to think about depending on which side of the fence you might be on. But as far as the 240, let's look at the 240 short call specifically. You said you're in December, right? Yeah, December. You have a 240 short call, which is right here, of course. So that's going to be this guy right here. So you want to roll it out and potentially up, right? So you would be buying back the 240 short call in December. If I go to January, just the exact same strike, you're going to pick up a $4 credit. Okay, that's not too bad. If you roll it up to the 250 strike, now you're at about an 85-cent debit. So, from rolling from December to January, you can do it for about a wash, more or less. It looks like it's just going to be a small debit, but it's not going to change your overall basis on the position too materially, and you're able to reclaim $10 worth of intrinsic value. It seems like a decent trade, in my opinion, even if the 50 is your original basis. This is probably something that I would consider. Now, what about rolling all the way up to the 260? Now you're paying a $5 debit. I don't like this as much. Just because of the way that I view the markets. You may view the markets very differently. If you're viewing the markets through kind of like a trend following momentum type of lens and things like that, that's going to obviously color the way that you are going to adjust your positions and the things you're going to do. I do tend to view the markets from a contrarian standpoint, through a contrarian lens. And of course, there are plenty of times when I'm dead wrong. But I just feel like when the market gets really overstretched in one direction, whether it's higher or lower, the likelihood of there being some kind of, pullback to a mean of sorts is higher, in my opinion. It's much, much higher. And so, rolling up to the 260 doesn't really make as much sense to me. Now, could you consider rolling out to, February? Possibly. We'll take a look at that just quickly. If I buy the 240 back in December and then I go out to February and, now I sell a 240, now I'm picking up $10. Now you could roll all the way up to the at the money strike and you're still getting a credit. It's a possibility. It's absolutely a possibility. So you have a couple of things at your disposal here. I don't know if I'd go out too much further than February because you want to leave yourself a little bit of wiggle room. If this were my position and it was something that I would still want to hold long term, at least until April, whatever, I would consider either just rolling to the 240 strike, which I know sounds kind of crazy because you're giving up the upside, but you're picking up more extrinsic value. You have protection all the way down to the 240 strike in the event that the stock goes lower. And you are sitting on a little bit of a winner already, right? So these are all high quality problems that you have to deal with. I would either do that or I would roll to the 250 strike in January. That's what I would do. But do I think rolling to the 260 strike all the way up to the at-the-money strike in February is crazy? No, I don't. I think that's on the table as well. And so hopefully that helps you there, Manny TP. Very, very good question. Thank you so much for bringing that question. And thanks for all the support of the show. I mean, just from the very beginning, Manny TP has been around Manny TP has been around forever. And so I appreciate you. Wow, I lost the first couple of comments. When I had to re-sign in, I kind of lost the first couple of people in the beginning of the show. And so if you made one of the first couple of comments, I'm not seeing your comment now. And so I do appreciate you guys, but I can't see it for whatever reason. And so let's see. I see Sam L. Oh, here we go. I see Sam L. says, time to recover those pile of cash burned. KHC earnings. The Kool-Aid and Ketchup Company, your OG pre-workout before Ghost was even a thing. Yes, that's right. Kool-Aid. KHC, what is this, Kraft? Are we trading Kraft now? I mean, first I was about to do an Iron Condor and SPX. Now y'all got me trading Kraft earnings? I don't know, Sam. We got to draw the line somewhere, man. Like, I think that we're already kind of towing that line with the consideration of the Iron Condors around FOMCs and whatever. We almost did it. I think I've gotta draw the line somewhere, and I think the line is right at Kraft earnings. Like, the next thing you know, we're gonna be trading Kroger again. I mean, Kroger is the OG earnings trade from this very show. Maybe we should be trading Kroger again. What is Kroger doing, by the way? It's KR, right? Wow, look at Kroger up to 67. Wow, Kroger's doing mighty, mighty fine for itself. Look at this thing, man. Hold on. Let me go back a couple of years. It's been a while since we've traded Kroger. Wow, look at that. Lots of back and forth. I mean, I remember Kroger when it was like 40, right? I mean, 30, 40? Yeah, back here. Like way back here. This is like 2020, early 2024. So almost 2 years ago. I remember when Kroger was like 35, 40. And now it's, 67? That's crazy, man. That's some crazy stuff. And so, wow. And it was even up over 75 a couple of months ago? Man, that's nuts. All right, I'm going to pass on Kraft, though. I'm going to pass on some Kroger, too. But I appreciate you. Ranch in the house says, hey, Dr. Jim, good afternoon. What's going on there, Ranch? Kimberly Thomas, I see you too. My friend, thank you so much for being here. Alex PNCR is in the house. I think that's Alex. Says, hey, nerds, what's going on? I take that as a compliment, of course. And so thank you, my friend. InvestWise says, is anybody shorting Nokia? Now, if they're still in business, I don't really know what to believe anymore. $7 stock. And today it's up however much it's up. It's up $1.80 today. It opened at 640 or whatever. Okay. If you don't want to draw the line at Kraft Heinz, I understand, but you got to draw the line at Nokia. Like, there's no coming back from this, guys. There's no coming back from this. Like, if we're shorting Nokia, if we're trading Nokia now, what are we going to do? A pair trade with Snapchat? Like, is that what this has come to? It's like, I don't know, man. I can't do it. I just can't do it. But I appreciate you so much. Sam L says, Doc, big USA earnings tomorrow. That's correct. Forget the rate cuts or Uncle Jay's fancy talk. The real market moving data is whether he's rocking the purple tie or not. You know that's true. Again, go on Polymarket. Somebody go on Polymarket right now. They've got to have odds on this. They have to have odds on this. And I would imagine the way that they're doing it is purple tie versus the field. Like, that's the way it needs to be done. Purple tie versus the field. And so let me know, is it on Polymarket? And if it is, what are the odds? I'm going to say purple tie. I'm going to say it's trading 90 cents on the dollar, 92 cents on the dollar. If history is any guide, speaking of the momentum bros, they've been nailing it from day one on Uncle Jay with the purple tie. Like, they have not wavered. Like, they have stayed the course. They have not, buckled to the pressure of thinking he's got to do a baby blue. He just don't. He just don't. He just won't. He just doesn't. And so let me know what Polymarket has to say, though, because apparently Polymarket is truth in terms of PayPal earnings. I remember that from yesterday, too. But let's see. Andy, I see Emmett Morrison. What's going on there, Emmett Morrison? I may be bouncing around a little bit, but I'm just trying to grab whatever I see. I see Joe YQ in the house. What's up? Andy B. Hey there, Dr. Jim. What's going on there, Andy B? Appreciate you, my friend. I'm so glad we got back on the show. That's good. Let's see. Jared Kramer, Dr. J, get the shelters ready for tomorrow. The print is coming. I know, man. I know it is. It's unlike any other that I've seen, that I've experienced, that I've studied. This is, it's not good. Danish Dynamite in the house, Dr. Jim in the house, let the apocalypse come. Yes, and we're gonna be together for said apocalypse. And so I bid you Godspeed and good luck tomorrow. Chase 6666, Phil Connors. Yes, a little groundhog reference. That's very, very well placed, my friend. There's Ranch. It's in the title. That's right. Adam Armfield, lots of buying of SoFi today. We got rid of SoFi just the other day, or maybe it was yesterday. Yeah, SoFi is creeping up today. Up 6.5%. And so, SoFi is that's a darling of the internet. There are a lot of internet guys and gals that love their SoFi. And so, the stock's doing quite well for itself. And you can see, look at this thing, man, going all the way from 12 up to 32. That's a pretty big run. That's a pretty big run indeed. Let's see. We got Ranch, got Kimberly giving us some CRWV. numbers and prices and analysis. So thank you there, Kimberly. Let's see. Ranch says I've made a nickel so far in SoFi. I have a lot of core weave action. There you go. Let's see. Sergio, here we go. Here we go again. That's right. Adam Armfield says core weave has cost him a bunch of money. I don't think you're alone in that. I don't think I've lost any money in core weave somehow. Somehow we've managed to sidestep that. I don't know how. It's no skill or ability. It's just dumb luck on my part, for sure. But let's see. Every print is the most important, Doc. I mean, I used to think that, but then I started looking more closely at tomorrow's print, and I'm like, it's not. There's no part of this that's good. There is no gimme that I could see to match the size of the gotcha that we are all going to have to absorb together as a team. And so you can pretend like they've all been the same. Like you can kid yourself and kind of fool yourself into thinking that this is going to be just like all the others, but not based on how I see it. Tomorrow is most likely going to be the end. And so let's see. Kimberly says manage risk in real time. Yes, I don't know that we'll be managing risk though. I think we'll be cleaning up the ashes. So I'll make sure I bring my broom with me for tomorrow's show. Let's see. Ranch says I could close now for $3 gain, but there's so much more to go there. Famous last words. Oh, there are no more famous last words than the ones that you just stated, my friend. Oh my gosh. And I'm assuming you mean 3 option dollars, not 3 actual dollars. So 3 option dollars, of course, are 300 actual dollars. For people that are brand new to the show, welcome aboard. Man, if you stuck with me through the internet thing and through Autumn's not paying bills and things like that, I appreciate you, man. I appreciate you so much. In the options world, when you see quotes, it's always on a per share basis, but every option contract is 100 shares. And so you always multiply the quote by 100 to get to the actual total dollar value of, the P&L change or where you're at on the position, the mark prices, whatever. And so $3 is usually $300. Ranch. Man, that yes, of course, there's always more to be had. Of course, there's always more juice to squeeze out of the orange. But again, you got to draw the line somewhere. And so I would be smart about it, my friend. And so let's see. John Adonis, 876 in the house. What's going on there, John Adonis? Brian Dowdy says Autumn forgot to pay the internet bill again. I know. I told her last night she wasn't listening, right? I sat her down again when it went out just now. I sat her down. I'm like, listen, this is serious stuff. Like, you're not listening to my leadership in this home. And then she was like, what'd you say again? And so I'm not even sure she paid it today, but somehow we got back on. So that's good stuff. But, there's Wander. I see Premier MOV. Appreciate you guys, man. Look at you guys. Oh, man. Oh, Greg Lutton says the timing on that was too funny. I still owe you an email, Greg. I know that I do. And so I appreciate your patience so much. But sometimes I get blasted and it's hard to kind of come up from the rubble. But I appreciate you. But yes, the timing of that was quite serendipitous. But let's see. Dr. Go out in style and he's gone. Dr. J, you got to get on her about that. I'm trying, man. Ash fan, I see you. Stephen Bivens, I see you. I see you so much. I see all you guys. I appreciate you guys. Ryan LP still didn't pay the internet bill. Internet down at the dock. Yeah, I went down in the whole house. And she texted me and said, hey, the internet's down. I said, I know. I said, you didn't pay the bill. I said, what did you expect? And so let's see, Ranch. Loving you whether times are good or bad, happy or sad. That's right. That's 100% right. And so here we go. J66. 66 says, is this what it looks like when Dr. Jim gets a margin call? They just cut him off. It's usually worse than that. That's usually how it begins, of course. But there are other penalties that need to be paid on the backside there. And so let's see. It's so funny. Theta Trader, he predicted the end and the end came. It's simple. That's right. That's right. But somehow we survived, but only for another 24 hours. Like somehow, we've sidestepped the Armageddon, but does that mean that the meteor is still not on track to crash into the earth? No, it's more on track than it's ever been. Look up in the sky. It's coming. You can see it now. It's so close. You can see it with the naked eye. Again, you might need some multifocals, but you can see it. Like if you really kind of, dial it in, it's right there. And so let's see. Oh, Grumpy Mike says dog ate the internet cable. No, we just have cats. We don't have any dogs. And it's not better, by the way, having cats. Man, it's worse in so many ways. But let's see. Greg Lutton, Doc pulled the cable, or is he a Wi-Fi guy? That's what's crazy about the internet. I'm actually hardwired in. That's what I don't understand sometimes. Like when the video freezes and whatever, that's its own thing. But this was not that. This was the internet went out. So I got the notification that your internet is not working. It's crazy because I am hard lined in. Like when I built the studio, when we moved into the house, I'm like, man, I want a hard line in. I'm not dealing with Wi-Fi's. I'm not dealing with routers. I'm not dealing with these shoddy connections. And that's why, honestly, I mean, we've been on air here from this studio now for like 5 years, and for the most part, the connection has been incredibly stable. So I'm very thankful for that. But from time to time, it still is weird. I don't know. Let's see. I see. Addit Yonug Rojo says Scott Freeze. That's right. Soul Train Dr. Jim's pre-workout needs more work. That's right. I'm a little bit off my ghost game. And so let's see. Sergio says, man, this is some Radigan kind of internet. It's not that bad, bro. Don't put me in that category. Like, if we're not putting Groundhog Day in Christmas movie categories, don't put me in a Dylan Radigan internet category. Like, you've gone too far. Like, you guys know that I am a good sport. You guys know that I will take all the trolls that you throw my way, but don't you dare put me in a Dylan Radigan internet category. It's just, that's not fair to me. It's not fair to me. It's not even really fair to him. It's not fair to anybody. And so anyway, oh my gosh, we're out of time. I can't believe it. Well, we obviously lost a few minutes in the middle there, but it could have been a whole lot worse. And so, man, I appreciate you guys. I appreciate you guys so much. Please come back tomorrow for the Fed announcement. We're going to trade it together. We're going to see how the SPX butterfly does, and we'll be able to absorb the Armageddon and the apocalypse together. So I really hope that you come back. If I can ever help you guys with anything, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, train them small, train them heavy, and stay optimistic. We'll see you guys tomorrow.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What's up, everybody, and what's going on? It's Engineering the Trade. I'm your host, Jamal Chandler, just here chilling out. You know what I mean? Watching markets, a little drifting to the upside here today. I have to miss tomorrow, so I figured today I would just do the Q&A with you guys and just kind of hang out and talk about what's going on right now. With basically, we're in a holding pattern waiting for the Fed meeting, but the markets don't care. They're still drifting higher. Before I get to that, I just want to update you guys real quick on my kid. We have we finished our season 7 and 2. We have a playoff game. We found out who we're playing, and we have a home game. Yes, we got a home game for playoffs, folks. Proud of him. Proud of this team. Last year, I mean, what was our record last year? I think we were like 5-4, you know, and so we improved to 7 and 2. Huge improvement. It's pretty awesome to see. So that's pretty exciting. And then I got to talk about last night's Dodgers game. That was bananas, man. I mean, what a game last night. And when I don't remember who it was who hit the home run And then the Dodgers were down, right? But Ohtani with 2 dingers last night. I mean, he's just got to be one of the most impressive. I feel like I think I kind of gave him the title last night. Like, I think he's the most impressive baseball player, total package that I've seen. He might even, you know how they say a 5-tool player? He might even have 6 tools, bro. Like, and for me, I mean, my favorites were Ken Griffey Jr. and Barry Bonds. This dude, I mean, as an overall total package now, I'm not just talking hitting or running, like overall total package, he might be better than both of them. He's incredible, man. And it's a trip when you don't even talk about Mookie Betts, who's probably one of the best players of his generation. You don't even really talk about him because you got Ohtani's doing what he's doing, and then you got Freddie Freeman. Look, last thing I'll say about this in this series of Freddie Freeman, I don't know how Atlanta let this guy walk out of the building, but that was a big mistake, seriously. And all he does is just rake. He's killing it. It's been fun watching playoff baseball. Again, I'm rooting for the Dodgers because of my dad. My dad is a huge Dodgers fan, going back to the days of course, the great Jackie Robinson. So, yeah. Anyway, let's pull up the platform here and let's see what's going on in markets. I do have to call your attention to one thing, okay? Just one little thing. The S&P 500 is up 27 handles. The VIX is up. Let you know something's about to come up. VIX one day up 27% at this point, $2.41. When Mikey and I looked at this thing earlier, it was up like 80 cents. So it's letting you know that something's about to happen. I see you guys are hitting me up with some questions and whatnot. Fed seems baked in, and we'll just jump again tomorrow after the announcement. Do I agree? The Fed does seem baked in, I guess. I mean, look, when you're looking at the S&P 500, it's not really reflecting any chance of a move. Now, am I going to play it that way and play the upside? No, actually, as a matter of fact, I'm trying to find ways to get short deltas, if you will, for that reason. But it does seem like it's expected to be somewhat of a non-event. When you look at tomorrow, I mean, it's less than, earlier today it was 40 handles, I think. It's 38 handles now, not expected to be much of a move. Now, again, this could be underpriced. I mean, we often say markets are fully efficient, but I feel like it could be underpriced. I feel like major events like this they're not necessarily priced. We'll only find out after the fact if it was perfectly priced. They're not necessarily priced perfectly because the market doesn't know what's coming. The market doesn't know if something's going to happen. The market doesn't know if, the current hurricane that we have in Jamaica is going to make its way up somewhere and destroy something. We don't know that, right? But what it does know is this is just taking all of the inputs that's known as of today and telling you that probably Powell doesn't say anything out of the ordinary. And yeah, we're going to have a 25 basis point cut. That's the way you read it. But, that's why we trade, right? We trade for the unexpected, and we try to get probabilities on our side. So that's how I'm doing it. That's right. It was Alejandro Kirk. Kirk get the home run for Toronto that put them up 1, and then Ohtani came back, did his thing. I mean, that was a wild game. I couldn't stay up for the whole thing, man. I think I fell asleep in like the 12th inning. I can't even remember. It was like 12th or 13th. I don't remember. But that was the first thing I checked. I checked that before I checked the markets. Tell you that. I checked that this morning before I checked the markets. Who won that game? That was the first thing I looked at. BA earnings are tomorrow. I'll get to earnings. Might as well do it now since I already pulled it up. BA earnings are tomorrow. I looked at this earlier. I have a lot going on. I don't know if I'm going to jump in this one, but it does look interesting, doesn't it? What's the expected move here? It seems kind of small, doesn't it? $10. What? 235? Yeah, why not? Let's do it. 235, $1.29. We'll go ahead and get that on for $1.30. Oh, there's another long delta trade I got. Before I start adding more trades, let me tell you some of the stuff I have right now and that I've done today. So there you go, Danish. We did that one. We did the call. As you can see, first of all, in the chat here, I have a poll for you guys. Only 81 votes. Let's get that up there. But the S&P 500 is currently trading 6,900. What happens first? Do we fall back to 6,800? Do we rise to 7,000? And again, SPX is essentially at 6,900. So put your guesses in. What happens first? Do we go to 7,000? Do we go to 6,800? Who knows? We'll see. And again, I'm not talking just tomorrow. I'm talking about what happens next, right? Like, which one do we touch next first? Do we touch 7,000, or do we from here somehow go up to 6,950 but never get to 7,000 and then touch 6,800? The 6,800 people would win in that scenario. Just to show you some of what I've done today, I had a UNH trade calendar call from spread on from last night. Closed that out for basically a scratch. CCJ is another position. I just put that on today, short delta. We have so many different things that are moving in the upward direction. Decided to sell a call in here. I'm basically underwater on it right now. I sold it for like, what did I sell it for? $2.55. So yeah, I mean, that thing's I'm over $145 loss, but that's cool. Stock's trading 100 after this big move and big news today, and decided to sell the 130. So I could use a little bit of short delta. I do have a decent amount of long delta in the portfolio. I don't know if I've ever had, not ever, I shouldn't say that, in this portfolio per se. I'm not sure of the last time I had so many different positions and so many different types of strategies on. I have a lot on right now, so you'll excuse me if I don't put on a whole lot of earnings, because I do want some of these things to work and then be able to have some capital to outlay for the big earnings that are coming up, which I already have a little bit of them on. Amazon, Meta has earnings this week. I probably will find a way to play a calendar call on Apple and Google as well, even though I don't necessarily love those charts for more upside, but I digress. I have a DraftKings position, DKNG. Short puts in there. Been short the Nove for a while. I even sold one for Dees a little while ago. No, I'm sorry. I was short two Nove. I actually just rolled those out to Dees, collected a little bit more. Obviously, the stock has been under pressure recently with the rise of prediction markets. I think they did buy one recently, so we'll see if that leads to a little bit more upside coming up soon. But, I mean, yeah, this is the type of day where basically you just kind of, when it's somewhat quiet ahead of a big macro event coming up, you just kind of risk manage a little bit as much as you can. Let's see. What other one did I have? Pull up my trusty list here. We added an MCL contract today. Mikey and I both did, with oil fading back down here to around 60. I bought it at $60.10 earlier. And we'll see if, I think oil really is trying to find a new range here. We'll see if this thing will bounce back up from here. We thought the new range was going to be lower, but then this news came out a couple of days ago, and then it jumped back higher. We'll see. Just try to play a little contrarian there. Microsoft is one of those that had news today, had a big move. Did it touch the top side? 553.72. 555.72 was the high from July 30th. How about that? So close to the former high. You wonder if it's rejected and it's going to fall back. Either way, I just figured it was a good idea to try and play a little short pullback. Maybe tomorrow it pulls back some. Maybe this is just the one that I have a short position in heading into earnings. I pretty much have a long call on just about all the other ones with the stock up here. Could be, I don't know. Is this thing really going to jump to 600? Maybe it does, but again, I got plenty of long delta. Even in this space, I'm fine. I really wanted to get this NVIDIA short call spread off. I'm still waiting to get filled. 273 right now, it seems to be trading. I'm trying to get short at 275. The 210, 220 call spread in Nove. Again, NVIDIA has earnings a while from now. And like I said, I normally don't sell things in earnings cycles, but I'm just trying to get a little bit of pullback. The market seems to be continually going up. I'm just trying to play a little contrarian here as the market has gone up as ahead of this event. It's sort of, it feels like it's sort of moving up into the event, and I just feel like it's a little extended. So I'm trying to play some of the names that are highly correlated and connected to the market back to the downside. AVGO is another one I'm trying to sell a call spread in, as the stock is pretty elevated up here. High of 374.23 back in September, and right around that same high. So I don't know, man. Like I said, I have a decent amount of long delta. I can withstand another move higher just from selling these few call spreads, but I'm starting to get the feeling that the market might pull back after this event, and maybe that's where the volatility comes from. We'll see. Theta Trader, 6,800 versus 7,000 for the poll. I'm looking for the sub 5,000 level option. Yeah, right, dude. You'll be waiting a long time for that one. Let's see. Any other questions you guys got in here? Yeah, somebody's asking. James Bond IV, what's up, man? How do you trade the market based on Trump and Xi meeting this Thursday? Baba, FXI thoughts? I'm not really trading that event per se, if you will. I mean, what I have been trading essentially. Oh, there we go. We got filled in the NVIDIA. Did NVIDIA just touch 200? It's really close. It's about to. Let's see. I'm not trading that event per se, the Trump and Xi event. I'm trading it sort of, I guess, in a way through gold, right? That's one way I'm trading it. I did get long gold again. Gold is often, I think, recently risen. It's for numerous reasons. I mean, it seriously does have this narrative flexibility, but I feel like we've seen gold come off more recently because Trump and Xi are actually meeting, and if that doesn't necessarily yield any result after they meet, I think gold will start to rise again. So I got long gold recently here after the multi-day fall. You've heard me talk about it. Again, it is a delicate situation. With this candle, though, and if gold closes up near the highs of the day, I think you could see possibly the gold bounce back. Of course, all bets are off when it comes to the Fed meeting tomorrow. I mean, anything can happen on that day. It's a one-day move. It's almost like earnings. But I'm not trading any FXI or the like, if you will. If you are, more power to you. Kudos. I have seen the way that these stocks have looked recently. They've been moving around quite a bit. I know they were a little bit bid yesterday, but I'm not trading those right now. I'm just trading gold more than anything. I think is probably the biggest thing I got with as far as the meeting between Trump and Xi. Fun fact: 18 innings ties the World Series record. Both games, Brad Paisley sung the anthem. Vanetta told us all about that earlier. Yeah, it's kind of funny, right? When this guy sings the national anthem, there's multiple. I think there's like 4 instances of him singing the national anthem, and games went to extra innings. Believe it or not. Did the Lakers beat the Supersonics? Hey, it was a good day. I feel you, Ash Finn. I know you're talking about it. Lakers beat the Supersonics. That's right. That's right. I just lost that, everybody. No, Ash, I don't follow hockey. Hit 3-wheel motion. That's right. That's right. I got to use my 8K. I love it, guys. I love what's going on in the chat here. I love it. I love it. Everything is baked into the market. Even Melissa. Who's Melissa? I don't know. The fans won that game? For sure. For sure. Yeah, it really did in that game last night. The fans definitely won. They were super loud. Did anybody even... I wonder who left that game. Oh, man. If you left the game, you only left because you had to. You didn't leave because you want to, that's for sure. You had something going on at work tomorrow, something like that. I don't know, but, man. Nokia, how about this deal today, guys? This thing is crazy. I mean, look at this candle. This is bananas. I was looking back, 10 years? I looked back 10 years on the monthly, and there's another one of those. This happened January 1st, 2020. So that was basically the meme time. So I don't know. If you got long it, I hope it doesn't look like this for you. And if you got short it, I hope you get this. That's all I can say about it. I'm not doing anything. No trade, no nothing. It's noise to me, I think. Although it's not crazy noise. Again, it's not a meme situation. It did come out of the fact that NVIDIA gave them $1 billion. I would just do this. I would calculate how much this thing has moved today and ask yourself if that's worth $1 billion or whatever that move is worth today, which I don't think it is. I mean, when you think about it, this is a $41 billion company, I think, before this move, and I don't know, it's moved 20% today. So this would be $8 billion. I mean, are they getting $8 billion worth of business? Maybe. I don't know. But that's the only way that I would think about this move. And that tells you if its move is exaggerated or maybe it makes sense. You know what I mean? Somebody said, just like Kevin Bacon. I've had Footloose in my head all day. I don't know why. It's just kind of crazy. It hasn't gone anywhere. Ooh. So yeah, let me show you some of these positions here that I got going on. So I did do a calendar spread for Amazon for earnings, the 250 strike essentially, which would be back near the highs of the year to some degree, which basically occurred in February. So that's what I got going on in that. The expected move is $15, so it could get to 45 and change. Tesla, this one is a short call spread, and so I kind of legged into this. This 475 call was left over from earnings. I had the 475 calendar call spread. I was long this, and then it started the move, right? Yesterday, a big move yesterday. I sold the 465 call against it into the move yesterday when stock was, I don't know, like 450 something, and still continuing today. But again, fine. Some more short delta. That helps me, again, in my portfolio because I do have a decent amount of long delta, and some of it is calendar calls, right? But still, Meta, calendar call spreads heading into earnings, the 775 and the 800. BA, we just put that on. Deere, this has been a calendar call spread that I've had on for some time, essentially just trying to see if this thing was really weak more recently, as you can see. And so I've been holding these calendar call spreads for a while in Deere. I am long the earnings cycle and short everything in front of it. Essentially, matter of fact, I can move these. I might move those. These 500 calls, let's see, how much of these depreciated? The 500 calls here have depreciated quite a bit. I should have moved these yesterday. I'm not going to... let's see. I should have moved these yesterday, probably. The no 7s, the no 14s. I'm going to wait. Hopefully tomorrow, hopefully the next time the stock bounces, these 500s still will not have moved as much, and then I can roll these no 7s to the 500 strike to the no 14 strike. We'll do that. So I'll wait on that. Let's see. Newmont is a play on gold bouncing back. I originally had the 90-105 diagonal, and I moved my 90 strike in December. So I was long the 90 strike here. I moved that up to the 75 strike yesterday. And again, Newmont is probably one of the names that follow gold the strongest. I mean, the correlation is pretty high. It's like XLE and Exxon, right? So I just rolled that strike back. I rolled that strike down and long the 75 call against it. I would like to sell another call against that long 75 Ds. Right now, I'm still short the one that I had from the 105s. I haven't found anything that I want to use, though, honestly, and in this NOV expiration. And I mean, I might end up just coming out to here and doing something. Maybe eventually I'll sell this 90 strike against it, have a $15 wide call spread. Maybe that's just the way to do it, because there's really I'm not doing this thing for along the 75. I'm not going to make it $13 wide. I don't really love that. Where was the high more recently? The high was 98. I don't know if we get back up there anytime soon. I don't know if gold's going to make that type of bounce, but for now, that's the situation. Micron has been one of my short strangles. Again, I had a Micron, I had an Oracle, I had an AMD, right? Some of them had earnings, some of them did not. AMD had earnings coming up in no, so I took that off. But Micron is still one that's left over. Somewhat elevated vol. Again, the 49 IVR probably really reflects earnings more than anything, but this still is in the 60s, this implied vol. So I'm going to hold on to that for a little bit. And again, it's a little closer to the upside than it is. Actually, it's a little closer to the upside than it is the downside. So again, this almost acts like a little short delta situation in the portfolio as well. Netflix was a calendar call. One of you suggested it, actually, the 1200 strike. I got it in decent no, so really it's kind of far away more than anything. SMR, another short put. We sold a short put in here before. It's worked. One of the nuclear names, short SMR still, and going to hold on to that. MP, I know MP is probably eating up some people out here, me included, It is the 70 strike. I'm probably could just roll it now. I might just roll it now. Why not? Roll it out a little further. To D's. We can do that, right? We'll try and do that. Get that off. Move that further out. Because, again, this is roll week, right? When you look at the amount of positions that I have in Nove, got a decent amount. This GDXJ, of course, is bouncing back up. Still short this put and holding for now. I would imagine if this gets back to around, if gold gets back to around 4,100, this thing will be fairly out of the money and I'll be able to close it. So I'm going to hold on to that. Oracle is also a strangle. This is, again, this is a little closer to the, well, actually, this is pretty equidistant between the two. I like having this strangle. I'm not going to change it. I'm going to keep it. There's really not much to close, you know. And this is kind of what you do when you're looking at risk management. You look and see where can I squeeze a little bit more juice out. Where's my real risk on this? Am I going to hold on to this? Do I want to close it? GLD is another. Spread's fairly in the money. 375, 365 put spread. Obviously, GLD has had the big fall with gold. Probably roll this at some point. I'm just not going to do it yet because I just think there's going to be some type of movement. If there's anything that moves tomorrow, it should be gold. As a matter of fact, let's see what tomorrow's expected move in gold. Who knows if it's underpriced or not. $48, at least is what it's saying. The range today, though, I mean, again, including the overnight and gold, $132 range today. So that also might be a little bit underpriced. Or maybe it's perfectly priced. Who knows? Who knows? Nokia. Oh, yeah, we talked about that. Man, below 8. Yeah, so, I mean, you can see I have a gang of positions on here. RGTI is essentially the same thing as RGTI and IonQ. Essentially same situation as MP. Obviously different sectors, but both are short puts. And again, those came about as a result of the fall over the previous, couple of trading sessions. You've seen the quantum computing stocks, you've seen the nuclear energy stocks and the rare earth metal stocks get hit quite a bit. Yeah, but and URA is kind of a similar situation. This was a short strangle that turned into basically a short put. ABGO also filled. Okay, so I'm starting to get filled on these other short call spread situations. Again, this helps giving me a little short delta in the portfolio. So I sold ABGO, I sold Microsoft, and I sold NVIDIA short call spreads here more recently. Net gas, this has been a great trade. I sold this strangle. Man, it was a while ago. Let's see. I sold the strangle on 10-2. I sold the 5-10, 320. So scared when I did it. Never sold a strangle in that gas in my life. I've done a lot of things, never sold a strangle, but it's worked out really well. And even though the IV has kind of stayed up, the strikes have been perfect, honestly. And originally, eventually I rolled my call down. I rolled from the 520 to the 460. I thought I might have messed up for a little bit, but it still continued to work. And when you look at the chart, you can see 320, not even on the map. 460 is basically the 200-day, so hopefully it just stays somewhat calm. I was nervous for a couple of days there on the 17th and the 18th when it started to rise, but it's doing okay. It's doing just fine. So that's been a good trade there. And then I got, I told you about the CCJ. Stock seems to be falling back down now. It was as high as 109. I got the IBIT, I got the ETHA, and I got the KRE Zebras. I've been holding those now for probably almost 2 weeks. Those have been good trades. Probably the worst trade I got going on here is CarMax, honestly. And why I say worse, because it just doesn't seem to do anything. It doesn't seem like it's moved in a while. I told you about the MCL we just bought today, and then the MGC has been an up and down trade more recently. Dipped my toe in yesterday and got out when I felt like it might have been crashing, got back in towards the end of the day, held through overnight, and I think, gold has survived at least until tomorrow. And I think it's just going to continue to be, it's funny. We usually call this chop, but it's not really a chop when it's drifting to the upside. So it's really just drifting to the upside. We'll see what we get tomorrow prior to the Fed. Will we drift upside or will it be a chop? I guess we'll figure it out. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, trade them often. See you.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Hey everybody, Tim Knight. Good day today. It's a lot of red on the screen, not with the big markets. The ES and the NQ are green. They're at lifetime highs as usual, but almost all my shorts are going down, which is pretty cool. And we are getting close to in about 23 hours, things are going to get really exciting because we've got a waterfall of goodies coming. We've got Jerome Powell tomorrow, first the announcement, the press conference, and then we've got Wednesday afternoon, if memory serves, Google and Meta and Microsoft announcing earnings. And then Thursday afternoon, we've got Apple and Amazon. And then in the midst of all this, who knows, there might be more agreements or announcements related to trade in Asia. There's a lot cooking. So let's jump in. I've got my charts all ready to go, and I'd like to talk about them. So here's the spider. Now, as I say, another lifetime high. It just keeps going up. The wedge rules the roost. That trend line right there is what we're watching very carefully. We're getting so close to it. And, this bull market's had too many lifetime highs to dare call the top. But I will just say anecdotally that bull markets die on good news. And so the market will almost certainly get the interest rates been begging for tomorrow. And we'll see how the initial reaction is, and way more important, how the press conference reaction is. It's always crazy to see the markets move and wonder, what did he just say to provoke that reaction? And of course, the earnings. It'll all, by the end of this week, I think that a lot of the dust will have cleared. The bad news is that it's going to get kind of boring again. But anyway, yeah, watch that wedge. Diamonds, same deal. Another lifetime high and another wedge, and we're getting relatively close to it. It will stop going up when the buying stops. It's as simple as that. For myself, I'm a classic chartist. I don't even like the term technical analyst. It sounds like indicators and such. I don't use them. I just, you could give me a ruler and that would pretty much cover my toolkit. But I'm looking for opportunities beneath the surface. And those are there. It's an opportunity-rich environment. Our friends down south in Argentina are having a good day again. Explosive move yesterday. Today we're augmenting that. It is getting a little bit close to, as I said, that line which simply marks the peak from the beginning of the year. There's this little morsel of overhead supply still. I would suspect, I don't trade ARGT myself, but that's probably about done with that rally for now. But let's get back to the old US. Here's the cubes, same old, same old. Lifetime high, tech stock strong, semiconductor strong. heading toward the underbelly of the line. I'm kind of weary of having to redraw these trend lines, so I've just left the simple, basic ones, so I don't have much work to do. But there's the main trend line there, which was support and is now resistance, and we're getting tantalizingly close to it. We've green every day. Semiconductors fueling this principally, but it's not. Trees do not grow to the sky. So, yeah, okay. And drilling down a little deeper in the world of semiconductors, NVIDIA, the largest company in the world, is now even larger. It's a sloppy pattern, but it has had a big rally here, 5.33%. I don't know what that comes to in dollar terms, but the dollar change in NVIDIA today with respect to market cap is probably larger than a lot of public companies. I mean, it doesn't take much it's getting close to $5 trillion now, and this thing is a beast. So the AI revolution or bubble, whichever you want to call it, is being led by NVIDIA. And there are a lot of companies that are enjoying the draft behind, like Oracle and Micron and AMD and all the rest. But another record high for NVIDIA after this rather sloppy consolidation period. A couple of stocks that gave me a good morning right from the get-go were cruise companies. I had shorted yesterday, and I wasn't even thinking of earnings. I had no idea they were coming out with earnings. I honestly don't pay much attention to those, except for the monsters, just because they're so market moving. But it happened that they worked out nicely. So I shorted yesterday Royal Caribbean RCL. This is down very nicely, big tumble there, new multi-month low. I've lightened up a little and tightened up the stop, but I'm sticking with it. And in sympathy, Carnival Cruise Line also has fallen, not as much percentage-wise, but still a nice drop, and completing a so-so head and shoulders top there. I'd give it about a C or a C minus. But, I haven't even lightened up on that one. I've just tightened up the stop and just will hang on for hopefully more profits from that particular short. So yeah, the cruise operators, big down day. I wanted to mention also a little bit of an unusual pattern here, Corning, GLW. And I wanted to point this out because we have an island reversal top. And what that means is this one bar here, which was yesterday's price activity, the low from yesterday is higher than the flanking highs, the high the day prior and today's high. So it's kind of an abandoned, in candlesticks, they have the crueler term abandoned baby. Sounds kind of mean, so we just go with island reversal. So island reversal tops like so, and that is usually a bearish pattern. And the trade on this, we're one to partake in it, which I have today, is just a simple short position with a stop just above yesterday's low, that line right there. So that's GLW. Okay, we gotta look at precious metals. That's a couple of months ago we hardly ever looked at them, and now it's like a daily obsession. I think that this is a bottom for precious, but it's definitely not the bottom for precious. I'm still not touching anything. It's showing trying to show a little bit of strength. It certainly bounced well off the lows from earlier this morning. And every time I've wanted to buy palladium, I've slapped my hand away, and it's worked out so far because it's just too early, I think. Here's GLD. We've been slipping. Maybe we'll get a big bounce tomorrow. Who knows? But like I say, I think it could be a bottom, but not the bottom. It is blown the froth off the beer here, but it's not a great price yet. Looking at silver, SLV, same idea. Although it's actually green today. And then my real focus, palladium. See, we've closed the gap. We finally closed that gap. That's from way back here. October 7, and went up, and down to down. And today only, we sealed that sucker up, and we've got a green bar right here. We have it's been strong pretty much all day long. Maybe I should have gotten in, but I'm not gonna. I want to wait until we get down here, if you please, if you don't mind, market gods. To my mind, that represents a more prudent entry point. And I just think that there needs to be a little more pain in the precious metals world before things get really attractive. So I'm holding out. I'm going to wait for now. The miners, GDX, those are showing a bullish engulfing pattern right now. They opened weak. They're presently strong. If we rally, which is possible, I would say resistance is right along where that gap is. So yeah, the fervor with precious is definitely broken. Things have settled down. The overbought nature of it is diminished. But I'm going to hold off for better or for worse. Looking at the futures themselves to get a bit of a different perspective, this is GC. The front month on gold is down pretty good, about $50 about. Past 6 or 7 trading sessions been sinking lower, and there's no really clear support to my mind. But I will say, kind of worst/best case scenario, something like 3,500 or so smells about right to me. I would also point out that the psychologically important $4,000 level has been breached, and it's not that shocking that now, whereas yesterday 4,000 was actually a pretty firm floor. Today, it can't seem to muster enough strength to get above it. You know, we're at just below 4,000 now. I think that's an important psychological level. Like I say, something like 3,500 would be, I think, a very appealing entry point for precious across the board. And I'm not even going to bother with gold. I'll just, if we get down there with gold, I'm definitely going to go big with palladium. As far as silver goes, I'll just say that for the third time in this market's history, $50-ish has marked the top. We still have a tremendous cup with handle pattern there, which could spell much higher prices ultimately. But I think this has been just kind of a test where we sort of poke above that line briefly and we backfill for a while, and then the real breakout will come later. Could be a couple months from now, I don't know. But I'm still long-term bullish precious metals across the board, but I think at this particular moment, I'm personally going to wait. Getting away from PM for a bit. Remember Qubit, QUBT? The whole quantum space was really hot for a while. It has definitely backed off. As a chartist, what I've been pointing out was how the pattern was really sloppy because we had here a breakout which failed like the next day, and then it tried again, and it sort of flopped and flopped and flopped. And so I actually never traded it in either direction. It just seemed like a really broken pattern to me. I actually stumbled upon a pretty deep analysis of this company too. I won't go into it. That's not why you're here. But I will say that it's pretty shocking because this is a company that had like a $4 billion market cap, and their revenue last quarter, if memory serves, was something like $63,000, or maybe it was $160,000. It was pipsqueak. You know, my little profit company was many times bigger. So pretty shocking. The annual revenue is like a 6-figure sum, and the market cap was like $4 billion. I'm approximating this, and they used to be a beverage distributor. Isn't that something? Remember Long Island iced tea? For you old timers out there, old timers being trading more than 3 years, that was Long Island iced tea changed to like Long Island blockchain or something just to get into the Bitcoin thing back in the day. So funny stuff. Anywho, yeah, the chart spoke the truth. This thing is kind of flaming out, it seems. As far as the earnings go, you know, funny enough, the most boring charts to me are these mega caps. I'll go into more detail tomorrow when we're actually approaching them. I'll just thumb through them real quick. As I said, tomorrow afternoon, we've got Microsoft, we've got Alphabet, which has done a nice little breakout there yesterday, and we've got Meta, which is just sort of flopping around there. It's for months and months, it's been really just range bound. And then Thursday afternoon, we'll have Amazon, which also has been rather range bound, and Apple, which has been just setting the world on fire. Very, very strong, particularly based on the strength of their iPhone 17 sales. IEF, we haven't talked about it in ages, but it's doing okay. This is our little, well, how would you say, like 7 to 10 year bond fund, and it's doing all right. Tomorrow, end of day, might provide a little more clarity here, but it's got a nice long-term bullish pattern. This is my only long position, and it's boring, but it's, I think, pretty safe and long-term pretty interesting. Let's see, got a few more moments here just to see if there's anything worth saying. You know what? Let's just end with the NQ. Here's the NQ futures. And as you can see here, this one simple trend line, I think, tells the tale nicely. This is anchored to the April 7 bottom. And look at what's going on here. How about that? Where's today's high? Right to the penny at the bottom of the trend line. So tomorrow will be a very interesting day to see if it can bust through that or if it can actually provide the resistance that it's supposed to. So, all right, well, that's it for me, and I'll see you tomorrow, and we will be in the midst of the Powell press conference, I think, when I see you. So we'll see how things turn out. Thanks for coming by. Good night.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event. At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call.
The last call. Hello, everybody, and welcome to Last Call. Long time no see, Jenny. You are looking very good.
I know, Liz. I know. You look much cooler now. The last time I saw you, it was sunny and hot outside. We were drinking coffee, and Liz was overheating.
I was taking layers off. I don't operate that well. I run hot. But you know what else is going to be a hot show today, Jenny? This last call. We got a lot of stuff going on. Do you like that? Like that transition?
I like it. Not only do we have a lot going on. I mean, we have a lot of earnings. We just got some amazing piece from one of our favorite researchers, Sahil. Sent us. And every time I hear Sahil, I just still think of Littlest Pet Shop. Because there's a character in Littlest Pet Shop, Sahil.
Well, I'm just trying not. Yeah, I just don't want to call him Baby Shark because he's now Jaws. He's a big
Jaws. He made an amazing piece for us, which was honestly really interesting. One of these days, next time, I'm going to post a picture of Sahil from Littlest Pet Shop.
Oh, yeah, you should. Okay, couple things. Number one, you have a bar on the top of your screen that I don't know if you want to get rid of. Number two, we have some earnings trades that we need to go to. Can you see that bar?
Yeah, but I can see it, but I think it just disappears eventually on its own.
There you go. Good job.
Yeah.
Okay. Got it. Number two, we have some earnings trades. And number three, we're on a time crunch. So we've got lots of stuff. Even Frank the Great is sending us stuff. First things first, they are doing, and we are doing, hopefully, fast market tomorrow. So,
no. What's your assumption?
Okay. Sorry, what's your assumption? So send your trade ideas to what's your assumption. The art card is right up there. And
yes, tastylive.com/assumption. Send your assumptions. We have a couple times on this show sent assumptions, but we don't have time to fool with that today.
No, we got too much to do. Too much moving and shaking to do today. So we're not going to put a what's your assumption in. But yes, we have a couple times on the show.
Okay, so should I get to the earnings trades?
Yes, we looked at a couple. So if you want to pop and show Bob's list again, just so everybody can be refreshed on what is happening, this is the best time to put on earnings trades is right before the close. We kind of not cherry picked, but Etsy was what we're going to look at.
Etsy, we put something in. We came up with something in Etsy. Were there any other?
I did the buffer trade in Visa because I wanted to see how it worked for earnings. So I have that. It's kind of expensive for our account. EA looks like it's being purchased. So
we won't look at that. I wouldn't mind looking at Boeing though.
Yeah, we could take a look at Boeing. But let's go to our Etsy first because I want to make sure we get to Sahil's stuff and then Frank the Great sent some stuff in. So.
Okay, so I'm going to go to Etsy here. And since we had 3 winning diagonals yesterday, we're going to try for a 4. We're going to try for a 4.
Dance. We want to go 4 for 4.
4 for, we'll see. Can we go 4 for 4? Well, we can't say 4 for 4 because SoFi was a loser, a small loser, but it was a loser.
Hey, but it wasn't.
That was like of a brief moment in time. That was a brief, Florida 7 was lucky. That was one moment in time.
Yeah. So
okay. So here's the setup of the diagonals. We go to the expected move and sell a call at the expected move.
I'm going to say something just now because we usually only manage these live on the show. However, tomorrow, if we are on the train and we see something, we're going to put a closing order in if we could scratch it, like SoFi.
If there's something that's like a loser, or
if there's something that is going the opposite direction, we're going to put an order in to close it or scratch it. Deal?
Okay. Deal. But the winners, we could.
Yeah, we'll let them go.
Well, is there any news or numbers coming out tomorrow? Maybe we should close them on the open. I don't know.
I don't know about the open, but I know there is a basis point tomorrow, but I don't know if it's on the open. That's at like 1:00 or whatever. That's, your Fed meetings. So,
okay. So we go to the weekly, go to the expected move, sell a call at the expected move. And then we go to the next week and we buy one at the money. So 309.
I know Etsy and Wayfair are not the same, but they're both in like the, female-led division. What Wayfair was up like 25% on earnings.
What do you mean female-led division? Is the CEO of Etsy a female?
The CEO of Etsy is a female, CEO of Wayfair is a female, and the CEO of Wayfair was talking about how they're led by females, meaning not their leadership, meaning like their sales are female buyers. And same with Etsy.
You know what? On Etsy, you can get anything you want. Like I think in this day and age of a 3D printer, or there are many crafty people. There are lots of men on Etsy and lots of people buy.
But I would almost argue that you're going to get 75% women that are purchasing from Etsy.
But I feel like half the people I buy from are men.
Well, I believe the sellers are men. I believe the purchasers are women.
Yeah, probably right. Yeah. Okay, so yeah, I have some of my Etsy purchases nearby. Maybe I'll pull one out later. Okay, so 70, if we buy the 75 and sell the 83, that is $8 wide and we're paying 308 for it.
Perfect. Ship it. It was cheaper today on the train, but whatever.
I mean,
that's got some decent profit potential.
Yeah, $8 wide and we're paying 3 for it. So it can make $500 if Etsy has a big run up. If Etsy falls, we can be out $300. If it doesn't move at all, it should be about a scratch.
But we've got 10 days.
Yeah, 10 days for it to make a wild run. That's Etsy. I did kind of want to look at Boeing. Oh, no, do we have... No, we don't have it.
No, let's get this going. 223.
Okay, Boeing.
$9.54 expected move. It's got a 16 rank, which is real low, by the way, for earnings.
Like, here's my problem. And this is just my own personal problem with last call. So we're on the show, and I just logged in, and I'm running the show, and I just realized, like, oh, snap. I have a Boeing position, and I didn't even do anything to it, and they have earnings today.
Oh,
but
snap.
I'll just have to, there's nothing I can do about it.
Is that your version of a swear? Oh, snap.
Oh, snap. No, there's nothing I can do about it, because by the time the show ends, the market's closed.
I just love, did you watch The Good Place where they can't swear? Like it can't come out of their mouth. So my favorite is all their versions of it. And I find myself using those quite often.
So Boeing at 223, I think we had an earnings setup calendar, a 217 earnings setup calendar. I think we did in Boeing. I'm going to go. Yeah, look at that. We had
gone. They both expired?
Closed, open.
That was July.
Oh, that was old. It was, look at that. July, and it was around 217. It's still around 217, and we're in October.
It's July. I was like, they both expired? None of this. And
it's still around 217.
Yeah.
Does that make you want to just like sell the 217 put and think, it's been around this 217 for 6 months?
No. Not in this count. I mean, if you think it's going up, I would rather you do a diagonal, but I think it's going to be expensive. It's a $233 product.
Hey, look at the 217 calendar.
Sure, go for it. $139.
$1.40.
And we could lose $1.40 tomorrow if Boeing goes up. I don't care. I'm not saying I don't care. That sounds bad.
Hey, we'll see. It's only $1.40 in risk. So we got one downside. These are baby risk trades on earnings because we don't ever want earnings to take us out. Like, I don't want earnings to take me out for like $2,000. So
well, that's why when you were selling the 217 put, I was like, absolutely not. Like, I can't do that.
All right. Are you pushing these out on both sides?
I got them both.
Okay.
Don't worry your pretty little head about a thing, okay?
All right. So we've got two earnings trades, Boeing and Etsy. What else?
That's good. Okay, so then let's go to, if you want to go to Sahil's stuff, we could do that.
Sure. So Sahil, so here, I'm going to show you this. Hold
on, I'm still pushing stuff out. Okay.
We've got SPOOs at 69.30. Who's at 69.30?
Okay, if you're going to stay on there, then let me show you this. This is what Frank Walsh said. This is another day with less than 1 million SPOOs and less than 4 million SPX. Lots of equities, though, have seen huge volumes. So NVIDIA is close to 5 million options, more than double their average, because NVIDIA is making deals with everyone. They're making deals with Nokia. They're making deals with everybody. NVIDIA is just wheeling and dealing. And then 33,000 GC options. Doesn't sound like much, but it's over 5 times their norm.
Wow.
Yeah.
Wow. And you can see gold here down, $39.70, down about $50.
Yeah.
So here, the NVIDIA, 250 million shares traded. And if we look at SPY, 46 million. Crazy.
Yeah. So close to 5 million. So it's more than double their average in NVIDIA. But they are, I think Jensen Hong was talking because he was just wheeling and dealing all over the place, like Nokia. And then I was listening to some other things and they were like dealing all over the place. So NVIDIA news is coming out, breaking news as we speak. And Jenny Andrews is gone. Where'd she go?
Here, I'm getting some of my.
What are you doing?
Some of my Etsy,
Etsy's already in the clearinghouse.
Ordered this little cutout ship magnet.
Very cute.
So when you go on a cruise, it can say the name of the ship, the date you go, put it on your cruise door, put it on other people's doors, give it as gifts. Cruise coasters. Cruise coasters.
Once again, you're proving my point. Only women are buying these things.
All right. Okay. So now that we know where the SPOOs are, 69.31, I want to go to Sahil's Sahil's amazing.
Oh, wait, hold on. Breaking news. We have to say what our trains, we just talked about gold. So 33,000 GC options doesn't sound like much, but it's over 5 times their norm. Our train conductor said,
Well, okay, so we had a question. We had a question for our train conductor, and the train conductor's question was, and I will read it word for word.
No, the question we asked the train conductor.
Yes, and this came from a friend. Ask the train conductor if he thinks we're at a short-term bottom in gold with gold down in its recent down move. And so we see with the recent down move, and we showed this all to the train conductor, and the train conductor said, yes, this is a bottom.
Well, he didn't say yes, it's a bottom, because I don't know if he knows what that meant. He said it's going to go straight back up. So I said it's going to be a short-term bottom. We appreciate you. He said, don't throw me under the bus, and don't say have him coming for me if it doesn't. And I was like, don't worry, we'll pretend it's the other guy. So
he said, don't throw me under the bus, and Liz said, don't worry, we'll just throw you under the train.
I was like, it's the other train conductor. Don't worry, we'll be fine. So yes, he agrees it's going to go right back up. But we don't know. And I said that 4,000 level is pretty important. But
hey, with a 55 rank, do we want to just sell a put spread in GLD?
So do you keep in mind what we saw today? 55 rank in GC is down 50% from where it was.
Yeah, but we know, like, if gold's going down, if it keeps going down, the rank's going to get lower. So we have to expect that. Like, if it's drops, if we're looking for a drop to sell a put or put spread, we have to know that the rank's going to be lower. That's just how gold works.
True.
All right, I'm gonna with the 55 rank, I'm gonna go. How about 350?
We just took off an iron condor. Let's put it right back on. There's $1. Great, get $1 on the top too.
Let me see. No, I was just gonna. I'm trying to put a bullish trade on. Yeah, that's the put. Well, that's part of what we took off.
Yeah, that's the iron condor.
I'm
in
honor of the train conductor. I was gonna put on a bullish trade.
Do you want to do a downside broken wing butterfly in GC?
Or do you want to do like a big lizard here?
Sure.
364, 370. That's $6 wide.
And then you got to buy something for $3. That's great. Hit that button.
Yeah.
$6 wide. You're collecting 7. You're only using $3.95. What could possibly go wrong? I like it.
It's only 24-day trade.
I like it.
So this is what it looks like on the analysis page. I mean, you have this little peak, but no matter what to the upside, we'd make money.
Yeah, I'm a fan.
And then to the downside, it's got a little bit goofy because we have those extra long shares in gold.
Oh, I was like, why is it angled? Okay, yes.
There we go.
Okay. That was the wonkiest thing I've ever seen. I was like, I've never seen a diagonal line.
I know. That's because we have 2 shares. That's so funny. Okay, so that's in. Okay, so are you ready for Sahil's study? And I don't know if I'd call it a study. It's just more like information.
I love it. And I want to give Sahil a big, he's going to get a certified badass option trader card for giving us content for this. This is awesome.
So here we go. SPOO's at 69.31.
69.31.
Number of trading days between 1,000-point milestones. So, we're not that far at 69.31. We're not that far from SPOO's, SPOO's 7,000.
Whoa. Okay. So from what? So from 0 to 1,000 was 10,000 days, right? 0 to 1,000 was 10,000 days, and then from 1,000 to 2,000 was 4,000 days, right?
Yes, yeah.
I'm reading this correctly.
Yeah.
And then the days keep going down and down and down. So we're at 198 days from
189 days.
I'm sorry, 189 days from us to go to 5,000 to 6,000. We are a pencil thin mustache away from 7,000.
7,000.
And that was on, okay, so this is awesome, Sahil, and I appreciate.
Wait, no, so it's only, it was 189 days to go from 5,000 to 6,000 because that was from February to November.
Yes, and that's November 24th. If we hit 7,000 before the end of the year, that's going to be crazy because that's under 2 months.
So is this, can you believe the difference? Like but I will say from 1,000 to 2,000 is doubling itself. So more accurate would be looking from 2,000 to 4,000 because that's doubling, and then 4,000 to 8,000 because 1,000, 2,000 is doubling.
Right, and as it gets bigger, it's much less. Like 1,000 is nothing if you're a $7,000 vehicle.
Exactly. So it should be a smaller amount of days.
Yeah, but I think that's crazy small amount if we go. And I think that's why it's in yellow right now because it's November 11th. Where are we? Can you go to the platform for me, Jenny? And we can use SPY or we can use SPX, but I want to go
SPX is not the same pricing. See, what's he using here?
He said S&P 500. It's all the same thing. So go to. Go to SPY or SPY. Yes, because we're looking at 7,000. That's SPY. Okay, and then go to the trade page. And I just want to see if you go to the 7,000 level, what the delta is on December 31st.
December 31st. It's just right here. You've got a delta. It's probably a 35 delta, 40 delta.
I don't like being in SPY. I like being in the 7,000 level, but yes.
Okay. SPX, end of the year, it's still going to be a 40 delta. It's going to be my guess.
It still will be a 40 delta.
7,000, 45 delta.
45 delta.
So we went from 6,000 to 7,000, if we hit 7,000. 6,000 to 7,000 from November 11th.
Yeah.
Wait a second. No.
No. We went from 5,000 to 6,000. We hit 6,000 on November 11th.
No, but that was last year, Liz. We're getting like that says 2024. That was last year.
Oh, you're right.
It's not even November yet. I know what you're thinking, and what we were thinking. We were like, we feel like it's November already, and we're thinking it just hit it. But no, this was last November.
Good eye, Jenny Andrews. Good eye. I was like, oh my God, it's going to be in under 2 months. But
So
I know
last year.
Let's look at the. Can you show me the chart?
And so honestly, now we've been, now it's been, we're almost November. So it's been over a year, almost a year before we hit 7,000.
It's been a while. It's going to be 365.
Yeah. And that's the, we had the big down move that we've been coming back from. So that down move went from February till April.
Yeah, you're right. Because the 6,000 level's right there. I was thinking it was November. I was like, you got to be kidding me. We haven't gotten there yet. Good eye.
And if I could do this chart instead of a day, I can make it like a week. So you can have a little more time here. So you can see 6,000. We hit 6,000 and here it is, November 11th, 2024.
Yeah. So this will be like 365 if we get there. If we get there by
to 7,000. Yeah. So it's about time. We should expect it.
I mean, I was like, we're going to get there in 2 months.
It's about time. We should expect it.
We should expect it. It's got a 45 delta. That's expected. It's got a 45 delta, which means it's got a 90% probability of hitting that at some point in that cycle.
Yeah. And frankly, it should have happened sooner. But there's more to this too. And I might have to I'm zooming in on this. So here you see some milestones and when they hit these numbers. And this is just, you can see these recent, like.
Okay. Here we get into 2025. This is where we are right now. And those are the numbers where you're hitting the milestones in between.
Yeah, so you could see like 6,100 to 6,200 took a long time because we had that fall in between. So you went for 6 months from January to end of June before you even had 100-point move up because of that down period we were in.
Yeah.
And then it was off to the races. It was like $100 a month. July, August, September, October.
Can we go back to November 8th, 2024? 2 days.
2 days for 100 spool points. That's fine.
That's nothing. I mean, sometimes we get that in a day.
Yeah. I mean, that was right after your birthday. Don't you remember it?
No.
2 days, November 8th. Yeah. Was that the election?
I do remember my account looking well there.
Wait, that was the election.
Oh yeah, that's exactly what it was.
Yeah,
exactly what it was. 100 spool points.
I'm surprised it didn't go more than 100 points.
I like, and you're like, and it's about time because we should have gotten there a lot sooner.
So yeah, this is pretty cool, and you can. Now this isn't. I was going to say this is This is not in today's cherry picks. This is actually.
No, but this will be archived in Last Call if somebody wanted to reference it.
Yeah, and there's more to this. I was zooming in. So you've got all these days. Look at this. January 24th, 2024.
Look at it. It's highlighted in red. Did you do that? Or did Sahil?
No, Sahil did that. 757 days to go from 4,900 to 5,000.
Oh.
Or no, to go from 4,800 to 4,900. Okay, so basically this started in 2021. December 28th, 2021. To move up, to get from 4,800 to tick to 4,900, that took 757 days, 2 years. Do you remember that the market being like that?
Honestly, Jenny, I like it being broken down like this because, I mean, now that I see that the one was the election, I don't remember the market just going sideways for 2 years.
Well, so like 2020, we were down early and then rallied, but then we were just stagnant. Like,
oh, that
for
makes
years.
sense. That makes sense. Well, we must have been stagnant for 3 years that we were just going like this. I don't remember that at all.
I don't either. But I guess that's when Val was 13 and all we did were calendars.
Yeah, that's true.
That's when the VIX hit.
We've been trading for a long time. When the VIX hit 10, you know what? You can go back and see where that is. So look between 2021 and 2024 where the VIX was.
Yeah, yeah.
So that is those should correlate. 2021 and 2024, the VIX should be very, very low.
And I remember. I'll say this: it hit 8, and people will say VIX never hit 8, but I think it did. Maybe not 2021 to 2024, but
keep going that way. 2021, you gotta stop right there. Yeah, no, VIX was super low. Yeah.
Yeah.
The VIX was 10.
Right. We had it as low as 1185 here. Here is the low, 1107.
Yeah.
1062.
If you keep going, yeah, I think, yeah, that's pretty low.
Right. And so then, dun, 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 something happened.
And that's?
Oh, that's the tariffs.
Yeah.
Yeah.
And that was the big drop. That's pretty interesting. I like the days for the 100 levels, but that was pretty cool that he put it together with how fast you can move the 1,000 points.
Yeah, look at this. 2017, VIX 884.
Oh my gosh.
So, when people think like, oh, VIX is low at 1644, it's not. I mean, we've suffered through way worse. VIX at 16 isn't terrible.
No, but I think people are spoiled because it's been so high for so long, right? So VIX at 16 is not terrible. I mean, it was you have the commercial where you're like, and I can't wait for it to get back there. What was it, 17 or 18? 17.
I can't wait for it to get back to 18 because for years we traded with VIX around 10, like 8, 9, 10, 11, 12, 13. And it was painful because I can't even imagine the 0 DTEs. You wouldn't be getting paid much.
No, you wouldn't get it. And those weren't around.
Yeah, they weren't around. No. Liz, we've lived through quite a bit.
Okay, so my question is, can you go to NVIDIA real quick, just because NVIDIA has been all over the news, and go to the chart?
Yeah, hang on. I got to fix my chart because I've got it on the weekly.
Oh, okay, yeah.
Or on I have it on a week instead of day.
Because Frank the Great is saying that it might have had a bad print.
Oh, way up here. It says the high is 203 and the low is 191.
Yeah, they're saying the 191 might have been a bad print.
It was never down that low. Maybe. But thanks, Frank. Frank's amazing, full of great information.
He always is full of great information.
What did he tell us about Intel today? He said something.
Oh, yeah. Hold on. That was a text, not Teams.
But I know he mentioned Intel, but I don't know if he said what was happening.
Okay, so someone did the Jan, go to Intel.
Okay.
Jan.
Yes.
And it was and I'm going to read this, and I quote, the 50-60 and 40-30 call and put spreads 9,000 times. So if you go to volume.
Okay, you can see it. You can see it. 40, 30, 10,000. You've got 10,000, 10,000.
And then you've got the 50-60 call spread. So is that an iron condor?
Again, so 50, 60, you see 20,000, 20,000.
Yeah.
So who knows if they're buying it or selling it? It's $1.26 for that. But, they could have done like a Super Bowl. They could have said,
but look at this. So volume is today and open interest is overall. But look at that. The open interest in that is 107K. They could have been closing. That could have been a closing order because volume is today and open interest is all. That could have been a closing order.
Yeah, who knows? I don't know. But if I had to make a trade on those strikes, I don't know
what? I'm giving Frank the Great the credit. I know Tony calls him a Taiwanese source. It was Frank the Great. I'm just telling you who it was.
Okay, yeah, look at this. This is, if I had to use those strikes and make a trade, this is what I'm doing.
I know, but I think they were closing.
I'm buying 2 call spreads for every 1 put spread I'm selling. I'm going to sell 1 put spread, buy 2 call spreads, and taking a credit 10,000 times. Because they did it 2 to 1. Because if you look at the volume, this is 10,000 by 10,000, and this is 20,000 by 20,000.
Unless it was a closing order.
I'm gonna put this in. Can I put this in?
I can't stop you. Tim Knight's gonna be very disappointed in you because he's bearish.
We're selling.
By the way, we've got Mr. Knight on. Tomorrow. He has graciously agreed to grace us with his presence again tomorrow, which we're excited about.
Okay, so you look at this. We're selling a $10 wide put spread, 80 days out. So guess what happens? If Intel falls to 30 even, and we've got 80 days out in this is not going to be a $1,000 loser. It's not.
It won't be because that will maintain lots of value.
The risk is $937 in January expiration. So I'm going to sell the 40-30.
Do we have anything in, we're almost out of time and we are going to go bust into overtime time. Do we have anything in Intel?
What do we have? We have a Jade Lizard, but that's a no. I just want, sometimes we like to follow these trades where the volume is, and this is what I'm going to guess they did.
Pop it in. You've got like 10 seconds. Pop it in.
And taking in a credit for it.
And filled. All right, Jenny. On that note.
Unless they bought the put spread and sold 2 call spreads to pay for it. That might make more sense.
That's what I think they did. But I know that.
But I'm doing it the opposite.
And that was Tim Knight.
All right, we're out of time. 2:59. Push that like straight out.
So everybody stay tuned for overtime. Those boys are awesome. They are really, really good. There's the closing bell. Everybody stay tuned for overtime. I don't know who it is today, but I know that they always,
you know what, they're always amazing. It doesn't matter who you get, you're going to get someone great.
You will. All right, Jenny, you go rest up because I will see you on the floor tomorrow.
Okay, everybody have a wonderful day. Remember to trade small, trade often. We will see you tomorrow. Tune in to keep on the show. Got last call. What is coming up? Overtime is coming up.
Overtime, yes.
Stay early tomorrow morning. It's been a long day. We are out of here.
Bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the tastylive crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the to the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of tastytrade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
And we are back. Welcome to Overtime. I'm Milius Pivac here in San Francisco. That's Dylan Radigan in Milan. Our returning champion from Chicago, sir. Please welcome Glenn Freiberger to the show on a perfect day for that. It is on the eve of a Fed meeting, so no doubt we'll have all kinds of things to say in FX world. Gentlemen, how are you feeling going into what is easily the craziest day of the week tomorrow?
We'll see. I mean, yeah, wouldn't have necessarily expected to be here, but I should have been, at all-time highs. NASDAQ, no mercy, new deals, companies shaking hands, CEOs saying, of course this isn't a bubble. All is good and well. Gold holding in.
What do you make of this interesting end-of-day deflation? So obviously, here's this is the ES contract here, and we had a nice little run, and then maybe the past hour or so. These are 15-minute bars, so that's a half hour here. This is the last kind of minutes of the day here. We've got this sort of fizzling out of about half of this move. Does this give you any pause, Dylan?
Meaningless noise, the chaos of a supernova that knows no restriction. Okay.
I mean, clearly we know the perils of thinking when we look at days like this.
I welcome any sell-off as an opportunity to load in deeper, bigger, and larger than ever before, because I do believe that the supernova is upon us and that we have underestimated both the fabulous and sparkling and spectacular returns that await us on the other side of the supernova rainbow, as well as the catastrophic labor retrenchment that it represents. I believe all data related to markets and particularly to labor have rendered themselves irrelevant in the modern day. We're stuck with a data set that originates from 100 years ago in terms of the metrics and the nature of the measurement, not to mention the shutdown, not to mention the flaws in measurement, not to mention the fact that hurricanes and broken arms are considered positive for GDP.
Somehow.
If you are not long the supernova, which I simply suggest be done by way of the Mag 7, do not think. Do not call your mother. Do not call your brother. Do not ask a question. Simply understand that the potential energy that is represented by the AI transition makes the original internet revolution of the late 90s, let alone the horse and buggy transition to the combustion engine or the industrial revolution, look like a flea upon the ass of a black Labrador retriever.
And lo, it probably looked the same with telecoms looking backwards and railroads looking backwards and the steam engine looking backwards.
The asterisk is that the most popular book in America is 1929, but that's for later in the show.
I mean, of course, and a big shout out to our friend Andrew Ross Sorkin. I don't know him, but I'm a fan.
Until this thing, I know him well, and I will tell you this: until this thing falls apart, you might as well get your piece and buy your steak and enjoy your wine and take your lady for a dance and go to Portola, listen to some music. This is no time to be short. That's all.
Interestingly, on that point, excellent article from The Economist last week saying that the super rich are foregoing goods, but that is not to be confused with foregoing spending, because they are plowing headlong into experiential and service sector things. Goods have apparently become entirely too abundant and available for the hoi polloi in order to still command the attention of the super rich. And so because experiences are often one of one, like tickets to a particular concert or to a particular sporting event or some such thing, a certain restaurant, that things like rare wine and art and such have fallen fairly precipitously in value. That is luxury goods, but luxury services are surging. So indeed, if we are in the midst of the supernova, it is concerts and restaurants that are there for you. That's apparently where the hotness is.
So what's our indicator then? The Sphere sales? If the Sphere continues to sell out and get new talent, then all signs to go.
The price of a ticket to Coachella might be a workable indicator at this point.
But no, to your point, then
I recommend buying the dip to be quite simple. I recommend.
How's that for an experience? Enjoy the experience of buying a dip. It won't come very often, so allow me to let you in on this one in a lifetime experience. But yeah, to that end, the kind of sell off at market close, I would have expected today would have been much more of a consolidation overall, heading into not only the FOMC tomorrow, but just the earnings slate alone. To kind of set the tone for the rest of the week. So I wasn't going to pay too much attention today. It ended up being slightly more interesting than I would have thought in terms of headlines and price action, but nothing fundamental.
What would you have thought if I might be so bold as to inquire?
I mean, a headline from, NVIDIA, et cetera, wasn't what I was expecting. And so I assumed a little bit of chop, maybe some profit taking. Nothing interesting today, but I mean,
yet what did you find, Glenn?
Pardon?
And what did you find that was contrary to what you would have thought?
Oh, I mean, just the more AI deals, commentary on if AI is or is not a bubble.
Which the Jensen Wang of the hallowed NVIDIA name talked down today again.
Exactly. Some positive, Trump headlines, productive meetings with Japan, their defense spending that I thought was kind of interesting. That's about it. Yeah, it's not revolutionary, but
it does look like there were a couple of interesting headlines in macro land outside of kind of the main indexes, but we've got the NASDAQ here on the screen just to square the circle here on what's going on Wall Street. And to Dylan's point, NASDAQ fared better. It still gets this little wobble at the end of the day, but not anything serious nor anything as pronounced as what we see in the S&P. And if we look on the other side of the ledger, we can see Russell can't even manage a gain here. So there's an interesting sort of stacking of risk sentiment here. We can see here was the same gap that we had in all the indexes at the start of the week for the Russell. That was around the idea that, hey-oh, it's off again for the U.S.-China trade war, because apparently we've got a raft of agreements already on the paper. The two of them, Trump and Xi, just have to sign the thing tomorrow and give it their blessing, and apparently we're going to de-escalate this whole situation. But apparently at least some amount of goodwill has been restored. So we got upside gaps in all the indexes at the open. Russell struggling with holding it more so than the others. And the hopium, not surprisingly, and certainly to Dylan's point, is squarely in tech here. We are approaching tech earnings bonanza at the same time as we get this Fed situation. So let's go there for a moment. We've got three big names on the menu for tomorrow and one big name on Thursday. And tech has been outperforming handily so far this reporting season. We've got 29% or so of the S&P 500 that have already reported. Average earnings growth of about 9.2% for the group so far. But tech has easily outstripped that. Semiconductors leading their the tech sector earnings growth as reported so far 22.3%. So that's obviously more than double the average for what's reported sort of generally for the S&P 500 so far. That's from FactSet. Hat tip to them. And what's interesting, of course, is that the really big names are on our menu this week. We've got Google. We've got Meta. We've got Microsoft. They're up after the bell tomorrow. That would put them after the Fed. And we've also, on Thursday, of course, have Apple and Dylan's favorite, Amazon. Anything there? Well, let's take it Amazon while we're here. I think, Dylan, you'd be tremendously excited to see that Amazon appears to be breaking out here. It's attempting to clear this high that we've been talking about.
Breaking out, yes, but I'd like to see like a gap higher, like a full Google, Tesla, Apple gap open 10% higher. I'm expecting something glorious from these people.
Yeah, so in the spirit of something glorious, for example, like this, like something like we saw in May, let's say.
That's
right. And certainly not something like what we saw in July. That's the wrong way.
That's not
so what we're looking for here is then perhaps a run at these highs, somewhere around
looking for a gap
240, something like that.
AI revolution on a supernova, on a shift in the decimal point that is of an order of magnitude on a company that's worth hundreds of billions of dollars. I believe that the AI supernova is I believe it is equivalent to the discovery of electricity.
I mean, it certainly could be. I mean, let's not mince words here. I mean, we're very clearly, and I mean, people's dollars are doing their talking for them. It's incontrovertible that we're looking at tons and tons of confidence in this story, and people are putting real money behind that confidence. Meaningless froth, this is not. And so, for me, as ever, the big question, sort of thematically, isn't that AI is or isn't the transformative technological revolution. I think it's pretty clear that it is. The larger question is the sequencing, because every single time we get a transformation,
and the timing and the present value thereof.
Right. It's when do we get to the point? Because we always do. We always get to this point. When do we get to the point when maximum hope for the future has been reflected in assets and the narrative has to start being return on that investment? And at what point does that then give you a cooling off period? The weak hands get shaken out. Those things that are malinvestment amid the hype explode. And the real thing sort of starts marching on its long arc after a discount.
To that point, Dylan, do you think that there could be any sort of proof of concept in the numbers that they could release this quarter? I mean, just because we've already gotten the headlines of, how they're treating this revolution from a headcount perspective, and that's done what it's done. No crazy gap higher that you'd like. But do you think that this go around, there could be something in terms of guidance that investors could believe to that effect?
No, I do not. In fact, I believe it is a certainty that what Mr. Spivak refers to as a significant retrenchment in pricing as a result of failure to deliver on the ebullient enthusiasm associated with the concept of the AI revolution is a certainty. In other words, I believe for sure there will be a massive sell-off at some point as a result of excessive expectations for the value of AI. However, I believe from an investor and or trader's perspective, it is vastly more reliable to simply be long the supernova and enjoy the glory that is the supernova, rather than to try to time the moment when that retrenchment occurs. And if you're so fortunate and or unfortunate as to be exposed to the retrenchment, that too shall be an entry point. In other words, even with the certainty of the retrenchment, that whether it be tomorrow or a year from now, that the retrenchment is better to be treated as an opportunity to dollar cost average into a long position rather than a rationale not to participate in the glory that is the supernova. However, I don't believe any particular data point shall be revealed in the near term that shall validate the supernova. The supernova's very existence is based on the imagination, the collective imagination of the marketplace, thus the popularity of the book 1929, because we have now detached. The whole point is not to think.
Yes.
It is the suspension of thought that allows the unlimited potential of the supernova to express itself in the Mag 7 and the adjacent names. It's also the suspension of thought and the glory of the supernova in the Mag 7 that ensures the certainty of a massive retrenchment at some point in time. But that some point in time could be a year from now, 2 years from now, tomorrow. I don't know. But when it happens, I believe it's an opportunity to purchase more securities. And I believe the probability that any individual trader is able to time the moment of the sell-off, which we should all be so lucky because you can make a fortune in that particular moment. But it's much easier to simply be long the supernova with a little dry powder to buy into a retrenchment than it is to sit out the supernova hoping to time perfectly the retrenchment and get rich on the sell-off. We should all be so lucky to get rich on the retrenchment, but the probability of participation on the upside just seems much more reliable with much less risk.
Well, and to that point, because I think that is a very salient assessment, to that point, we are lucky enough that we are participants on the options side of things often enough, which gives us a toolkit that allows us to say, look, maybe just buying call verticals is good enough because our risk in that scenario is capped. And if we are then on the wrong end of some sort of a shakeout, which
sell-off, which will be
again invariably is coming.
Glorious sell-off. It's going to be a real beast.
It's going to be one for the ages.
It's going to be a barn burner.
It's going to be one for the ages.
They might write a book about it.
Most likely.
Andrew Ross Sorkin may write a book
with the year in the title.
Yes.
With the year in the title. So that's coming. It's not a question of
2027, 2026, 2028. Who could know?
Who could know? And so if what you're doing then is saying, you know what? Okay. I am in an unleveraged long-term way, not the trading sense that we're discussing here, but in a long-term, unleveraged, owning the cash equities in some long-term holding account, I am forever long. By the way, I'm doing that. That is something that sits aside from my activities as a trader in a more tactical, shorter term universe. But you need not limit yourself to that, to Dylan's point, because as a trader, you could say, okay, you know what, every time that this thing gets a little bit iffy, like say here, or maybe here, maybe here, maybe I'll take a shot at it. But when it then goes the other way and breaks out, such as the NASDAQ did right here, and I've not been a practitioner of this, but it occurs to me that one could be, vol is not very expensive at all. So when you break out like this, you could say, you know what? I could find a risk-reward call vertical with at least, let's call it, 1-to-1 risk-reward. And if I'm on the wrong end of a terrible, terrible sell-off, because it's a risk-capped kind of an exposure, okay, one of them is going to be a worst-case scenario. But as long as I maintain hard, locked-in risk-reward call vertical positions, yes, that limits my upside. I have to roll periodically. But it also limits my downside in the holy moly scenario. And
You're
basically said
spreads are still the catastrophe.
They're not. They basically diffuse the catastrophe unless there is some sort of crazy thing. And by the way, the reason you'd be a buyer
on what, the NASDAQ,
let's say, or the S&P. And if you're a buyer of the calls, and this is key,
45 days out, just run call spreads 45 days
every
out.
Every time that one of these consolidations breaks out,
supernova until you get your face peeled off.
And the thing is, you won't theoretically get your face peeled off, almost by definition. You'll take a loss.
You're saying at the money call spreads.
At the money call spreads, but you can manage the size of that loss.
Call up the screen. Let's see the screen. I want to see this.
You can manage the size of these losses. So let's say here you are. You're going to go 45 days.
I mean,
out.
a logical version of me would say this is terrible thinking. I wouldn't do this. But now that I've adopted the non-thinking mentality,
this only works in a non-thinking.
The only way to make money.
This only works in a non-thinking.
Call spreads at the money, 45.
So there you go. Call spreads at the money. And maybe we might even go out further. We might even go out 51 days.
Okay.
And you could structure something here where, let's say.
And how do I set my top here? What am I selling?
So what you're doing here is you're long the 26-2 call.
Which is where we are, plus or minus.
Which is where we are. You're going to the next kind of big pocket of liquidity. Let's say it's around 26,750.
You're selecting the call you're selling based on the liquidity pool of the call.
Based on what's deep there. Yep. So I'm looking at what's deep because my focus is good risk reward here.
And entry exit liquidity, rule number one.
Exactly. So you could go further and you could see you could start to skew risk reward a little bit in your favor. Your max profit now exceeds your max loss by a little. If you wanted to pull it in, let's say to there, you could get it a little bit closer to 1-to-1. But essentially, what you're doing here is you're saying, I've locked in at worst a coin toss. So what I lose is what I'll make, or what I risk is about what I make. But my probability of profit is ostensibly higher than this theoretical number suggests because we're not thinking and because the supernova.
Would you use, is there greater liquidity using QQQ and just scaling up to whatever you're comfortable?
I would certainly do this with the ETF rather than the NQ or even the MNQ contract, just because it's smaller. If you're going to do this, size is not your friend, because if the face peeling does commence, then number one, I would say you want more duration to dilute your delta exposure. So if the underlying really falls out of bed on you, you're not so directly exposed. And secondly, you'd go with the Qs, to your point, Glenn, not with even MNQ, again, to keep things smaller and liquid. So let's say you go 52 days out here, you do a call vertical, again, where you are. And you can see here now you can start, like these numbers get very nicely smaller here. And you could start to, let's say, pull this out and go, okay, I can maybe start to get it closer to 1-to-1. And you might even go a little bit off in the money and sort of tinker with this. But you could get this pretty well close to 1-to-1. And so the idea,
but let's say the face peeler comes in the middle of this because we know it's out there somewhere.
Right. It certainly is.
This is going to be a lost cause. Can I be long these covered calls basically indefinitely while simultaneously long sort of madman's delight out of the money puts?
Well, you wouldn't.
Or is that a conflict? Does that basically leave me nowhere?
No. So the idea here would be this thing is going to run until it doesn't.
That's right.
And all you really want to do is not end up on the wrong end of when it doesn't.
That's right.
In an outsized way. So you will lose money when it does. But the idea is, you know, going in, let's say you've got a 20K account. This position that we've got up on the screen here gives you a max loss of about $400. And relative to a gain of 1-to-1 at least, and you can tinker with these numbers to get there. Maybe you use SPY instead of the Qs and do it that way. The idea is that you're not risking more than you're looking to gain, because obviously you're buying calls. You're also paying for the premium to own this. I think the key here is you wouldn't be a seller of premium, because you wouldn't want vol to spike on you in this environment. You'd want to buy whatever vol you're buying. So if vol spikes, that's ultimately helpful, at least to limiting some of these losses, because you own, obviously, you're long a piece here. So if the cost of options goes up because vol generally spikes, that's mildly helpful. If you end up on the wrong end of the big sell-off, then what you also do is you've defined your risk. So for example, if you look at SPY here, and again, you'd have to tinker with this a little, to get as close to 1-to-1 risk reward as you can manage. And when you do, what you say, well, let's say you're somewhere around here. It's a little bit worse than 1-to-1, but just for the sake of argument, you've locked in your loss at $354, basically. So you're saying, okay, I will keep rolling these forward as long as the non-thinking continues. And one of these times, I am going to lose 1-2% of equity. But I know it won't be 10. I know it won't be 5.
Long some deeply out of the money put.
Sure.
Such that when I lose money on my call position, which is a sure thing at some point when I stop making it.
I mean, you could do that.
Inherently such that, because again, most of the time I'm going to make money not thinking. Let's be honest.
So this smacks of thinking, this idea to own some sort of a protection. The idea here would be the protection is when you lose, it won't be even a 5% loss. You may be losing, and again, this comes down to how you structure it, but I would say I would limit myself to losing no more than, let's say, 2% of equity, give or take, and expect to flip the trade over when the holy moly hits. So anytime that you would get one of these suspect situations, so you'd go, let's say, to something
isn't the
like
entire situation suspect by definition?
Yes, but you would need one of these things. So one of these things occurs and you go, okay, I'm out of here. So being responsive to the price action here would be a critical thing. So you ride this whilst it is being ridden. And when you get one of these, you're out. And then if it breaks out like this over a high again, you're back in. And you keep rolling it for as long as it rolls. And when it finally stops, you're going to get an unpleasant loss, and that unpleasant loss can be made finite in your sort of architecture of how you set this up. And the idea is when that happens, you're flipping this over and going the other way and either selling calls at that point or buying puts. Probably buying puts. So a little bit more active management, as it were, but through verticals and verticals only, to basically keep your risk very narrowly defined, such that when the face peeling comes, you lose, but you don't lose more than you thought you could withstand in a reasonable kind of calculus. And you get to pick what that is.
I think that makes sense. Question for you guys. In this current environment, has your thinking at all changed around when you would go to S&P 500 versus the NASDAQ 100, just given, who the drivers are right now and it being NASDAQ led? Has your thinking between choosing those indices changed, or is that too much thinking in general? We're not thinking right now.
It's the price action for me. I'm just looking at the price action, and if one seems weaker than another, if there's a price signal in one that doesn't exist in another, I just go with what the price action says. So, for example, obviously the price action in Russell here is very different. So while these other two are hitting record highs and there's no stopping them and yada, 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 this is obviously on shakier footing. This got up to the high from October earlier, sort of this swing top, and stopped. Now, were this pullback here to really stick, as it looks like it might, by the way, if you want to kind of guesstimate where this former resistance turn support is, we're just about through it here. If this gives way, I might get short this without exposing myself to the others. It's just a price action thing.
I have a somewhat different point of view,
sir,
which is that your use of the word thinking inherently in your question obviously already renders the question
null and void.
See, therein is the thing.
With the very question is, has
not
your
allowed in this framework.
I believe he said like 3 or 4 times, has your thinking changed? What is your thinking? Like the entire base assumption, which requires the pretext of thought, is inherently flawed and as a result rendered moot. However, my thought, to contradict myself in the classic hypocrisy of all modern communication, is to say that the more pure the play is to the Mag 7, which is in the NASDAQ, the better off you're going to be. Because no one benefits more from the suspension of thought, and no one shall be punished more severely from the return of thought than the Mag 7, and no index better reflects all of that than the NASDAQ. So I would, so Ilya will point you to the price action, which is in and of itself stinks of thought.
It's dangerously thought adjacent.
Smelly of thought.
Dangerously thought adjacent.
I, however, am how do I say it? A proponent of the absence of thought. And as such a proponent, I recommend the NASDAQ exclusively, if not a straight Mag 7 index, and just be long until your heart gets ripped out, and then maybe use the Spivak sort of covered call management hypothesis. I mean, look at how much money those who have not thought have made just in the last 20 days.
Remarkable.
Yeah. Remarkable.
And look at how much money you would not have made by virtue of thinking.
Also remarkable.
Because anybody with a rational thought would be like, there's no way this thing continues to spike higher. Rates are not going to come down as much. The market's wobbly. The jobs are this. Trump is crazy. Government shut down. Valuation this. Blah, 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 blah.
Not helpful.
Don't think and buy the Mag 7.
Well, this brings us to a very interesting question in this conversation. So ostensibly, we're sort of climbing this wall of worry, many of which you've just listed. There's this and there's that and there's that and that. We've sort of systematically unpicked a lot of the big ones going into their sort of day of reckoning this week, really. We started kind of on the Fed reckoning last week with the special dispensation CPI report that ultimately didn't spook anyone and was a big catalyst, as we saw, for stocks to go higher. Nobody is going to be confused when the Fed cuts rates again tomorrow. It's widely expected. 99% chance that it's going down in Fed funds futures. So nobody is going to be surprised when that occurs. Nobody's going to be surprised when the Fed cuts again in December. That one is very deeply priced in too. We had this other thing with the U.S.-China shenanigans. The U.S. first did a thing, then China did a thing, then the U.S. got freaked out. And, of course, on October 10th, that's that big red bar that you see right there.
We can see it, sir.
The president got out there and did his bull in a china shop thing. And since then, we've kind of walked it back again. So now going into this meeting, which basically happens tonight, because it'll be the 29th in Korea in a matter of hours here. So the meeting that Xi and Trump have will happen before the Fed and ostensibly before the cash equity open. And coming out of these preliminary meetings in Malaysia over the weekend, apparently there's all the deals. President likes to talk about, there's going to be all these deals. There's going to be so many deals. Apparently there's a bunch of deals.
Deal City.
All the deals. So there's a bunch of deals.
Sure.
Besant's got them. His folder is thick with deals.
But he does.
Apparently the only thing these guys have to do is rubber stamp these deals.
That's right.
And then all is well.
What's the problem?
Okay, so the U.S.-China thing, back burner. Fed, inflation, insufficient rate cuts, back burner.
Sure.
Earnings we just talked about. We've got the big tech ones coming up, but tech has been outperforming. Earnings growth more than double the average for the S&P 500 so far. Probably not a big scary thing.
But does it only take one?
So therein is the question. I think you've hit the nail on the head. There's no bad news. Everything's fine. And all of the big scary things that there is to be thinking about in our wall of worry, all of those things, they're kind of anchoring here. So if your thought process was, okay, here are the things that I'm worried about, it'll all be fine. And so the market is animated by, this is not a thing to fear. All of this will be fine. Well, everything in this chalice has been spent. It's already all fine as far as the market assumes. So what's going to get better to keep this rally going? What's going to be the speculative fuel for this to continue? And does it only take now one thing for the markets to go, oh Christ, we got as long as there was to get long on the assumption that everything is going to be perfect. The second one thing isn't perfect. What happens? Speculative interest suddenly finds itself completely upside down. Whereas if everything does turn out to be perfect, well, it's in the price already. There's nothing else to do. So are we, again, not from a structural supernova perspective, because that's not going to get disrupted, but from a tactical, speculative, near-term perspective, are we overly optimistic in the short term? That is to say, there is nothing more that's going to happen that'll be even better news than what is priced already. Is that a risk here?
I'd honestly say so. I think the first order level of thinking is, one bad thing, and it'll spook everyone. But I honestly, given the recent price action, would say there's probably, if not equal, some possibility out there that if everything is as expected and just one report comes in with a new, growth metric to the upside that people weren't expecting, I would expect that to have just as much, if not more, momentum too. So maybe the risks are actually more balanced than you'd think, given where we're at from a pure price perspective.
I would point out, and again, this is a hat tip to the fine folks at FactSet, that we have an interesting thing that's happened here as a consequence of the earnings numbers that we've already seen come out. And as much as I would love, given my kind of naturally skeptical, bearish inclinations in this market, as much as I would love to poo-poo this, we now have stocks rising on positive surprises more than the 5-year average. Now, they're also falling on negative surprises more than the 5-year average. So the responsiveness to these earnings has apparently been more jumpy, as it were. But generally speaking, the trajectory has been overwhelmingly in favor of upside surprises. And we can see that here. Now, they're relatively modest upside surprises, but we can see that the two big bars here are companies that beat by a little, so 0 to 5%, or a little bit more. Very few companies are beating by a huge margin, and even fewer are missing. And the price response, generally relatively modest, but nevertheless, it lines up. So the trajectory for these earnings seems not to be for one of them to scare anyone. And also, I'm very kind of attuned to the idea that the market doesn't want to get spooked. Stocks don't like going down. They're biased that way. And so
massive bid is a permanent force that shan't be ignored.
Right. And so they're inclined to find themselves a narrative, perhaps even just to say, well, we knew all of the things were going to work out perfectly, but any time that there is anything speculative, there is a level of uncertainty, even when it's minor, and la-di-da, we've diffused the uncertainty once we're on the other side of event risk, just because the things have occurred. And now they're well and truly in the back, in the rear view, we're moving on. That's a good enough reason to buy. Now, all kinds of thinking will get you looking at that and going, well, that's a ridiculous reason for anything of substance on the upside, given where we are, but that's thinking, and thinking is not your friend here. Apparently.
A great way to have less money at the end of the day. I mean, here's the thing that really intrigues me. If you go back to the chart on October 10th.
Yes.
The thing that I think that is most interesting here is one, I'm very confident in my hypothesis of the value of not thinking.
Yes.
I'm also very strongly of the belief that facing some consequential, thought-provoking action like a massive Trump tariff or a massive shortfall in AI expectations, however it manifests itself, or a massive issue as it relates to the labor market or rates or whatever, some massive sort of deviation from fundamental expectations, whether it's from the president and tariffs or whether it's from AI or rates or labor, let's say in those four categories. I believe the market, because of its sort of excessive and thoughtless madness, is spectacularly vulnerable to a 5 or 10% one-day sell-off. Mm-hmm. And I believe that the October 10th event of the Trump tweet is evidence to support my assertion that the market is highly likely to go higher, and is highly likely to go higher for as long as possible. And when it doesn't go higher, it's likely to go down 5 or 10% in a single day.
Yeah. Yeah. I mean, the inherent skew in sentiment that demands not thinking likewise leaves you vulnerable, lest a thought pass through someone's head.
And everybody thinks the same thing, and then it's a 10% on your uncle.
There you go. Exactly. Now, before we run out of time here, let's quickly do a little whirlwind of these other assets. We'll start with gold. It continues to kind of leak here, but it seems to have found some degree of support. I've actually become more short. So I took this bounce here as a reason to sell a little bit more, and this time I was schooled in the wily ways of the 1 ounce gold future, and so I have outright sold that. Obviously, from earlier in the week, I'm also short the calls in GLD, but here I just did it straight up with the future. Can I interest you gentlemen in some gold selling?
Gold selling is what you're
gold
offering.
Selling, yes.
Mm-hmm. Hell no.
Right. Right.
Don't do it.
So for me, this is getting interesting now, and it looks like we're sort of we had a range here. We cleaned it out. So I've started selling, and we'll see how this goes. I mean, it'll run as long as it runs. There's obviously a whole deep correction that we could have without upsetting the longer term advance, but I would start to I'm interested in looking for a pullback to somewhere around here. Let's call it 3600-ish, and then looking for longs here again. But we'll see if it goes that far. The US dollar is basically sticking here. There's been a few interesting moments here across the various currencies. I would argue the Canadian dollar is maybe the most interesting, but overall the dollar doesn't seem to be going very far. The Canadian dollar is interesting because it actually has a pretty meaningful rebound today. It's been kind of steadily declining, but a pretty clean rebound today around the idea that not only will one Donald J. Trump meet with Xi Jinping on the sidelines of the APEC conference, but one Mark Carney as well.
Interesting.
Separately, of course.
And you've got your BOC decision tomorrow as well, in the morning.
The BOC decision tomorrow. They're aiming to cut, but of course that's expected. So that's not, I would think, an immediate source of consternation. And indeed, the Canadian dollar is up today, as if to sort of say, yeah, we know about the cut. We're not particularly impressed anymore. So this now presents an interesting opportunity. We're scratching the underside of this channel. I am still short this, as I've been for a while. It's been going down here for some time. Can I get you gentlemen into a Canadian dollar short on a retest of this? Are we really and truly thinking that Canada is going to substitute China for the U.S.?
Is a Canadian dollar short an opinion of the U.S. dollar or opinion of Canadian oil?
It's an opinion of the U.S. dollar, and it's an opinion of the low probability that Canada can diversify toward China at the expense of the U.S. And so to the extent that today's rally was about Carney trying to kind of say, well, if you won't play ball, we'll go and see the other side, that's a bluff ultimately, that's negotiation, not reality.
I'll do that. I mean, who are we kidding? Where are they going to come on?
Right.
I'll do that.
Right. So in my mind, this now is interesting risk reward. The Australian dollar, and again, I'm short this already. So at this point, I'm just looking for opportunities to add. The Australian dollar had also itself a little chipper rally here all around this China story. You can see here there was a big gap. We've run up here. We're starting to approach this interesting inflection area here. Whatever is going on here just above the 66 level. Any interest in exploring the downside here around the idea that the China story is perhaps all that there is to see at this point, that the Trump and Xi meeting is going to happen. They're going to say things that are not as bad as things they've said before. La-di-da, it's already in the price. There's nothing else to do here.
I think this one's
meanwhile, the dollar continues to recover.
I think this one, it's the tape action is slightly more interesting than the Canadian dollar, and so I'd be inclined to wait a little bit to see if we get to that 66-cent level, just because while that is the headline right now, something like risk sentiment change can very much take this down or up very quickly without anything developing on the China front at all. And then you're left holding, what you, based on the thesis that, you weren't inherently in, you're left still in no man's land to the upside or the downside.
I would agree. And I mean, I'm short from meaningfully higher levels, and so I'm sitting for now. But this is not the spot where I would be adding to my short either, because to your point, it hasn't shown itself weak need on its way up yet. It needs to give you a little something to tell you, yeah, it's running out of gas. Looking at the crude oil situation we've been looking at, my short here that I embarked upon yesterday has kind of started to tentatively work. So I sold out of this range here with a vertical. It's somewhat started to decline. It's finding a sticking point at these former levels here below the 60 level. Any interest here? Can I get you, gentlemen, into a crude oil short, perhaps on a break through these levels?
Too unreliable, too squishy, could go any which way. No.
I think this, at least, some of the recent back and forth has presented itself as maybe more interesting for a neutral position. Now at least you have some price points lower that could be interesting from the option side of things, because otherwise...
I would agree. I think the sort of Thomas Westwater perspective is being lent a lot of credence here, which is that if this was basically, so whatever was going on in here was one kind of range, that we are now down here in a different and new range. That essentially we've re-baselined crude where this was kind of the middle line, and now our new range is maybe something in here. So from about 66 down to, let's say, 55, 56, something like that. And in here now is your oscillation, and maybe with vol relatively low here at 27, maybe what this is now is an opportunity to essentially just play the new range from a neutral perspective. I'm inclined instead to kind of try to pick around in this range, but nevertheless, there is a lot to be said for a kind of neutral approach within these levels now. And with that, gentlemen, overtime is out of time. Everybody stay put, because if what you wanted was 17 exhausting charts, and exhaustive, in fairness, on the FOMC meeting, that's coming your way momentarily with macro money. So I'll be right back. We'll be back for this show in a mere 23 hours. Nevertheless, stay put. And for Dylan Radigan in Milan and Mr. Glenn Freiberger in Chicago, that's overtime for today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account,
as stock markets face the Fed once again, with expectations firmly anchored on a rate cut, not only at this meeting, but at the one to follow, is there anything for the markets to gain in this outcome? Or do they have everything to lose now that they are priced for perfection? That's what we're going to figure out here. Macro Money starts right now. Welcome to Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And as advertised, we are going to take a look here at this Fed monetary policy announcement that is going to be with us here in the next, less than 24 hours. That's easily the tentpole event risk for the week, but it's certainly not the only one. This midweek pocket here this Wednesday is going to give us some huge earnings, and it's going to give us a breakthrough maybe in the U.S.-China trade kerfuffle that we've been watching. So let's consider what we have happening here in the markets going in and what all of this stuff may do. And of course, the top of mind question here is going to be, are we going to get anything from the Fed that still has speculative juice behind it to move these markets, or are we already fully priced for what there is to see? So let's start here with the way that these markets have performed over the past 24 hours. Not surprisingly, not the most enthusiastic way forward, and not the most convincing one either. A slight eking out of gains for the S&P, up just a bit over 0.25%. NASDAQ doing a little bit better, and in fact, tech has been leading, coming out of some of the recent unpleasantness, in particular, of course, at the start of this month. October 10th was a big, ugly day for all involved on Wall Street around these U.S.-China trade war escalation fears, but those have been increasingly put to bed, and against that backdrop, we've seen earnings seemingly take center stage, even as Washington and Beijing attempt to kind of walk back the worst of the kerfuffle here. And so as we get earnings results, and we'll take a look at some of these averages here momentarily, it's clear that tech has been leading on the reporting front. And so not surprising, really, that it's been leading on the price front also. No big changes today for the fixed income space. The 10-year, the 2-year leak a little bit lower, but ultimately no big changes there. Crude oil coming back after having spiked significantly. We can see that last week we had this massive 7.6% run-up around the idea that the U.S. has essentially told markets that either they do business with Lukoil and Rosneft, two of Russia's biggest oil companies, or they do business with the U.S., but they can't do both. This kind of mirrors the way that the U.S. squeezed Huawei, China's Huawei, out of the 5G cellular market, the 5G mobile market, basically saying, if you do business with them, you can't do business with the U.S., essentially adding the entity itself onto the list of restricted counterparties that the U.S. keeps. This has now been done to these oil companies. That's a direct swipe at Russia's ability to sell oil on the black and the gray markets and sort of circumvent sanctions. And basically to say, okay, well, we're not going to try to compel Russia. We're going to try to compel the buyers of Russian oil. And that, of course, puts a target squarely on both India and China, the most prodigious buyers. And that, of course, gave us a big spike around the idea that this may increase what crude costs, because, of course, they've been buying it at steep discount. Russia's, after all, got to sell in size to someone, and beggars can't be choosers. So what we end up with today is a kind of moderating of that move, perhaps in anticipation of some sort of a grand bargain to be done when the U.S. President Donald Trump and his Chinese counterpart Xi Jinping meet in but some hours here on the sidelines of the APEC, the Asia Pacific Economic Cooperation Conference, taking place in Busan, South Korea. We have gold leaking a little bit lower as well, perhaps again around the idea that some of those tensions are going to get relieved. And the dollar here is pretty well steady. The euro is essentially flat. The yen is a touch higher, but ultimately not getting very far. That seems to be around the friendly banter that Donald Trump had with Japan's new Prime Minister Sanae Takaichi, and how that's gone forward. Bitcoin, a little bit soft-footed here, off about 2%, but ultimately not getting very far either. On to the Fed meeting, where, of course, we have overwhelming likelihood that this rate cut is going to happen. 99% chance now that we are going to get a 25 basis point cut. Markets aren't even considering the idea of anything else at this point. And looking into December, we've gotten a little bit lighter in the level of certainty. In fact, we're down meaningfully off where we were a week ago, and down even from where we were yesterday. And we can see that's coming because the possibility of a hold is starting to creep ever so slightly higher. But to put that in context, the likelihood of a hold now is only about 9%, whereas the likelihood that we are going to get the cut is 90.8%. So it's about a 91 for, 9% against that we're going to get a cut. So still very, very convincing. And of course, coming into this, we just got that special dispensation CPI report that was released despite the government shutdown, and some moderately helpful guidance here, if you will. The headline number rising, but not as much as expected. 3.1% was expected. The core actually easing back from 3.1 to 3. So both end up at 3, but in different ways. We can see that for core services, which is easily the biggest contributor to inflation here, we can see 2.12 percentage points out of 3 is in services. So that's still by far the biggest chunk. That actually came down. Goods inflation was helpfully steady. Food inflation, all but steady. Energy is where you got the biggest lift. And so that's how you end up with core coming down. Core, of course, excludes food and energy. We can see the delta on these. So we get the headline rise of 0.1%, and that's largely because with the rise of 0.17 on energy and the decline of 0.16 on essentially the rest of it, what you end up with is this. So this and that's where they net you. And of course, if you hold aside food and energy, that's where you end up. So either way, non-controversial and not apparently disruptive of anything the Fed might be looking to do, at least in the near term. Now, what's interesting in this equation is, of course, we're looking at something that the market has had already very clearly telegraphed over a month ago now in the Fed's September update of the summary of economic projections. We can see we started with a median rate of 4.4. We got one cut in September, and with a 3.6 number for this year, that amounts to 3 cuts. So we got the September one. The markets are fully baked for October and December, and ought to be if Fed forecasts are to be taken at face value. So there's seemingly no big controversy here between one and the other. We're sort of very clearly looking at something that ought to have been already in the cards. The controversy, as ever, continues to be about what happens next. And if we look here, the Fed is baking in just a single 25 basis point cut through the remainder of next year after these cuts occur. But the markets, of course, are of a less convincing standing. They're looking at 65 basis points for next year, so much more dovish, and erring on the side of 3 cuts as opposed to 1. So clearly, there's a meaningful opportunity here for some sort of reshuffling. And when we consider that we got to this with an upgrade of growth expectations, an upgrade of inflation expectations, and a downgrade of unemployment rate expectations, would seem like the Fed sees a rosier economy than the markets are anticipating in calling for all these cuts. Now, alongside that CPI report last Friday, we also got the S&P Global PMI report, which, to the Fed's point here, gave us an economy that seems to be accelerating. Here's the composite index. Services continue to accelerate here, and the overall economy, of course, follows. Also, helpfully, manufacturing not only back to growth, but also ticking up a bit in terms of the pace of that growth in October. Obviously, as ever, this is done in the logic of PMI. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so what we have here is seemingly, looking at the composite index, growth that is both positive and accelerating. And in fact, we are at this point back to these heady levels from the second half of last year, which we can see actually lined up with the strongest growth that we'd seen since May of 2022 or thereabout. So we're looking at, give or take, 3-year highs or their equivalents on the growth front. And of course, that would be consistent with more inflation and would be consistent with the Fed somewhat constrained in its rate cut abilities. Also looking at the dynamics, despite the fact that we had CPI tick lower here, both for the headline and the core, as we just saw, that's this right here, the 6-month and 3-month trajectories for both headline and core numbers are starting to get uncomfortably higher. Both the 3-month and the 6-month for the headline numbers, obviously starting to edge up relative to this downward draft that we saw from the beginning of the year. Same thing for the core. So we're looking at inflation that's not exactly trending in the direction of endless easing. It might, in fact, be actually doing the opposite. And finally, we also have here this indication from ISM. That's another version of PMI data, but it helpfully has this embedded inflation tracker in it. And what we see is it tends to anticipate what happens in headline CPI and PCE inflation numbers by about 2 months, give or take. Obviously, you can sort of forever tinker with lining this up. Is it 2 months? Is it 3? Is it 2.5? But if we look at this sort of in the spirit of what it's showing, what it anticipates is that from right about here, what we're looking for is an inflationary spike. if this run-up ultimately is going to foreshadow things accurately. And we can see we've started to sort of see that happen. So as this found a bottom and started to come up, this found a bottom and seems to be attempting to match what's going on. So the Fed could be forgiven for anticipating that maybe we've got an inflation issue here. And for that reason, keep its appetite relatively constrained. Importantly, though, we're not going to get a summary of economic projections at this meeting. So if the Fed has any kind of cooling of market expectations that it wants to do, if it's going to walk any of this back or try to talk it down, then we're looking at Fed Chair Powell doing that in the press conference. And we'll see if the markets buy what he says, if that's the way he wants to go. As it happens, we can see markets don't seem to terribly concern themselves with inflation questions going all the way back to May. But we can see already going into mid-July on approach to August, these break-even inflation rates implied in bond markets already start to outright head lower. And so even though going back to May, where things kind of anchored after this start of year decline, incidentally the same one as in stock markets around the onset of tariffs, things anchored, corrected a bit, but already since mid-July, we're heading in the opposite direction. And so the markets don't seem to worry that inflation is going to be a big concern for the Fed and that they'll be able to cut as the markets would like, and perhaps more so than the Fed has allowed for so far. The relationship here, then, is an interesting one. So we're going to get these cuts. That much is clear. And at least for this week and very likely for December. And so the question really becomes, is there anything left from a speculative perspective for the markets to do with that information? We're already, as we can see here, at record highs for the S&P. And the relationship between how this has worked going into this seems to have changed. So again, here's the beginning of the year. Here was the tariff spook right here from mid-February through early April. We can see here as the spook in stocks bottomed out, so too the dovish adjustment in policy expectations bottomed out. But when the rebound happened in stocks and in policy expectations, it seemed to run into a wall right around here, which is the beginning of May, just as stocks got back to where this breakout initially occurred. And everything since then, everywhere stocks have gone, has occurred against a backdrop of policy expectations becoming more dovish, which is probably not terribly surprising. Cheaper money is a good thing as far as stock markets are concerned most of the time. But what's happened since the beginning of October is, again, the relationship seems to have changed. Stocks attempted to top right here. Policy expectations attempted to top right here. But we can see that even as things got more dovish, stocks didn't necessarily rebound. But they are now at the same time that things get less dovish here. And so perhaps we've gotten to a different sort of universe on this, whereby if we don't get anything novel, then we don't necessarily get an impetus for stocks this way or that. And if we do end up with this tightening in a little bit, if the Fed does walk back a little bit these expectations for December rate cuts, it's not impossible, perhaps, that what we could see is a market that ultimately shrugs that off. It may be tentative here yet, though. So we'll see to what extent this relationship evolves now, because it seems to have once again flipped some sort of a switch. in the way that sentiment and policy expectations relate to each other. For the dollar, it's a similarly interesting story here. We can see the dollar continues to recover after retesting this low from July. And although policy expectations have not meaningfully become less dovish on the whole through this anchoring here, we see the dollar, for its part, has stopped falling. Not only that, it's managed to go up here at the same time that we've seen policy expectations seemingly become a little bit less hawkish. So while we have this swing lower in the Fed outlook, the dollar seems to be relatively well anchored and even managing to come up a little. So perhaps it is now ready to go up despite whatever may be happening on rate cuts, at least in the near term. So if all happens as expected, perhaps the dollar actually manages to find its way higher once the event risk is diffused, that is. Now, aside from the Fed, there is, of course, this wallop of major earnings releases. Microsoft, Alphabet, Meta will be the first big batch, and then Apple and Amazon come on Thursday. These are kind of the trillion-dollar market cap club here. And as we discussed earlier, you can see here that tech has generally outperformed so far this earnings season. About 29% of the S&P 500 is reporting. And we can see right here, so far earnings growth for the tech sector has been about 22.3%, whereas for the S&P as a whole, it's been 9.2%. So ostensibly, there isn't the world's greatest concern here that this is going to go the wrong way. We have overwhelming outperformance here. And so with that, there is perhaps, again, a kind of priced for perfection question, whereby we look at this and say, well, if the Fed is all that we know it to be, they're not going to say anything different. They're not going to say anything that's going to spook anyone. They're not going to, in fact, say anything different from what we already know and what is already priced in. If the situation with the U.S.-China kerfuffle is effectively neutered, at least for now, because we've seen these positive headlines ahead of the meeting between Donald Trump and Xi Jinping happening in Korea, again, in a matter of hours here. If that's already something that's diffused an important component of event risk and no longer represents anything other than just validating what the markets have already baked in once it occurs. And then if earnings pass without incident and nothing much happens there, which part of this news coming out is still a source of speculative support for markets? Or are they already fully reflecting everything that there is to fully reflect? And that, of course, presents a buy the rumor, sell the news risk unto itself. That is to say, the markets get everything that they thought they were going to get, no more, no less, and speculative interest then just goes to profit-taking mode because speculation has been made reality and there's nothing else inherently to follow. We'll see, of course, if that's the way this goes or if there is, in fact, at least some level of relief that risk sentiment can still latch onto. As far as exposure goes, I am still looking for this dollar recovery to continue, still short the Aussie, the pound, the euro, the Canadian dollar, looking for the dollar to continue to make headway there. I've added to my short gold position as it continues to inch lower. So I was a seller of calls last week. I've now added into this an outright short on the 1 ounce gold futures, looking for that decline to continue and for the dollar recovery to perhaps flatter it somewhat. Still a little bit short Bitcoin with lots of duration via a put vertical in IBIT. Still long the long end for the bond market, looking for any kind of moderation in near-term Fed rate cut expectations to just push more cuts into the long end of the curve. And the tactical fade on crude oil seems to be working a little bit. It's down 2.4% today, doing it through a USO put vertical, and that seems to be showing some early signs of working. We'll see how that continues to go. That's how I'm positioned going into this event risk. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I usually co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.